Good morning. I declare open this hearing of the Senate Environment and Communications Legislation Committee's inquiry into the Safeguard Mechanism crediting Amendment Bill 2022. I begin by acknowledging the traditional owners on the land on which we meet and pay our respects to the elders past, present and emerging. And on behalf of the committee, I welcome everybody here today. This is a public hearing and a Hansard transcript of the proceedings is being made. The hearing is also being broadcast via the Australian Parliament House website. Before the committee starts taking evidence, I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence to a committee. The committee generally prefers evidence will be given in public, but under Senate resolutions, witnesses have the right to request to be heard in a private session. If a witness objects to answering a question, the witness should state the grounds upon which the objection is taken, and the committee will determine whether it will insist on an answer. Having regard to the ground on which it is claimed, the committee determines to insist on an answer. A witness may request that the answer be given in camera. Such a request may, of course, also be made at any other time. For witnesses appearing via video conference, I ask that you mute your microphone until you have the call. I remind people in the hearing room to ensure that their mobile phones are switched to silent. Noting that the committee is due to report to the Senate on the 6th of March, the committee has set midday the 2nd of March as the deadline for answers to questions on notice, so you might want to hope you don't get any. The Secretariat will endeavour to send you an early transcript of your evidence to assist you in identifying questions taken on notice. However, it is also strongly recommended that you note these down during the session. I would like to now welcome representatives from the Minerals Council of Australia. And I understand that information on parliamentary privilege and the protection of witnesses and evidence has been provided to you. Yes. Excellent. And for the Hansard, would you please state your name and the capacity in which you're appearing here today?
Good morning, Chair. Good morning, Senators. My name is Tanya Constable. I'm the Chief Executive Officer of the Minerals Council of Australia.
Good morning, everyone. My name is Daniel Zavatiero. I'm the General Manager for Climate and Energy at the Minerals Council of Australia.
Fantastic. The committee has resolved to table opening statements rather than read them, given the time constraints. Do you have an opening statement?
Yes, I do, Chair, and it's been tabled.
Fantastic. Thank you very much. We will start with Senator Hughes.
Thank you very much, Chair. Good morning, all. Look, if I can just start off, it was interesting yesterday, coal was referred to as a sunset industry. Do you believe that coal is a sunset industry in Australia, and what sort of contribution does it make to our economy?
Senator, the minerals industry is a demand-driven industry, so we have very strong exports occurring currently. We expect that those exports will remain strong for the next 10 to 20 years, and then as we see emissions reduction occur at a global level, then the share of coal and other energy sources will change.
Mm-hmm. So how will mining companies look to meet the 30% emissions reduction required by this safeguard mechanism?
The mining industry recognises that there is a very big task that is required to reduce emissions, and we've been on that path for a long time. The minerals industry has signed on to net zero by 2050. We haven't been sitting on our hands waiting for policy change. We've been making that change over time, and in 2020, Senator, the Minerals Council of Australia and its members released our first climate action plan, and since that time we have reported on an annual basis, and that's a rolling basis of the activities. So we across the industry, and it has been measured. And as I said, it has been reported. MCA members have around about 39 separate activities that go from fuel switching, so changing out of current energy sources to new energy sources, autonomous operations, renewable energy, battery storage, digitisation, a whole range of issues on site and in our headquarters, so across all of our operations. And that's been ongoing and will continue to be ongoing. It's a hard task, but every member is taking action.
Yeah, so will the industry more broadly be relying on carbon credits to get below the baseline each year?
We can't underestimate the change that is occurring as the safeguard mechanism has been repurposed. So we have looked at what it might mean for the industry. So it's a very steep decline for the minerals industry. It does impact the minerals industry because over 90 of the facilities in the safeguard mechanism are mining facilities. So that's really important that we get the safeguard mechanism right. The ACCUs are one tool, a very important tool that will help the industry to manage through a period until technology becomes available. Let me give you an example of what that looks like. So original equipment manufacturers, OEMs, have said very clearly to us, and it is in the opening statement that I provided, Komatsu and Caterpillar, for example, have given us an indication that the technology to help electrify our mine sites won't be available until the late 2020s into 2030. So as late as 2030, we'll start to see that roll out. And that won't occur straight away. We will see a gradual increase in the electrification of mine sites. So the ACCUs are very, very important to manage through, to make it smoother. It's one of the tools that will help the industry transition as we make our way through to new technologies.
Mm-hmm. So what's likely to happen to the mining industry if they didn't have access to the ACCUs?
I think it would be extremely difficult, Senator, for the mining industry to manage the transition. We must have the various tools that will be required to be able to manage, particularly in the early years, until we see that technology breakthrough occurring.
So would mines close?
Potentially they would close, Senator, because it is a very steep decline. It's softer in the first couple of years, but then it gets more and more difficult as we move through the decade. Mm-hmm. So it is that there is real potential for mine sites to close.
Mm-hmm.
Can I just add that I guess one of the other important tools is the one before this committee, which is there's the crediting, the safeguard mechanism crediting bill and the ability to credit facilities in the safeguard. That's a critical tool as well because it incentivises those who are in the safeguard and who have relatively low cost abatement opportunities within. It incentivises them to deploy those technologies or to take that action, and then potentially sell those to those above the baseline. So it creates the right incentives to sort of lever down the technology emissions reductions that's required. So as Tanya said, there's a suite of tools that are in play, and it's important that all of them are developed appropriately.
So yesterday we heard from a number of groups who didn't believe carbon credits should be part of reducing emissions, that they basically object to the use of carbon credits. What would you say to them when representing the minerals sector and mining sector if there wasn't access to these credits?
Well, this particular sector has been the engine room of the economy. It was the sector that kept things going during COVID, making a huge contribution to being able to have JobSeeker, JobKeeper as two policies that the whole economy needed. So our sectors kept operating during that important period. We're making an incredible contribution right now to royalties and taxes across the economy. In 2021, the royalties were $16.6 billion, company tax 26.5 for a total of $43 billion. Now that sort of contribution to the economy is incredibly important. It creates the wealth, it creates the prosperity for all Australians, not just particular locations, but for all Australians. So it's really important that this industry, which makes up half of the safeguard mechanism, is able to continue to operate, and that's across the minerals industry as a whole.
So how many safeguard mechanism credits do you think will be produced? And is there, I mean, I noticed in your public submission it showed demand exceeding supply when it came to the credits. So what do you think's going to happen there? You know, how many do we need? How many are going to be there?
Well, we weren't able to model how many safeguard mechanism credits would be in play. But as I said earlier, we do think that's vitally important because it puts the incentives in the right place.
Yeah.
But we did have a look at ACCU's demand and supply going forward.
Yeah.
Not the easiest thing to model, but we also cross-checked it with some other public.
It's nice someone did some modelling. You know, that seems to be a dearth of modelling everywhere.
But we did see that we did have concern that there could be a shortage, and a lot depends on how much abatement you get at the sites. We have a lot of sites, as Tanya said, but we don't have all of them, so we don't have visibility across all of the safeguard mechanism facilities. But the supply and demand for ACCUs does depend on how much abatement you get in the safeguard facilities themselves. And as Tanya said, one of the issues there is it's likely to be lumpy. You know, you like all projects, you spend money over a period of years and then you get a change or you get a facility. So whereas the safeguard decline rate is linear, so we need mechanisms that can assist us through that transition. And when I say we, I think all the safeguard facilities are going to need those kind of mechanisms to support the way through.
So what's going to happen to the $75 price if demand exceeds supply?
Well, at the moment, the price is around $35 for ACCUs. I think in recent months there's been an increase in volumes traded. And it's rising. We did call for some kind of cost management mechanism. We did that because when we looked around the world at comparable schemes, we saw that governments tended to want to be able to manage the price. And I think that's because in this particular sector, or in the industrial sector, there is a tension. The idea of a price that incentivises action is important. But if that price gets too high, then the action incentivises potentially closure and risk of carbon leakage. And with closure, of course, there's that high risk that you just stop doing something here and you start doing it somewhere else. So managing that.
But that doesn't count, apparently. You know, if you go offshore, all of a sudden the emissions don't count anymore.
Well,
it's a very interesting approach to a global situation, but apparently that's.
So I think that's exactly right. We've been very focused on carbon leakage in the way we've been thinking through this policy development. And as I said, you know, finding a price and managing the upside price risk is an important thing, not just for our industry, but for the country as a whole. As Tanya said, there's a lot of revenue for governments, there's a lot of jobs, and most of the jobs in our sector, of course, are in the regions. So, you know, managing this transition as smoothly as possible, but getting us onto that pathway to emissions reduction is what we've all committed to. Virtually everyone's committed to net zero by 2050. That's our industry ambition as well. We've done a lot of work, as Tanya said, around the kind of technologies that need to be developed. Some of them are at various stages of development, but as there will be an element of lumpiness to the way they come through.
Yep.
So, Senator, just to go back to that $75, that $75, of course, is a government number. We were all working on the assumption and the modelling that occurred at $24. That was the number that was modelled across Australia that the Minerals Council was certainly working on. The minerals industry is all about managing risk and making sure that the investments, which are long lead investments, that there is a high degree of certainty around that. So that cost containment measure for the minerals industry is essential in trying to manage through that risk. The $75 is much higher than we thought it was going to be. So that we were relieved to see a cost containment measure in there, very relieved about that, but it is a high price and we wouldn't like anyone to think that the $75 plus an escalation that goes out to 2030. So it's not just about $75, there is an escalation that goes with that in terms of the decline rate is going to be a big task for the whole minerals industry. And as I said, it's 93 facilities that relate to our industry. So it's a big part of the safeguard mechanism that relates to the mining industry, and we must get this right in order for these industries to keep going, to be adding to, as I said, the prosperity for all Australians.
So if it does hit $75, what impact does that have on production costs, and is there any impact to our international competitiveness flowing from that?
Well, it certainly will be adding to costs overall for the industry, and will have different impacts on different companies depending on the size of the company, depending on the commodity. And when we were asking for the government to consider this policy carefully, we said three things. We said our industries need to be competitive. We need to make sure that we keep that we don't have the carbon leakage occurring overseas. So what that means, we're export-related industry. We don't want to see closures in Australia because there are plenty of companies that will be able to pick up that particular product overseas. And our competitors are the likes of Vietnam, Indonesia, Russia, Brazil. They're the sorts of competitors that we have that are close by in this region. Now, a very good example of how competition would be affected and the leakage affected is we saw this with China. We saw that China decided not to continue to buy Australian products for a period of time. Did the demand for that stop? The answer to that is no. It just meant that China bought from elsewhere in the world, and while there was an impact on industries as adjustments were made, our particular products found other markets. So we need to be careful that that competition is not affected in the way that this policy is implemented. So it needs to be done to maintain our competitiveness, not to see leakage, and the other aspect is a site-by-site approach for our facilities, because they are all different depending on the commodity, depending on the location, which includes the geography. And some companies will be lucky with geography, some will not be.
Mm-hmm. So we're hearing calls, particularly from the Greens, with regards to passing this legislation that no new coal projects should go ahead, as well as pushing for the industry to be shut down entirely. How many job losses would we see? What would be the impact on the Australian economy without the minerals sector, and particularly coal?
Well, I think it's pointless to see to call for a closure of coal and gas at the moment. We know that coal and gas
Chair, just to be clear, that is not the Greens' position. The Greens' position is no new coal and gas. So I think it's important that the witnesses understand that, and I'm happy to go toe-to-toe with you when I get my turn, but please don't misrepresent us.
Thank you for that clarification, Senator Hanson-Young.
Senator, I was answering Senator Hughes' question that asked about the Greens call. I'm answering that question.
I've clarified now for you what that is.
Okay. So closure of... What would you like to repeat that question?
Well, I mean, what would be the job losses if the coal industry in particular became unsustainable? If there was a $275 penalty, not enough ACCUs to purchase, price at $75 or higher, if coal mines, as you acknowledged before, would be at risk of closure, what would be the impact on the Australian economy? What sort of job losses would we see without this sector?
The coal industry in Queensland and New South Wales is critical for jobs in regions. It sustains whole communities. It's been sustaining whole communities for a long period of time, and it continues to sustain those regional communities. The coal industry was the highest exporter of minerals in 2021. It was actually higher than iron ore. It's been a huge contributor to royalties and also to company taxes over a long period of time. the impact on regions if the coal industry was to close is extremely high. It would mean it would have a detrimental effect on regional communities right now and over the next medium term.
So
Can I just
I've just one more question.
Just to add to that, the impacts are very significant, and not just jobs, right? Well, they are jobs, but also, and this is specifically with no new coal, for example. We know that BlueScope Steel is going to need new coal. That they've recently said that projects in the region for the foreseeable future is going to be needed to sustain steel production in Wollongong. So I think there are supply chain issues as well as just as well as the jobs and regional impacts issues. But I think the other issue again is leakage. If you're only building new coal and new gas if there is a demand for that, and if there is a demand for that and Australia is not doing it, then somewhere else will go somewhere else.
Yeah, it's a furphy. Yeah. So just finally, the MCA's broadly given its support for these reforms. Would you continue to support the reforms if the mining industry cannot have access to ACCUs?
The ACCUs market is an important part of the safeguard, the repurposed safeguard mechanism. It is a must-have in terms of managing through a difficult period, and it shouldn't be underestimated how difficult it is for a number of industries, including the minerals industry. So we've given support on the basis of what we are seeing with policy. We've been working very closely with the government to ensure that they understand what is happening in the industry, what our needs are in the industry, what it might mean for communities, and we've gone through particular regional issues and community issues. And we've put solutions that we see for our industries in front of government. We just haven't put problems, we've put solutions in front of government. So our support is on the basis of what we're seeing is not an easy task. It is a difficult task, and nobody should take this task for granted, and certainly not the impact on our industry. So we need to see all of those tools to be able to see a pathway through for the minerals industry as a whole, because it does have different impacts on the industry, but as a whole, and we haven't landed a position easily within the industry because every facility is different. So when we've been going through the 93 facilities with our members, we've had to consider their individual circumstances, their individual locations, to be able to understand what the impacts might be. So at this stage, the minerals industry as a whole has come together and said, this is going to be really difficult. We do not love every aspect of this repurposed safeguard mechanism, but the support is there while that stays as it is as a whole package.
I think it's unclear to me how the framework would work, because there's a framework that's been presented. There's a lot of talk around that and how and specific details as well. But if you don't have there needs to be mechanisms to allow facilities to comply or avenues for compliance. If you limit ACCUs as one of those and you make other limitations as well, then what happens? I mean, so in answer to your question, if it's not ACCUs, then there needs to be some other mechanism, to allow facilities to comply if they are above their baselines, and that's not really been consulted on yet. So that would be a completely new arrangement that would need to be understood, evaluated, modelled, and consulted on, I would imagine.
All right. Thank you, Chair.
Thank you, Senator Hughes. Can I just ask you, when you started answering questions, you were talking about your members being committed to net zero, which is great. What are you seeing in terms of on-site abatement, and what is it that will incentivise or encourage companies for on-site abatement?
So, Senator, the as I said, the industry as a whole and different members have different approaches depending on their industry and what they can do on site. And some are very remote, some are less remote. It depends on the individual circumstances. So they have been taking actions over a long period of time, and those actions have reduced emissions. We've seen that reported into the NGAS system. And in 2020, when we looked at the NGAS members of the Minerals Council, the abatement potential was seen to be, at least 30% achievable through to the 2030 period. Some of the abatement activities that they undertake, as I said, have varied from individual change-outs of energy types to energy efficiency abatement activities, fugitive emissions reduction, tailings management. There's a whole range of activities that they've undertaken, and they continue to do that. The abatement task, and importantly, they've continued to have discussions with their customers and their investors to make sure that the abatement is occurring down the value chain, and that their investors understand that the abatement that is occurring is real abatement on site across their operations.
Because I think there's a range of views, obviously, on this point. But we did hear yesterday from the investor group on climate change about the expectations of investors. And I think it's trying to understand where that expectation that we're being told is that the investors want to see people making genuine emissions reduction. And on the other side, the notion that companies, facilities would do the cheapest, nastiest thing they can think of to get away with the emission reduction. Now, I would say personally, it's probably there's a little bit over here, there's a little over here, and the majority pumps through the middle. But I'd be keen to understand of your members, where do you think that lies?
I don't think it's there's any cheap and nasty approaches here. This is the sector that is really investing for technology change. So the original equipment manufacturers, the partnerships that are occurring with the likes of Komatsu and Caterpillar to change out our haulage trucks, to electrify our haulage trucks, to electrify mine sites, requires billions and billions of dollars investment. That is occurring right now across major members within the MCA. So that's already certainly occurring. There are other partnerships that are occurring with manufacturers that relate to green steel, partnerships that will help the Pilbara, for instance, future-proof the Pilbara against change that is occurring. So investors absolutely do want to see change. They've said that to me about our industry. They say that to companies all the time. They want to know what those abatement activities look like, how much they might be investing for change, what the pathway looks like through to 2030 and to 2050, because the sign-up is net zero by 2050, but there is a trajectory towards that net zero by 2050. And at what stage we can see that technology change which will make the difference to the industry and therefore allow that greater investment to occur while this change is occurring. So the transition is not easy. It is, but the companies are investing. Did you want to say?
Yeah, I just want to add that also, I mean, safeguard mechanism is just scope one, but of course, for a lot of the facilities and a lot of companies, they tend to report on scope one and scope two. There is a relationship between two. Of course, electrifying processes, so moving from a process from scope one to scope two is one of the, in some areas, has been identified as a way to reduce scope one emissions. That's also, hence we've also, our industry strong supporters of renewable energy deployment into the NEM, for example, because that brings down the emissions intensity of the NEM. So there's a lot of interactions there, and some, I would imagine some are seeing that some facilities and companies would be seeing more opportunities in electrification. And then, so there's some dynamics there that in terms of the moving from Scope 1 to Scope 2, that's an important part of, I think, of the transition that we see in various parts of our sector.
Great, thank you very much. Senator Hanson-Young.
Thank you. Just on the net zero goal of MCA and your member body, just want to clarify, is that inclusive of Scope 3?
Scope 1, Scope 2, and some of the members are looking at what Scope 3 looks like with their customers at the moment. So they're doing work with their customers to understand what the Scope 3 task entails, but it's Scope 1 and Scope 2, Senator.
So you're not taking into consideration the pollution overseas at all?
As I said, the mining industry is responsible for what is occurring in Australia, but they're not leaving it there. They are working with their customers to understand that whole value chain, as I mentioned before. So we haven't got to the stage of including Scope 3 in all of the activities, but it certainly is on our plan to look at Scope 3. So it is something that is built into our forward plan, our climate action plan, to consider what Scope 3 looks like down the track. But we're in early days of what that might mean for members, and we've got to take it in bite-sized chunks. What does it look like for Scope 1? What does it mean for Scope 2? Scope 3 is already underway with some members. Eventually, Scope 3 will be part of the whole approach.
But in terms of keeping temperatures at 1.5 degrees and any attempt to keep it at 2 degrees, we actually have to get net zero across the globe, don't we?
It is a global issue, Senator. I absolutely agree. Net zero by 2050 is a global issue. Every country needs to play its part. Every industry needs to play its part. The mining industry is certainly playing its part, and that's why we support the approach that's being taken with a repurposed safeguard mechanism. It just needs to be done sensibly and as part of a transition that will work for all industries.
You mentioned that 93 facilities are your members within the safeguard facilities captured. That's almost half.
That's correct.
How many of those are coal and gas facilities?
We have no members that are gas, Senator. The coal facilities, 59 are coal, 13 are alumina, bauxite, aluminium, 23 are iron ore, 11 are gold, 7 are copper nickel, 3 are lead zinc. We also have rail and power generation in additional numbers that are MCA members.
But the bulk of your 93 then are coal miners?
A large proportion of them are coal, but importantly, the safeguard mechanism and what is included in the safeguard mechanism is really important for all of our members. And when we're having conversations with some of our members that have aluminium facilities, for instance, there is a huge concern about how these facilities will continue to operate as we move through this period over the next 7 years. So it's not a one-size-fits-all that is needed within this facility. We need to take account of the different operations.
Do you see any new coal projects going ahead over the next decade?
Senator, any of the coal projects that are coming forward will need to undergo assessment and approval processes in states and at a Commonwealth level, as long as they're undertaking a best practice as it relates to international benchmarks, then I don't see any reason why a coal project or a gas project is any different from other projects, but they will need to meet stringent requirements.
I understand that's your position, but it's not actually my question. My question is, do you see any new projects coming online in this next decade?
We can only go by what we're seeing on the government's list of projects. They hold a project of all minerals projects across Australia that are at various levels, at pre-feasibility, at feasibility, at development stage, and depending on what we see as demand, a company will make an assessment on whether they see whether that project is going to be economically, socially and environmentally viable, and if they, as I said, they meet all of the requirements, then they will take that final investment decision. I don't have a line of sight on new projects per se. That comes down to individual company decisions.
Will the safeguard mechanism stop any of these new projects going ahead? And you're talking about them needing approval. I want to get to the crux of the issue here. Does this safeguard mechanism provide any impediment?
The safeguard mechanism is a way to manage emissions reduction, and the abatement that occurs from that we're going to see needs to be, of course, real abatement, and every facility will need to reduce its emissions. So as the current safeguard mechanism, as it's proposed, any new facilities coming in will need to meet international benchmarks, and that will mean that those facilities will need to continue to reduce emissions if they are indeed developed.
But the safeguard mechanism itself doesn't preclude any new projects coming online.
The safeguard mechanism doesn't preclude new projects coming online, and as I understand the safeguard mechanism, there is a reserve for various types of projects. It doesn't specify what types of project, but there is a reserve that allows new projects, as long as they meet international benchmarks, to enter the safeguard mechanism if they're above the 100,000 tonnes, because that's the limit that is set at the moment.
Yes. To that point, Adani's Carmichael coal mine is expected to lift its capacity from 3 megatonnes of coal to 27 megatonnes a year. On that type of increase, do you expect them to become a new entrant into the safeguard mechanism?
If the emissions are above 100,000 tonnes, they would indeed become a facility within the safeguard mechanism, and those facilities change depending on the production levels, of course. So yes, that would likely occur if they're to increase their production output.
Yeah, and I mean, you're the expert in this, I'm not. I mean, from 3 to 27 seems like a significant increase.
Well, whether those numbers are in fact correct, they're certainly looking to increase their production levels, their production output. What that looks like in terms of where they actually get to, I think that's a question that would need to be asked of Adani specifically.
Can I just add that
Yes, please.
There's also other moving pieces in the safeguard. There'll be other facilities that are coming to the end of life, so we haven't seen the balance of all that, how that works. And I think the other point...
Do you mean in terms of the carbon budget per se?
No, just in terms of, there's some other mines that are coming to the end of their life, and so then you've got a new mine like Adani, for example. So there's a mix of things coming in and things going out that needs to be considered. But your other question about the impacts, what will be the impacts? Of course, the whole scheme isn't completely bedded down. Like the ET support aspects, I think, are still under development. So understanding all the impacts will really depend on what the final outcome is on how the scheme operates as a package.
I want to go back to this question I was asking about your net zero objective net zero by 2050. keeping in mind it doesn't include Scope 3, which I think is a problem. However, I'm interested to know how compatible that goal is, net zero by 2050, which is only 27 years away now. How compatible that is with new coal and gas projects.
Senator, projects come into development, they are developed and then they close. As Mr Zavatero just mentioned, we will see projects come in and out, and we plan for closures. So we're talking about net zero by 2050. We're talking about a reduction in emissions being required for any projects. And we are talking about technologies that need to sit alongside various types of projects. Every technology, and I mentioned electrification, one type of technology that I think is very important for the coal industry, I don't think has received enough support, because if it had have been supported, it would have been able to be used for a whole range of industrial processes, is carbon capture and storage. Now, the argument's been made many times by others.
Unicorn.
Well, I think when I listened to evidence yesterday where a lot of focus was spent on cement and steel, in order to be able to support those hard-to-abate sectors, we need technologies like carbon capture and storage being rolled out in the gas industry, in the coal industry. Those industrial processes are really important to support other industries like cement and steel. So carbon capture and storage, everyone should be supporting as part of a broad...
What would be really good is to capture all that leaking methane that's coming out all over the place. We've got a huge discrepancy between what your members are reporting and what is actually being let into the atmosphere. Do you dispute that?
Yeah. Well, there's work to be done on that. You're referring to the methane report coming out last week from the IEA. So our members report on methane. We report. I think we may be one of the only countries in the world that reports on both open cut and underground. All of our underground is reported based on measurement. And then with the open cut, it is more difficult, but we're seeing more and more mines reporting open cut on methods 2 and 3. That report was quite interesting because it also included, it did use what they called auxiliary data, so data from studies and whatnot that included some of the satellite information, and we think that that's interesting. But and of course, the industry is doing more work to understand that. But it's not as simple as just using that. It's relatively new data and information that's coming into the program. But certainly, our members are reporting appropriately with what we know at the moment. But I think the other thing just to mention is that that report included sort of 8 key coal mining regions, countries, and split them in terms of what the average methane per tonne of coal was coming out from each of those. And Australia's was second lowest, virtually the lowest on thermal coal, and the lowest on coking coal, compared to other countries being China, India, Indonesia, Russia, South Africa, and the United States. And the difference between the average methane coming out of Australia's coal compared to others was, others were sort of 37% higher, up to 200% higher than Australia's on average. And that was even including this, what we call what was mentioned as auxiliary data. So I think on methane, that report was quite interesting. It had a lot of interesting information on various...
But you must be worried about the discrepancy overall of the reports of methane leaking. And I accept it's not just coal. There's a lot of a lot of this has to do with the gas industry. Yeah. But reporting is one thing. Reporting correctly is what we'd like to see.
Yeah. Well. Yeah, go on, Tanya.
So, the studies are showing that there is a discrepancy. We're trying to understand how real this discrepancy is. So, again, the industry is trying to understand through our own work what that might look like. So it's not
Have you asked for a meeting with the government about this?
We haven't. We meet with the government on a whole range of things. We talk about various issues. We haven't specifically talked about methane as such, this particular area at the moment. But as Mr. Zavatero did say, methane is tracked through the mechanism as we, in Australia currently. We will eventually understand what the overall impacts might be, but at the moment we do understand that there are discrepancies.
Mm-hmm. I want to go back to this question I asked about the consistency between net zero and new coal and gas facilities, new coal mines, new gas wells. You're arguing around the issues of technology. Do you reject the International Energy Agency's assessment that if we are to keep temperatures at 1.5 degrees globally, we can't allow the expansion of fossil fuels?
Certainly the IEA have talked about a very important issue that relates to getting to 1.5 degrees, and that. But what they have said in their reporting is that every technology is going to be required to be able to get to net zero by 2050, and they make sure that they are reporting on the types of technologies that go with those particular energy sources, and as I said, carbon capture and storage. They also say that nuclear energy is a really important energy source to be able to meet our net zero by 2050 outcomes. So we're talking about 2050, Senator.
The Minerals Council's advocating for Australia to go nuclear now, are you?
We always have, Senator, because we see that as an important pathway
How does that go down with when in your meetings with the government?
The government doesn't support nuclear energy. Any country that is currently meeting their commitments have nuclear energy in their arsenal. They must. Nuclear energy is a very important net zero energy source and must be part of the broad energy sources used.
What are your members who are, in those mining sectors that are, lithium, those involved in the transition to renewable energy, think about that position?
Oh, the lithium producers, the rare earth producers, the critical mineral producers are all supporting renewable energy and electrification. They are always concerned about lowering energy costs. Part of the overall approach to lowering energy costs.
You may have misunderstood my question. What do those members of yours think about your push for nuclear?
Well, Every industry, a part of our industry, is supporting lower energy costs. Diversification is important for energy costs and to lower energy costs. So in terms of taking a particular position around other energy sources, they're focused on what it might mean for them in their own electricity costs. So they want to see lower energy costs, and they're looking at renewables as their pathway. And we support, as you know, we are big supporters of renewable energy. We just support the diversification of energy sources, which includes all energy sources.
The diversification, except that 59 of the 93 facilities that you represent under the safeguard are coal. It's not particularly diverse.
I think it's very diverse in terms of what we've got there in our overall energy, the overall energy mix, the minerals mix within the safeguard mechanism. It just highlights the importance of the safeguard mechanism and getting the policy right for our whole industry, Senator, because it's not just one sector, it's all of our sectors.
Can I just
I've just got one final question because and the chair wants me to hand over. I'm interested in your members' views that around 23% of the abatement task under this safeguard mechanism comes from new coal and gas projects, meaning a big chunk of what is going to be available in the reserve is going to be taken up by new coal and gas entrants. How do your members feel about that?
Senator, until a project takes a final investment decision, it is still on the drawing board. The reserve is there for a whole range of new projects. We hope to see a lot of minerals projects coming forward. And if I just look at some of the projects that sit in Western Australia and in Queensland, the projects that we're likely to see very, very quickly relate to gold, relate to iron ore, relate to bauxite, relate to rare earths and critical minerals. So there's a whole range of projects that may come forward well before we see any coal and gas. The reserve is not there for a specific type of project, for a particular commodity. It's there as a reserve for new projects if they're above 100,000 tonnes.
I suspect Woodside wants a big chunk of it. Thanks, Chair.
Thank you. Senator Pocock.
Thank you, Chair. Thank you for your time this morning. I'm just keen to follow up on Senator Hughes' question about the cost containment mechanism. You talked about the $24 cap that you backed in your submission to the consultation paper. Given that we're proposing the $75 cap, do your members expect that there'll be sufficient demand for ACCUs to hit that cap?
Well, we would hope that there is sufficient ACCUs there in terms of demand for those ACCUs. Well, it's a market that we're seeing. We're also already seeing an increase in the price of ACCUs with the introduction, with the suggestion of this policy change. We wanted to see a cap because we need to manage the risk, and we anticipated that we would see an increase in prices as it related to ACCUs. That is the way that markets do
Thank
work.
you, Ms. Constable. Do you expect to hit the cap?
Well, the government has said that they expect us to see the price. The cost containment was to manage upside price risk, so we would hope that it doesn't get there.
Does the
this
MCA
stage.
expect to hit that cap?
We didn't model the price. We did look at supply and demand balances, and we saw shortages in supply. So we saw upside price pressure and risk, and hence our
So
call.
if there's a shortage of supply, you're saying that you do expect to hit the cap because
Well,
if there's more supply than
you expect
less- more
upside
demand.
price. We don't know where that price would be.
Okay. So
We saw
going
the
into the
risk.
safeguard mechanism, you don't have a position on whether we'll hit the cap or not. You haven't modelled what your members and what you think the facilities would need to be able to offset emissions.
No, we didn't model the price specifically. We did have a look at technology, technology changes when they were likely to come in. We did some work on that, and we saw that it's sort of back-ended towards the decade. So we saw that there was high potential for ACCUs demand in order to meet compliance. But we didn't model a price specifically, and so when the $75 came out, that was what we saw, and we've been trying to understand what that means.
Okay. So if you're saying that you don't expect it to hit the cap, why did you ask or have you pushed for a cap?
No, we said there was a risk. So and one of the ways to manage that risk was to have a price management mechanism, which is what we called for, which is what we've seen in other schemes around the world. So that if it does spike, and remember, we're not the only demand side. There's investors, speculators, people can take a position. The facilities in the safeguard would be demand for compliance, but we wouldn't be the only demand side of the market. So given those factors, we saw that there was a risk that needed to be managed.
Okay. Thank you. So just to sort of, so I just want to clear up my understanding here. We've heard about the extra cost that this is going to impose on facilities, but you don't have a position on whether or not the ACCU price will actually get to $75.
Well, it may. I mean, if we knew what the price was going to be, we don't know what the price of iron ore and coal, we don't know what prices will be in future of anything. So what we would...
But this is not about that. This is about the price of carbon.
Yeah, but it's the same. It's basically, it's determined by supply and demand. So we tried to do that work and as I said, we saw that there is an excess demand potential position. And so that creates upside price risk. And so we called for a price management mechanism so that the government had the ability, because you've got the industrial sector of the economy exposed to that. So, and as we said in our submission, other schemes around the world have done similar things.
Okay.
So
It
the
seems
big
like you're
difference
saying
between-
everything, you're dancing around this and saying everything except, yes, we want a cap because we expect that there'll be huge demand for ACCUs and it's going to hit the cap. So we want that certainty of $75.
Well, that's possible, but there might be technologies that come through in other sectors.
In the next few years?
We don't know. We don't have a crystal ball clearly when it comes to markets and prices.
I understand. You don't want to...
I think, Senator, too, it's very important.
Senator Pocock, I mean, it's really, you're minimising your members' risk by a cap of $75. The risk to the taxpayer having to pay over and above that with a shortage of supply is still very real. If it goes above $75.
It's potential.
Yeah.
Yeah. So your risk is
established
managed,
that.
not the taxpayer's risk.
Yeah. Okay. Well, thank you. Just
we
moving.
know who really pulls the strings in this country, don't we?
Moving on to methane, and we've had a bit of a discussion here about the discrepancy between, gets reported and what these new studies are saying. There's that 60% gap. I'm just wondering for your members whether you'd be open to more stringent reporting and potentially on-site testing at things like open-cut coal mines.
That occurs already by the industry
On-site at
Senator.
open-cut.
So in terms of the government doing on-site testing, is that what you're talking about here?
No, facilities, my understanding is that underground coal mines have to monitor for obvious safety reasons, but open cut, it's, as you said, it's just all modelled. I'm wondering if there would be an appetite from industry, given the added scrutiny that we're going to have around methane and the commitment to net zero, whether companies that you represent would look at on-site monitoring, better reporting, to try and get a bit more certainty around the 60% discrepancy that we're seeing.
I think this is an area where government and industry works by definition together to make sure they're using the best science and technology and have accuracy that reflects what's possible to achieve. I mean, my understanding on undergrounds is that undergrounds are measured, or method 4, which is quite sophisticated. Open cuts is more difficult, but many mines have moved from method 1 onto method 2, and so it is an evolving space in that way. I think the measuring issues in open cuts are always going to be. Well, I'm not a technical expert on this, but I think there are complexities there, and I think it's an area that industry and government has to just continue to work together over time.
Okay, so open to it.
Senator, could I just go back to Senator Hughes' comment that she made, and we talked about a whole range of, we're managing our risk, and there's a whole range of groups buying ACCUs. There is also government in that list too, that potentially could be purchasing low-cost ACCUs and having those sit there. So that's not, so anything below that $75 the government may have in reserve if they're buying ACCUs themselves. So potentially that is sitting there as a taxpayer reserve as well. So there's a whole range of purchases of ACCUs, and there's not just, the government is already looking at what their risk is, just as we are looking at what our risk is.
So, and I think the key thing to add regarding the 75 and potentially escalating, which we think de-escalator should be something subject to competitiveness reviews rather than just automatically escalating. The key is to work out, well, what is a price that incentivises those technologies? And remember, in the way the safeguard is designed with declining baselines, it's potentially an increasing, unless you're bringing those emissions down, the emissions that will incur the cost is rising in volume. So it is a transition that is really putting a strong incentive there for everyone to develop the technologies. This is not a cost people are going to want to pay. They're going to want to try and avoid it with technology development and deployment to bring those site emissions down. But if you let that price go uncapped and extremely high, then you're drifting into high risk of carbon leakage, of just closure and leakage of activity just going somewhere else. So I think that's the challenge in these changes, and in terms of trying to get the industrial sector in the safeguard mechanism to come through this transition.
Do you have an idea of who else could supply the sort of volumes of LNG that we export in terms of leakage and coal?
We won't speak about the gas industry, but there are competitors around the region. Qatar is one that comes to mind straight away. Russian gas is sitting there and will eventually come back on. There's a range of producers. On coal, we have Indonesia right beside us. There is Africa, there is Russia, there's a whole range. There's the United States, Canada, a whole range of producers that are our competitors.
Thank you. Just back to methane. Given we've now signed the Global Methane Pledge and the Global Methane Assessment found that coal miners have ready-to-go technologies that are some of the cheapest ways to mitigate methane emissions. What sort of role do you see coal mining having in reducing methane emissions in Australia?
Well, that's one of the technology, like ventilated air methane is one of the technologies listed as something that needs to continue to be developed. Open cut mining is a bit more complex, but there are technologies that in play there. But absolutely, I mean, these are the sort of things that we have to look at. And as I said, I was quite pleased to see in that IEA report that average methane from Australian mines is either the lowest or amongst the very lowest in the world.
These studies are done. The coal industry has a research arm, ACARP, that does these sorts of studies. Ventilated air methane is one of the major areas. Anglo American is leading the charge within Australia. There are high safety risks associated with underground mining and making sure that you get you're considering all safety issues. So that's a gradual change, but partnerships with the United States and others with Australia, we will see a breakthrough of technology, hopefully in the not too distant future.
Thank you. Yesterday, a number of witnesses talked about the need for more transparency in the safeguard mechanism. I'm just interested in whether you think your members would embrace transparency measures like corporate transition plans, reporting on the holding of ACCUs and SMCs, reporting when you surrender them, and potentially the provenance of ACCUs, where facilities are buying ACCUs from.
Corporate transition plans occur right now with the mining industry, so that's already in play. We're starting to see that across major companies as they're reporting. And we've called for greater transparency across the mechanism as a whole in terms of the individual issues within that you've just mentioned, Senator. We haven't specifically addressed those things with companies, and we'd need to understand what that looks like. But generally, the companies as a whole do embrace transparency and are participating in various transparency measures. And to give you an indication of the good work the minerals industry is doing right now, we're signed on towards sustainable mining, which is a partnership with Canada that looks at the on-site performance across a whole range of factors. And, you know, transparency is one of those areas across various units of measurement. And the Climate Action Plan has transparency on reporting as one of its key focus areas. So in terms of transparency, as you will have seen from our previous submissions, transparency was one of the issues that we raised as being important for the mechanism for a whole range of reasons.
And you mentioned
question,
on-site abatement, and then earlier you mentioned electrification of, you know, trucks and fleet, all that work that's underway. And I imagine some of that will be battery electric, and then some of it will potentially be hydrogen for your bigger equipment. I'm just interested in your view, given there's the need to transition that equipment that currently runs on diesel, the fact that fossil fuel companies are getting a little bit over $4 billion in diesel fuel rebates, whether you see that as a disincentive to swap out diesel equipment for electric and potentially hydrogen, given there's such a huge sort of tax incentive to stay with diesel?
The fuel tax credit is there.
Understand why it's there. I'm just interested if you think it's a disincentive to transitioning from a diesel super digger to potentially an electric or hydrogen super digger.
It's not a disincentive at all. We're already seeing the change out and hybrid models already occurring. The less diesel, the better, because there is emissions associated with the use of diesel. So that, and our reports do talk about that as one of the abatement technologies. And so it's not a disincentive at all. That particular road user charge and the rebates that the industry receive, which are not unique to any of our industries, they relate to all regional industries, not least of all tourism, marine operators, fishers, foresters, there's a range of industries. That's necessary to be able to continue. It's just a normal business input. We don't use roads, so we shouldn't be paying a road user charge, which is what a fuel tax is all about.
It's general revenue, though. It's not for roads. But
no, it's
really
for roads.
do need to move on, Senator Pocock.
It's for roads.
I don't think that's the tax officer's view. But I'm just wondering if you would be happy with that $4 billion or so actually going to incentives for electrification. You could still get it, but it would be incentivising electrification rather than subsidising fossil fuel use.
Well, as an ex-Treasury official that understands revenue and tax, it certainly is a business input and is not on the tax expenditure report. So it is a road user tax. That's what it was there for, and it's been there for a long period of time related to all of these industries. Billions of dollars is being spent by the industry to move in a different direction, to become as emission, to reduce our emissions as much as possible. So it's not a matter of movement of a diesel fuel rebate to other parts of the economy. It's necessary as a business input at the moment. It won't always be necessary because we will move our technology to electrification, but that's not going to happen overnight. It's not going to happen in the next couple of years. It's going to happen in the decade of the 2030s. So that is required until we make that transition. But at the moment, it's a business input as it is for any other industry across regions.
Thank you. On tax, I really appreciate your experience on that. So I was just keen to follow up on an earlier statement you made. You said that coal has been contributing to tax in Australia. So I was just interested in your reflections on, this is ATO data, 2014 to 2022, tax paid as a percentage of income. Glencore 1.4%, Anglo American 3.4%, Peabody 0%, Yancoal 0%, Whitehaven 0.1%, Idemitsu 4.2%.
So as companies make investments and or have losses, so it's not. We talk about a boom year in 2022 that industries are making good profits. That has not been the case with the coal industry over a long period of time. There have been losses, particularly in the period that you mentioned, 2013 through to about 2018. There were significant losses or significant investments that related to expansions of mine or maintenance of mines. So that generally applies across the economy in terms of what companies are able to claim in terms of asset.
I understand that. I'm just
assets.
interested why you said it had been a big contributor to tax, if those are the sorts of tax rates we're seeing over the last 8 years.
We have been, I gave you figures for 2022, so coal was the biggest contributor to tax, both the royalties and taxation across the economy. It was the largest exporter with huge contribution in terms of taxes and royalties that go to services across the economy. The teachers, the nurses, the police, etc. Those services are partly reflective of what the mining industry and the coal industry is contributing. So the industry is making a huge contribution. Yes, there were losses. Yes, there were lower taxes during that period, but they're very high now because what it does represent is where the industry is at, the profitability of the industry. The more profitable an industry is, the higher taxes and revenue that is gained, and that's good for all Australians.
Thank you. Thanks, Chair.
Thank you. Thank you very much for your time today.
I've just got one follow-up question.
Sure. Anyone who is scheduled to appear before us, I'd just like to say we are already running well over half an hour over time.
Apologies, Chair.
No, just to keep people alert.
It's important.
Not having a go.
There's been a lot of discussion about the cap and the $75, and your, as Senator Hughes points out, allows you to manage your members' risk. Did you ask for the cap to be put in place? Was that something that you spoke to the government about?
We certainly needed to see a cost containment measure to manage risk. It was one of the issues that we raised as an important feature for the safeguard mechanism. It was reflective of all of the research we had done at an international level. We looked across the world. We looked at the UK, Europe, Canada, to name a couple that sort of sit there. And these issues have been in our submissions.
And was the cap in the original design, or is this something that's come out of negotiations?
There was no negotiations. This was in our submission. The way the government in the current consultation paper has put it in was not the way we envisaged it potentially working. But we did raise, as we said in our submission, we raised this as a risk.
Mm-hmm. Okay, thank you. Thanks, Chair.
Thank you. I'd now like to welcome the representatives from the National Farmers Federation, the Australian Forest Products Association and Green Collar.
Thank you, Senator.
Thank you so much.
Sorry for the marriage.
Thank you very much for your patience and your attendance. I understand that information on parliamentary privilege and the protection of witnesses and evidence has been provided to you.
Yes.
Great. And for the Hansard record, can we move along the table and get your name and the capacity in which you're appearing? We start with Mr. Schultz.
James Schultz, CEO of Green Collar.
Jennifer Sinclair, Chief Scientist at Green Collar.
Tim Lester, Senior Policy Manager at AFPA, the Australian Forest Products Association.
Victor Violante, Deputy CEO at AFPA.
Warwick Gregg, General Manager, Natural Resource Management, National Farmers Federation.
Fantastic, thank you very much. We might start... we have an opening statement that's been tabled for the Australian Forest Products Association.
Yes.
We have all three. Excellent. Thank you very much for tabling those. We do appreciate it. The committee has made a decision to have them tabled rather than delivered. We'll go to Senator Payman first.
Thank you, Chair. Good morning, everyone. I'd like to ask the National Farmers Federation, do you support the provisions in the carbon crediting rules requiring the Agriculture Minister to consider impacts on agricultural production from certain offsets projects?
Yes.
Right, that was nice and easy. The Australian Forest Products Association, does the association consider their plantation projects pose a risk to agricultural land use?
Victor Violante, Deputy CEO of AFPA. Look, we don't think they do. We've worked very closely with the National Farmers Federation and past and current governments on getting the settings right for the participation of plantation projects in the Emissions Reduction Fund. There are a number of protections built into the plantation method and the carbon credit rules around limits to where new plantations can occur. So, for example, they must be near timber processing facilities so that they're planted for the purpose of being turned into timber and paper products. There is also power for the Agriculture Minister to veto any projects that the Minister deems pose a risks to prime ag land, for example, so we don't see expansion of plantations in the wrong areas. And also the industry is very mindful of those risks and works very closely with local farm groups and other landholders on ensuring that plantations are going in the right place.
Thank you. And since yesterday, we've been hearing quite a bit about what each organisation's understanding is or support is behind the CHUB review. Now, I want to pose that question to all the organisations here this morning. Do you support the implementation of the CHUB review?
I'll go first. So, Warwick Rag, National Farmers Federation. We said from the outset when the CHUB review was implemented that we wanted to understand if there were issues that needed to be resolved, and if there was, then they should be resolved. Professor Chubb has raised a couple of issues that need attention. They should be progressed. We would seek to ensure certainty. And so if the independent umpire, if you like, that has been the CHUB review, has said there needs to be minor adjustments, he's also said that one particular methodology ought to be discontinued. We're not opposed to that. And so we're also supportive of the government's recommendations that the CHUB review has put forward.
Victor Violante, AFPA, I would echo Warwick's comments. I think AFPA is also broadly supportive of the CHUB review recommendations and the government's response. Particularly keen to work with the government around the development of new methods as well under the ERF, which was one of the recommendations.
So Green Collar would certainly concur with the other panellists. We fully support that the recommendations and particularly the recommended changes to the methodology development pathway. We do think that's a very important feature of getting the market really working as effectively as it can. And we're very keen to see those recommendations implemented in as fullest way as possible.
Thank you. And back to AFPA, what does AFPA say about the concerns raised with the plantations method?
Look, we don't agree with all the concerns that have been raised, and I would say that by and large there is support for the participation of new plantation projects in the Emissions Reduction Fund. There were some concerns raised about some of the more recent changes, particularly Schedule 3 and 4 of the new plantation method, and we think that they are adequately addressed by the existing scheme that will ensure that new plantation projects under those method are providing the additionality that they're required to provide and addressing a real concern that we're seeing, which is that existing plantations are being reverted to other land uses because they're not commercially viable. And that is not only reducing our timber supply for the future, but also contributing to our deforestation records, because every time we lose a plantation, that counts as deforestation. And so it is a trend that we really need to stop now, and Schedule 3 of the plantation method will help do that.
Thank you very much. That's all from me, Chair.
Thank you. Senator Hanson-Young.
Thank you. I'd like to go to Mr Schultz, if that's okay. I'm interested in your opening statement. You've talked about welcoming scrutiny of the methods and the governance. You say you demand it. You've worked openly, publicly and constructively through the numerous reviews of the human-induced regeneration, avoided deforestation and avoided clearing methods. I'm interested as to whether you're prepared to release some of the information and data that you have, because it was put to us yesterday that, of course, under the existing ACCU system, the credits that are being traded from human-induced regeneration in particular are of higher risk in terms of, low integrity.
Yeah.
I'd like to know a response from you on that accusation, and to see whether we can get some clarity over the information that is available.
Yeah, so I think there's a few parts to that question, so answer in parts if I may. I might actually start with the last part there, which is the access to information.
Mm-hmm.
And so we're certainly in favour of as much transparency as we could possibly bring.
Mm-hmm.
We do think transparency in many instances is the solution to many of the concerns. Having said that, access to farm data is one of the most contested subjects in the agricultural and land sector. And we at Green Collar adhere to the NFF's code of practice on Australian farm data, and we also have contractual obligations to our landholders. So we aren't actually able contractually to simply hand over carbon estimation area data. That is actually a decision that would need to be taken on an individual basis by the actual landholders themselves, and that's the arrangements we have at Green Collar. We would certainly be happy to have those conversations with landholders, and we have certainly shared data in the past. We have done it with CSIRO, with universities, other government institutions, and of course all of this data gets shared on a regular basis with independent auditors that look at this on a regular basis. But it's not quite as simple as we can just hand over the data, so it's not necessarily ours to hand over in this context.
Well, we'll come back to that, because we're a parliamentary committee and we can, ask for things to be tabled under parliamentary privilege. But we'll come back to that, as I suspect that if it's only those that are willing to hand their data over, it'll be quite lumpy in terms of the picture that we get. I mean, we've been told as a committee that the vast majority of these HIR programs are not real.
Look, so maybe I'll come to the second part of the question, which is the question of the efficacy of the method. And so we certainly have shared many of the concerns, and our concerns really start in the same place as some of the other witnesses to the panel. We have not recently raised these concerns. We've raised them over a course of a number of years because we do see risks. Risks don't necessarily mean that they have materialised, but they absolutely mean that we should be managing for them. And we do think there are things that we can do. I think there is scope within the recommendations of the Chubb review to address some of those concerns. We think absolutely one of the most important things we should be doing is more measurement. That's something that we do as common practice at Green Collar, but it's not a mandatory requirement. And measurement does go a long way to addressing many of the concerns, because a lot of the debate hinges on the effectiveness of the modelling. You know, is the model telling us what's happening on the ground is real? And so we can resolve that by measurement, and it's a relatively easy fix. It doesn't resolve everything, but it would go a long way. So we absolutely, as I said, I think our concerns start in the same place. We don't necessarily agree with all of the the consequence of those concerns, but we absolutely agree that we should be managing those risks, and there are ways that we can manage them.
So what percentage of your the credits that you produce or that you manage come from these human-induced regeneration methods?
Right. I have to go on notice to give you a precise answer, but I could estimate it's probably about 40%.
About 40%. Yeah. And out of that 40%, what is your estimation for those that are not meeting the expectations of being genuine abatement?
Maybe to go back to my earlier answer there, this is a question of risk. I think the question of is it or is it not is really a question of attribution. So what is the impact of the land use changes that you're making? And so from our perspective, as I said, our concerns start in the same place as the other critics. We don't have a view as to whether or not that translates to an X percent. What we do say is there's a risk and that we should try and manage that risk more effectively. And I don't think it's necessarily...
Do you think the value of the credits in these HIR programs are real? And the value that currently exists, are they worth that?
Well, I'd say that if we step back a little bit and remember what we're actually trying to do here, we're actually trying to solve a land management issue and a significant land degradation issue. And the landscapes in which these projects are happening are some of the most impacted agricultural landscapes in the country. And they have been for well over 100 plus years. And we have serious land degradation problems there. They're not a consequence of things just happening. They are a consequence
just
of
management. Just to be clear, Mr. Schultz, that may be your objective.
Yeah.
I don't think that's Woodside's objective.
Sure.
When Woodside comes in and purchases the credits from the farm credits that you manage, their objective is to be able to keep exporting fossil fuels and keep expanding fossil fuels. They don't care about the land on the farms of which you're engaged with.
I absolutely agree with you. I do think they are different issues, though, and I think conflating the question of the impact of a project with the use of a project is problematic. I think that's a scheme design issue, and we absolutely have to have a safeguard mechanism that provides a disincentive to expansion of oil and gas and drives down emissions as rapidly as we possibly can. I would not dispute that in any way. I do think we also absolutely need to solve the other part of the problem, though, which is the land sector problem, which is 700,000 hectares of clearing annually in this country, thereabouts, depending on your choice of data set. It's a very significant problem. We can't just solve the oil and gas problem, we have to solve the land sector problem. And of course, solving the land sector problem needs to find ways to provide incentives to solve it. And we've tried to solve it with legislation many, many times over the years, and it's largely been ineffective. We know it's been ineffective because we have as high land clearing rates today as we've had at any point in time. And so that's a very important lesson for us to learn. And this is really, genuinely, a really, really important opportunity to get the incentives right. I think that it needs to work better, and we need to continue to improve. We know a lot more now than we knew 10 years ago, but it is our best and possibly our only chance, at least in our generation, to solve this problem properly. And so we do need to find the way to get that resource in there, and this is a very significant source of demand, but it needs to be within a scheme that absolutely is driving down emissions, genuinely driving down emissions, and not providing incentives to expand the oil and gas industry.
So coming back to the carbon estimation data, it's been put to us that this method is highly dubious. The only way we will really know is whether we can have full transparency into those projects. You're saying you do have this information, but contractually with the landholders that you engage with, that information is kept confidential.
Yeah, maybe I can elaborate on that a little bit if it is helpful. The projects that we run, I mean, I think sometimes the terminology gets thrown around a little bit, which is we're an aggregator. The way we actually work is we're in partnerships with farms. Most of them are family-owned farms, by the way. So we're in partnerships with them. And in those partnerships, we do have obligations to one another. We have fiduciary responsibilities. We have moral obligations as well. And people are generally very willing to share data in a general context. And of course, trust is a big part of this. That's why we've successfully shared it in the past. I think that if we were to go and ask people if they'd be willing to share data, there is an opportunity to do so. I think the current context is that people are genuinely concerned that if we were to sort of release all that data into the public domain right now, they'd be on the front page of the paper and it would be used for purposes other than improving the methodology. So it is a more complex issue than is presented. And as I said, land use data in particular and clearing data is one of the most contested.
Who goes and checks? Who's responsible for going and checking that one of these projects that you help manage the trading of the credits? Who goes to make sure that what's going on is actually real?
So thank you for the question. We have field teams ourselves on the ground basically every day of the year except Christmas, out measuring and surveying and doing repeat surveys, because we're very interested also in what's happening over time, bearing in mind that these are 25-year projects. And what we want to know is how we are actually tracking against the model. And that's why we measure. So we survey basically on a continuous basis with some disruption through COVID because we couldn't actually get out and on ground. And then when we submit reports, they get independently audited. And so the auditors come to sites. And at least in our context, our company, they make us repeat those measurements. So we go out to site, we re-establish plots. They verify that we've made the measurements in the right place, that we have got a sort of repeatable process in how we survey those sorts of things. And those auditors, we have audits from, I mean, we would, because we have a number of projects, we would be under audit just about every day of the year in some context. And so we use multiple firms from sort of PwC, Decnos Veritas, to smaller ones you might not have heard of. The rules at the moment require us to select auditors from a listed panel a sort of a panel of auditors that have been qualified, and then the regulator will also periodically trigger a different audit, which is a portfolio level audit where they choose the auditors and they send them out to site. So.
And the auditors also do, not only do they check the verification of the measurements, and those measurements that we're taking, particularly for HR, are not a requirement of the method. It's something that we implemented as extra monitoring at the time of undertaking these, because in our discussions, with the regulator at the time, we felt that there was a risk of having a model-only method and not having any, on-ground validation. So in addition to the auditors checking all of our monitoring data, they do check what we call the stratification, so the project design, so that the areas that are designed as CEA or as forest or as other types of exclusion areas, no forest potential is another area, do actually meet the requirements of the method.
You said around, and you're going to check this for me, 40% of your credits come from HIRs. What market share would Green Collar hold in terms of that methodology in Australia, those credits?
It's a bit difficult for us to tell because it's more opaque than you might imagine because of different business models. So you can see the projects that we operate because we tend to be the registered proponent. Other providers aren't necessarily the registered proponents, so you would see a list of individual names on the register, so we can't actually tell.
Okay.
But we would be maybe 30 to 40% market share, a reasonable portion of the projects.
Yeah, okay. I'm wondering whether there is any way in order to help us understand whether you would consider giving us the opportunity to have eyes on what you do, what information you do have on a confidential basis. Our committee can do that. The other issue, of course, is making sure it can be de-identified.
That's actually the most important issue for us. And again, as I said, we do adhere to the NFF code on data management for good reasons, because we're in long-term trusting relationships with people on the land, and it's not an exaggeration to say people were getting shot over these particular issues in New South Wales not very long ago. So it is a very genuinely challenging issue. So if we can successfully de-identify that data, we're more than happy, absolutely happy to share it.
Okay, all right.
There's no question about that. As I said, from our point of view, the more transparency, the better. The more able we are actually able to continue to improve and develop these methods as they need to.
Okay. I know other people have questions, so Chair, if there's time, I'll come back, but otherwise.
We are running significantly over time, so my apologies to those people sitting here at the moment. We will take a break now for 7.5 minutes, and we will be back at 10:45. Thank you.
With us.
We will now resume with the National Farmers Federation, the Australian Forest Products Association and Green Collar, and we will go directly to Senator Duniam.
Thanks, Chair, and thanks everyone for being with us today. If I can start with the National Farmers Federation, and cognizant of time, I'll try and keep this as brief as possible. In the briefing paper you've provided to the committee there are a couple of points that are made around relating to offsets. Adding pressure to this by turbocharging offsets demand without a systematic and consultation approach will create significant tension. And you also make the point later on in the document on first page of this. Secondly, we are concerned that there will be insufficient surplus ACCUs available under this mechanism. So I just want to sort of get to those points you make and what you think the outcomes of, if those concerns are to be realised, what the outcomes will be. If we can sort of step through what that means for those you represent, but then also those who benefit from the work that your members, farmers, actually do, so cost of food, etc.
Thanks, Senator. And I think there's probably three issues to think about there. The first one is a potential land use conflict. So what is the best, most productive use of the land? Is there a risk with, depending on the price and the enthusiasm and the requirement for acquiring offsets, that there will be an intrusion onto particularly prime but other agricultural land? We've heard discussion today about risk profiles and certainty. I think one of the things we should talk about is the certainty that the farm sector can have, that large tracts of agricultural land aren't going to be acquired and revegetated with, establishment of environmental plantings. We'd much prefer an outcome, and I think I say this in our note, that talks about a multiple use outcome, including a forestry outcome. We think there's a management intent there that drives better management for invasive weeds, pests, etc. We think we need to think about that. We acknowledge, and it was in your time as government that it was brought in, that there's a 30% threshold veto level, ministerial veto. Whilst that exists, there's questions in our mind about how often that will be and under what circumstances that will be exercised. So we are concerned about that. And I think the other problem is, and this is going to sound like we're conflicting with ourselves because it's a difficult discussion, where the pricing is set, whilst it's in excess of where the current voluntary market is. I got my shoes and socks off the other day and figured out that I think there's about 70 million tonnes of ACCUs that have got to be found somewhere over the next 7 years. Not sure where they're going to come from. That's based on an expectation that there's 135 million in the pipeline. I'm not sure how good those numbers are, but they're a set of numbers I've seen. And if I go to thinking about the response in agriculture in terms of their insetting requirements, but also in terms of how things like methane mitigation from ruminant animals might occur, the numbers I'm seeing at the moment, and I think they were canvassed to some degree on Landline on the weekend, suggests that a carbon price at $75 a tonne may not be sufficient to get that practice change for methane mitigation, so enteric methane mitigation. All of those things create caution. None of them on their own is a specific problem. Together we need to work through how we do this. I guess all we're saying is, whilst we're not covered, none of our entities are covered by the safeguard mechanism, the consequence of the implementation of the safeguard mechanism is of significant interest to us.
Sure, and that comes back to that point around offsets. And so, interesting to note you have that many toes to be able to count out the shortfall of ACCUs. We'll leave that though. But look, have you done any modelling on what potential impact there will be on land use through perhaps this driving of demand for offsets through ACCUs or SMCs?
No, we haven't. I think anecdotally I'd say two things. We've seen the evidence base in the Peru Shire, which drove the veto, that seems to cause a community dislocation if there is too much development or return to reforestation or afforestation. And so we need to think about the socio-economic impacts of that. And the other question in our mind is the degree to which that $200 million, the 200 million tonnes, is gotten from offsets is unclear. My working assumption is most of them will be, unless and until some technology is available. And I think we heard that in earlier evidence, not only to the mining sector, but also to ourselves. So we're very nascent in terms of our progress on how enteric methane is going to be dealt with in a commercialisation sense. So there's a couple of technologies out there, we'd all be aware of that. How they are able to be made available to various parts of the herd, remembering that, some of them exist in the rangelands and are only seen once or twice a year. Some of them are in feedlots and they're seen twice a day. That impacts on how we can get that technology to them. And as I say, the degree to which that is able to be economically viable to do and doesn't unnecessarily undermine the resilience, both economically and production-based.
Okay, all right. Thanks, Mr. Ragg. And, some significant issues there that you are seeking some pretty big assurances on. But in the absence of those, NFF have some big concerns that if not addressed, the cost of doing business on the land is going to go up, and therefore the cost of the goods that come off the land, the food we eat, is going to go up. That's the bottom line, yeah?
Inherently, that seems to flow. So if there's more competition for land, less availability of land for production, then the food production is going to be squeezed. And I haven't turned my mind to other supply chain issues that relate here. That's probably a matter for another committee, I think.
Yeah, indeed. No worries. That's great. Thanks, Mr. Ragg. We'll move now to AFPA if I can, and if I can sort of go probably at another end of the questions that have been talked about with regard to forestry. We've talked about offsets being secured through forestry, but obviously there's a product that comes out of the forests that does have a degree of emissions intensity about it. So I just wonder if I can go to you, Mr. Violante, around the products that come out of the pulp and paper sector, and what sort of assessment has been made around the impact that this mechanism might have on that sector as a starting point?
Thank you, Senator. And as you correctly pointed out, AFPA does represent not just the forestry end of the supply chain, but also the processing and manufacturing of timber and paper products. And in the context of this inquiry, we're particularly interested in the impact on the pulp and paper sector. We have some facilities which are captured by the safeguard mechanism, one in Boyer that you would be familiar with. And so while we are supportive of the overall framework that is proposed, we do urge, I guess, some further detail and caution around the treatment of energy-intensive trade-exposed industries. The pulp and paper sector produce essential products that we would all be familiar with, from paper packaging that we use, the newspaper print that we use, and also toilet paper, tissues, which we rely on in our everyday lives. So we do want to ensure that Australia maintains its sovereign capability in these products. These are facilities that have already done a lot of work around reducing their emissions. They already use a lot of renewable bioenergy to keep down their emissions. So they still compete in a very tight international market, and we are mindful that we need to get the settings right so that we do not unintentionally put pressure on our domestic manufacturing sector and increase our reliance on imports.
Yeah, and I get very clearly what you're saying there. Just in terms of, and you mentioned Boyer, how many facilities across Australia would be caught up under what we're dealing with here?
So there are two facilities currently captured by the safeguard mechanism, and one that fluctuates in and out. And that's because of the facility treatment of this, but all pulp and paper manufacturers are energy intensive facilities, and so we also do need to ensure that there is, I guess, fairness in the system across the sector, not just those captured by the safeguard mechanism.
Okay, well, yeah, absolutely. So then are you able to sort of give me a bit of an idea of what would happen to the cost of doing what these facilities do, the two you mentioned, but what flow-ons also there might be across the broader sector under the arrangements as they stand? Because you talked about getting the settings right. So part one, what would happen to the cost of doing business here? And then ultimately what business decisions might be made if it's not right. Part two, what settings do we need to get right as part of what we're examining here to make sure we don't have an adverse outcome?
Yeah, thanks. Look, I'll provide a high-level response quickly and throw to my colleague Tim Lester, who looks after the pulp and paper sector, and will have some more detail. But look, we think that what's proposed is a sensible framework. And there are some areas, though, where we need further clarity before we can fully understand the impact that you've asked for. Tim?
Thank you, Victor. Yes, Tim Lester from AFPA. So there are a lot of variabilities here and a lot of uncertainty, and what we're really calling for is certainty around the policy framework, and so that our members and the companies can actually do the modelling and do those forward investment projections in order to make these business decisions. So as a sector, there is support for broad decarbonisation, there is support for or an understanding of the requirements that are actually needed here. We're really just looking for certainty in the policy structure and framework in order to be making those business decisions with an understanding that there will be impacts, but we are also operating in a tight margin, tight international market. These are commodity products. So it's a lot about throughput and it's a lot about efficiency.
Okay. So, but again, similar to the point made by the NFF, that if the settings aren't right, costs could go up, which would then have a significant impact on the ability of being able to do business here, which is at times marginal, depending on demand and foreign competition. So just to that point though, getting the settings right, specifically, are you able to list out those areas we need to focus on?
This is something that is under sort of active consideration, and the businesses are, of course, trying to weigh up all of these variabilities in terms of international markets, how that's changing. The whole world is moving here. And it's not just a question about what our costs are, it is about where the markets are going, it is about where supply comes from, where our inputs are coming from. So there are a lot of variabilities here that industry's trying to figure out. Having some certainty around what those price effects are, the big killer for this investment regime is volatility. And we saw this in energy markets, that when the price of energy and the inputs into these businesses spiked, that becomes very, very difficult to manage within the business environment. And so having some certainty and assurance around that and how it then... so we're looking for certainty about what sort of incentives might be available, how that actually changes the market, what sort of price impacts there may be. It is, of course, in the context of what's happening with our international competitors. And the challenge or the danger of getting some of these things wrong is that we actually do stop doing things here in Australia. And that affects our sovereign capability. And it's not that our companies will relocate, but the production almost certainly will. And we know that in pulp and paper, we're already exposed at least somewhere between 54 and 80%, depending on your product. So the pressure on this sector from imports is relentless. So our companies have worked very, very hard over a long period to maximise those efficiencies, but the sorts of emission reductions which are possible, and the technologies will come through. Now the question is around timing. So it's certainly, it may not be next year, it may be 5 years, it may be beyond that. But in order to make those level of investments, and we are talking tens of millions of dollars, that then need payback periods over many, many years, how does that actually fit within the broader context of the investment that's required?
Okay, so on behalf of your members, do you think if this bill, as it stands today, and the draft regs that were tabled yesterday, I'm not sure if you've seen them, if all of this went ahead as proposed, would you have all the certainty you need for your members in order to avoid adverse outcomes?
In the context that I haven't yet had a chance to look at those draft regulations, so I can't provide certainty around that. In terms of the bill itself, there is I'd say a broad level of comfort with the requirement and the opportunity and understanding that that this safeguard mechanism has been in place for a number of years, so that companies actually do know how it operates, they do know what the requirements are around that. So there is a broad level of comfort with the legislation in terms of the broadly what's been proposed through the consultation regime for the government in terms of the reforms. There is an understanding of what that is and how it would fit within a business context. In terms of anything that was released yesterday, I can't say.
Senator Duniam, do you have much more, or are you?
I have one more question, if I may. Thanks, Chair,
Certainly.
noting the time. Yeah, thanks very much for your forbearance. Look, if you can take on notice that question just with regard to those regs, that would be great to AFBA. And just finally to Green Collar, I just wanted to, back to the point around the questions I was asking of NFF, around demand for credits. I mean, what sort of modelling has been done by your organisation or modelling by others that you've drawn on? And I guess the basic question I have is, do you think supply will be able to keep up with demand, assuming that's, where all of this is going to go? So just a pretty broad question there.
Yeah, thank you, Senator. Look, our view is that the supply of offsets from the land sector, and I mean the land sector is the area that we are mostly engaged with, probably will be less than anticipated. But also it sort of is there in the mainstream modelling. We're not as bullish as others in that area, and we see it. We look at the safeguard mechanism sort of probably a little bit differently to everyone else, because we see it as a really, really important driver of demand and potential, a very important source of incentive to get more money back through the farm gate effectively for practice change or practice improvement or land management that is delivering abatement outcomes. And so we see it as really, really important, but we don't see that the offsets problem solves the oil and gas, the offsets availability solves the oil and gas problem. We just don't think there is sufficient capacity within the land sector to be producing the magnitude of credits to achieve that abatement task. Most of the abatement is going to have to come from elsewhere.
Thank you very much.
Oh, thank you. Sorry. My apologies. We'll now go to Senator Pocock.
Thank you, Chair. Thank you all for your time this morning. I might start with the NFF. Mr. Ragg, we've heard about, concerns the safeguard mechanism is shifting industrial emissions onto the land sector. I'm just interested in your thoughts on the impact that's going to have on people in the land sector actually also decarbonising and potentially offsetting their emissions. I've spoken to farmers who have had to bid against multinational fossil fuel companies for things like water licenses during drought. Very hard thing to do for a family farmer. Just interested in NFF's position.
Thank you, Senator. Look, I think there's a couple of things in there. My observation is, as we sit here today, most farmers are thinking about their disposition. They're looking at the degree to which they can reduce their enteric methane, depending on their business model. They're looking at what their potential for increasing or identifying ACCUs within their farm unit, and a word that's become not yet probably in the dictionary, but everyone's using, they're looking at their insetting requirements before they then look to whether they've got, an exportable surplus of ACCUs to put into the marketplace. And I think that's a journey. So I think we've seen an early enthusiasm for carbon contracts, engagement. I'd go so far as to suggest we might have got a lot of the low-hanging fruit in that context, and so it's going to be more difficult to get. And so I then think about it in two paradigms. One is a reasonably self-regulatory place where farmers will make decisions in their best interest for their ongoing market access. Where I'm more concerned is where the cost of land is bid up by competition from people that need to go and find offsets. And I don't think that is well regulated, and that might not be the best word to use. I don't think it is well understood what that impact might be. We've seen in the past where people with a problem pull out the chequebook. Is that desirable in an agricultural landscape? I'm not sure we think it is, and we need a much more strategic and integrated approach as to how we all go forward together with this problem. Because, as I said, I think in answer to a question to Senator Duniam, what we don't want to see is large tracts of particularly highly productive agricultural land go back to permanent revegetation. I don't think that's in many people's interests, and I'm not yet convinced that the economic case is there to do that. Yet the drivers from the safeguard mechanism might distort that.
So there's a concern from the NFF that the genuinely hard to abate emissions in agriculture may be harder to offset because safeguard facilities are going to be buying up those credits.
Yeah, I think that's a secondary issue in that context. I think my first point is
the
change of land
things,
use. Yeah. If farmers have got to go and bid in the market to meet their own requirements, then that's another discussion that we need to have, and what the price might be. So you can see we're running both sides of this discussion, because we're both emitters and sequestors. Yeah. And it depends who you are, what the particular ambition is on a particular property or in a particular region. So it's really difficult to get a handle on. And as those new technologies come online, and the degree to which they're commercial or sub-commercial and need support will be the degree to which we will better understand that. We're only now getting those methane inhibitors starting to be commercialised. I think we're some little time from fully understanding where we can get them and to the extent that they actually are able to offset that. Offset's a bad word, to mitigate that issue.
Okay, thank you. I've had a few farmers raise concerns with me that they want to be able to sell ACCUs from their projects on farm, but they have real concerns about selling them to fossil fuel companies to offset emissions that are making their livelihood more tenuous. We know that farmers are already being massively impacted in terms of profitability by climate change. Is that a valid concern, and something you think farmers should have the option of who they sell their ACCUs to if they have that principled stand?
If they choose to take that principled stand, then I think there probably is and ought to be a mechanism for them to make that choice. But that's after they've determine what their current and future needs will be, because what we can't do is identify our ACCUs, sell them, and then go, oh, actually we don't have any left for our own use. So that's the threshold issue that I'm seeing many farmers now getting their head around. If we get impacts from our international markets on our disposition, how do we address that? If we've taken off farm those ACCUs, how do we then meet our market access requirements as they may develop? They're not currently impacting, but there's certainly a national and international debate about how that might evolve. There's a carbon border adjustment mechanism in the EU at the moment, doesn't apply to agriculture. There's a discussion about whether we have a discussion about some sort of border adjustment mechanism in Australia. It's of concern. Don't act too early is what we're saying.
But maybe to Greencollar on that point, do you factor that in? Do you see farmers going forward actually looking at a percentage of their ACCUs that they're generating and wanting them to use them to offset their own emissions? Will that reduce the supply?
So absolutely, they're thinking about it, and I think fundamentally this is a farm-specific question, because every farm's sort of different set of circumstances, different set of priorities, and carbon, like other ecosystem services, is rarely, I should say, not never, but I should say rarely going to be the major cash flow into a farm. It's going to be an important supplement to it. And increasingly people are thinking about inserting and what sort of makes the most sense. Certainly, at least with the way we work with landholders, we do provide that flexibility because we want to, our philosophy is fundamentally that we get better outcomes if we get more money back through the farm gate, because you're investing back into the land asset, and it's the best way to get good conservation outcomes. It's the best way to get good production outcomes, and if you take it a step further, there was some discussion about the cost of production versus the value of that production, and fundamentally, if we're trying to solve for conservation problems in the agricultural sector, and bearing in mind most of our conservation problems have a relationship with agricultural land. The majority of Australian land is privately managed land, be that family-owned farms, private conservation trusts, Indigenous groups. So we've got to work with those land managers, so my earlier point that the legislation, sort of the stick approach, is not really working. We've got to find those incentives because it comes with a cost. But what's really trying to solve a problem is that we're probably not paying enough for our food. That's not a bad thing, I don't think. We should pay more for food because we're trying to get more value back to the farm, because if we're paying more for our food, we've got more money to invest back into those assets. So I don't think it's actually a problem. I will say, just sort of at the macro level, I think these are valid concerns and we really need to pay attention to them. I think it's unlikely that they will have lasting structural impacts on the landscape, because we can get out of oil and gas, we can't get out of food production. It's just sort of a fundamental reality of who we are, right? So I think there'll be some changing dynamic there, but at the end of the day, I can't see that vast swathes of the Australian landscape end up given over to carbon projects. I think that's a highly improbable economic outcome.
Thank you. And then just to move on to HIR and some of the fairly robust criticisms of it, as one of the biggest, or potentially the biggest aggregator of HR credits, how do you see that being resolved? Do you accept that there are a percentage of credits that are inherently not sort of high integrity at the moment?
So I'll go back to what I said earlier. We absolutely share the starting point, a lot of those concerns with the critics, and we have made joint submissions along those lines. And we do our absolute best to make sure the projects that we're operating are producing the best outcome that they can. What we do accept is that there's concern about it and that we need to address that concern. And so without necessarily agreeing with the impacts the projects are having, we're more than comfortable to say that we should take steps to mitigate the risk of over-delivery. I think that, as I was saying before, there is some scope. I think we probably need to do more work on that, to think around how we manage more of that risk. And I think there is scope within the Chubb review recommendations to do that. For me, I think that's an ongoing process. We always need to be doing that. We always need to be improving these methods, and some of them will reach end of life, and we should be moving on to new methods as well. So I think that's the way we certainly think of it, because at the end of the day, people have to have confidence in the product that we're buying. We don't, as I said, it's important. I mean, absolutely, this thing does not work if we don't have that confidence. And so in many respects, it kind of doesn't matter what we think. What matters is, what do we all agree to think on? And we've got to find that point that we can all agree.
I think the constant evolution of methods is important. We can learn a lot more about a project or a project area today than we could 10 years ago with new technology and new accessible technology. So I think that the continual revision of methods and how projects are designed and how they're monitored is paramount in having a well-designed scheme. It's not just a set and forget type of exercise.
And then on your point of the evolution of methods, Professor Chubb recommended that no new projects be registered for the avoided deforestation method due to some concerns there. What as an aggregator, what's your view on the 10 million plus credits that will be likely come online from existing projects? If there's no new projects, what happens to the old credits?
So I think that they're two separate issues. I mean, we absolutely in support of the end of that method. It's reached the end of life. It was a method written for a specific context that is no longer relevant. It was relevant when these projects started, and so most of these projects actually end over the next couple of years. I don't think, certainly from our projects, we don't think that number is in excess of 10 million. We think it's a smaller number because we know what rate these projects are crediting at. We don't share the concerns with the avoided deforestation method that we do with the human-induced regeneration method, and it is a point of difference that we have, respectful point of difference that we have with some of our colleagues that have concerns with that. We think the data is very robustly supporting the baseline case for the avoided deforestation methodology, and it had a really genuine positive impact.
Do you have any reports that you could provide the committee on the AD method?
Yeah, I think we actually did share with the committee some submissions that we have made on avoided deforestation. I think one thing there is a lot of technical detail with these methods, as you would appreciate, which is not to hide behind the technical detail, but it's hard to talk about them without suddenly becoming buried down in the weeds. But the avoided deforestation method, the way we at least operate that method is that we calculate abatement. So the reduction in the biomass, because we're actually going out and working out effectively which trees are getting removed from the landscape. It's not an area-based method in the way that the other methods are. And so it's a bit of work to do to compare the abatement that's occurring under that method against the actual background clearing rates that are done from an area point of view.
Senator,
thank you.
Can I just quickly add to that? I think my recollection is correct that Chubb's disposition to that methodology being discontinued was that people that would qualify for it due to the issuance of a permit have had sufficient time to do so, and they ought to have done it already. And therefore there was no need to continue it. But he did go on to say that there should be a proponent-led consideration of something to replace it. So I don't think it's necessarily a philosophical discussion, it's a timing issue. Thank you.
So could I potentially further add to that, is that it is going back to my point before, and I think this is an area where we are very strongly aligned again with our colleagues that have been raising concerns with the scheme, is there is a very, very strong need for a good avoided clearing method. So that the numbers I mentioned before, we're talking about clearing that is largely occurring, it's re-clearing of regeneration that's occurring in agricultural landscapes. And I think our colleagues at the NFF mentioned earlier that what we want to be doing is moving towards farming practices where we're finding ways to do both. It's not about switching out carbon for agriculture or vice versa. What we're trying to do is find ways for both to effectively exist within the landscape. And there's a lot. I think our agricultural practices are one of the most exciting places to be. And the evolution of some of the stuff that we're starting to do in terms of land management. But we do need, it is very, very important that we get a strong avoided clearing method sort of in the next phase of this scheme, because it's one of the best places to intervene. It has the greatest benefit, sort of low-hanging fruit, if you like, benefit in terms of emissions reduction. It has enormous benefit from biodiversity and habitat protection standpoints, nature repair, and it has an economic consequence because there's an opportunity cost in doing so, and so you've got to provide that incentive.
Thank you. One final question for you. There's been some talk as the new safeguard mechanism comes into effect, and this reliance on ACCUs to deal with some of the uncertainties and potential miscalculations in ACCUs, that there could be some sort of discount to adjust for this. Is this something that you've looked at or support?
Yeah, so we would be supportive of that idea. I don't think it's our job to figure out what that number is, but we do think that's probably one of the better resolutions here because it's become such a contested space, and as I said before, we share concerns. Our starting point is sort of we have shared concerns. We don't necessarily agree with all the consequences of it. We agree that there is risk. We should manage for that risk, and we think that's probably the most effective way to address that risk. And I think there's more work to be done to figure out, not by us, but by sort of the scheme designers and the Parliament to figure out how best to manage that.
And would you support that being a sort of haircut across the board, or specific methods should be discounted?
Look, I think you could do it in either way, and we would be supportive of either solution. As I said before, it needs to be an effective solution.
Needs to be evidence-based as well. And I think that's where the contention around the discussions does arise, of just picking a magical number out of the air versus something that's grounded in what's actually happening on the ground.
Have you done any work on that evidence base of what that discount rate should be? Are we talking 20, 40, 50, 80? Like what percentage?
We have indirectly, not to get into specific details, but the avoided deforestation method, which is a measurement method, actually does have an inherent mechanism for discounting vegetation that would not be cleared. So you could almost, and this is just one proposal, you could almost put that in reverse for something like regeneration, and identify, vegetation in an area that has not been cleared and is therefore not going to regenerate.
Would you be willing to table that work that you've done looking at discount rates?
We could certainly do it for the avoided deforestation methodology. In fact, it's in our offset reporting for our avoided deforestation, so that methodology that we use,
HIR, you happy to table that as well if you've done work?
Well, we haven't. What Jenny was proposing is we can do that for HIR. We don't currently do it. And so the point is that wouldn't give you a number. It would actually answer. It wouldn't give you a generalised number. It'd give you a specific number at each project.
Okay, so it's like project by project discounts.
If you, under that analogy, yes.
Great. Thank you. I've got a final question for AFPA.
Great, and I'm just, again, not having to go at anyone, but apologise to people who are behind time. Go ahead.
Thank you. Thanks again for waiting. Obviously heard a lot about the task of achieving net zero and I guess the use of offsets, and there's also been some fairly clear research showing that clearing native forests will make reaching net zero harder, given our native eucalypt forests are some of the densest carbon sinks in the world. I'm just sort of interested in your view of that tension between plantations, which we absolutely need, which I think we agree genuine methods should be used, but for existing unlogged native forests, there's a case to leave them as carbon sinks and transition the industry to plantations.
Thanks, Senator. Look, it is a debate that is largely misinformed around the way the native forestry industry operates today. You're right, if we were clearing native forests for timber production or other uses, that would have a significant emissions impact, but that's not how the industry operates. It operates on a very small footprint of native forests, and after harvest, those areas are regenerated. So you are not seeing a change in land use, you are seeing a continuation of the native forest estate, which across the landscape does not reduce the net forest area over time. The IPCC recognises that the best emissions outcome from forest management is through the sustainable management of forests for timber products and paper products. Some of the studies that you'd be familiar with, which make the case for locking up our native forests as carbon sinks, as they put it, do not accurately represent the carbon profile of how the industry operates. So, for example, They don't recognise the regeneration that happens. Most of the carbon sequestration happens in the growing phase of a forest. So that's a big area where they discount the sequestration that continues to happen in timber production forests. They also neglect the significant carbon that is stored in the timber products that are generated from the sector. So half the weight of a piece of wood is stored carbon, and our native forests make a lot of the timber that you would see in this room today. Half of that weight is stored carbon, so we use it for floorboards, decking and other building materials, and that carbon is stored for the life of the product. So I'm happy to provide on notice a number of studies which show that over time the native forestry industry in Australia is a net carbon positive sector.
Okay, thank you. That would be great. I'm interested in, when you clear a native forest, what percentage of that biomass is actually used as a timber product?
Yeah, look, again, I'll provide on notice the detail of that because it is a complex area. The reality is that half of any tree, whether it's plantation or native tree, will end up as some form of residue or other use timber product that is not for structural timber. But the industry is always looking for more innovative ways to use that product. Some of it will be used for lower grade timber products. So pallets, for example, is considered lower grade, but certainly critical to our economy. We see other products used for bioenergy. So a number of the mills will use residues for bioenergy, which they use to reduce their reliance on fossil fuels. And increasingly, we are looking at opportunities for bioproducts and engineered wood products that can be used, that can be made using residues. So it's not a simple answer of this much is structural timber and the rest is burnt or anything like that. Very little is wasted.
Okay, and just finally, I'm just interested with you've got a very small native forest logging industry and then the plantation forestry, and I think the two are often conflated. The plantation industry is providing building materials and all sorts. The native forests, as you said, a lot of wood chips, those sorts of lower value products. I'm interested what you would say to taxpayers who are saying, why should we keep subsidising native forest logging at a time where we know that we desperately need to sequester carbon, and sure, there may be the long-term drawdown of that carbon that's released and cutting them down, but why should taxpayers keep subsidising a small industry that has this huge potential future in carbon, the carbon market, if we can get the right incentives and methodologies in place?
Yeah, again, Senator, there's a lot of misinformation about the size of the industry and the role of the industry. So the industry the native forestry industry nationally employs tens of thousands of people. So some of the estimates you would be presented with significantly underestimate the size of the industry's contribution to both employment and the economy. The other point I would make is that the plantation industry and the native forestry industry are not interchangeable. You cannot process in a hardwood timber mill softwood plantation timber. We do not, all the hardwood plantations that make up the bulk of our hardwood plantations, which are blue gum plantations, which are not suitable for timber processing. So to say that we can transition to the native forestry sector to plantations is a myth. We do not have a plantation resource that could do that, nor can the plantation estate make the products that are made from the native timber industry. So decking, floorboards, these sorts of products cannot be made from the plantation estate today. And if you wanted to transition to a hardwood-based plantation resource, you would need to wait probably 50 years and establish about 1 million hectares of hardwood plantations nationally to fill that gap. Now, in the context of a plantation sector that is not increasing its footprint, it's shrinking. We've seen about 200,000 hectares of plantations gone in the last sort of 8 years, and this is why we are pushing hard for some of the plantation method changes that we are seeing, is because we're not getting new plantations in the ground today to meet our existing timber needs. We need to fix that before we even start talking about a transition away from native to plantations.
Thank you. But just
sorry,
just
if I
my-
could just add in there as well.
Can I just ask the thing I'm really interested in is, if there is such demand, what do you say to taxpayers who are having to subsidise native forest logging?
Look, the sector isn't subsidised. That's another myth.
Okay.
A number of the reports that are put to you as evidence of the subsidies are because the budget projections that the state forest agencies, which manage the native estate, their budget forecasts have been premised on timber volume sales that have not been realised because of bushfires and floods in the last 5 years particularly. And so they're not taxpayer money going out the door, it's revenue that has not been realised from timber sales that support not just the supply chain, but they also support these forest agencies to manage significant areas, millions of hectares of state forests for not just recreational use, but managing for weeds, pests, and bushfire mitigation activities.
Thank you. Mr. Schultz, you know a thing or two about carbon. Would you like to comment on, I guess, the opportunity that our native forests provide, standing versus...
Yeah, look, I mean, I think we probably don't disagree entirely, but we do see that there is a huge amount of value in those assets as standing forests.
More value in standing forest than paper, right?
No, standing forests, no, enormous amount of value in standing forests as habitat, as carbon sinks, and from the biodiversity benefit. And I think however we achieve it, that's the path that we need to go down to find it. So there are structural issues with the sector, with, you know, and I'm not an expert on the economics of the native forestry industry, but I would say, and to the point before, is they very well equipped to manage very large areas of forest. It would be, I think, you know, and again, I think this is why the safeguard mechanism is such an important piece of legislation to the land sector, because if we can get the incentives right, we've got the opportunity to create competing economies that are very attractive to business as usual in places like the native forestry sector.
And would there be jobs in managing native forests for
Absolutely, there is. I mean, I think there's one of the to speak of myths. One of the myths is that carbon projects are sort of lock the gate type projects. That's far from it. As I said, our projects we have field teams in every state of the country on ground out surveying, looking at fuel load, looking at interventions. What do we need to do to manage fire mitigation, etc. every day of the week. So absolutely, and that's sort of like the on ground, you know, all the way through to the same sorts of jobs that exist on the sort of commercial side of the business, selling the products, and there's jobs in the science, the accounting. So, you know, I think, you know, if you allow me 30 seconds more to indulge on this subject, you know, where we are headed is a place where the ecosystem services that we're talking about should be the mainstay of the economy in 10 years' time, not the sort of historic, you know, the industries that are today, and sort of, you know, not to pick on the oil and gas sector, but we're transitioning out, and, you know, we're solving long-term problems. We are seeing significant structural adjustment in the economy, and it's an enormous opportunity for Australia because we have these, you know, wonderful natural assets that we need to find ways to protect and discover the value, not the cost of managing it, but what is the value of this stuff.
Thank you, Chair.
Thank you. Senator Hanson-Young.
No, I've done my questions.
Oh, okay. I thought you were coming back for one final.
No, fine.
No, all good. Excellent. Thank you very much for your time and your patience. We do appreciate it. I hope you enjoy the rest of your day. Thank you. I'd now like to welcome representatives from the Australian Workers' Union. Now, I understand that you have received information on parliamentary privilege, protection of witnesses and evidence.
You're upside down as well.
Oh, sorry.
Ah,
There we go.
thanks,
Is that
Senator.
better? Excellent. I was trying to work out how to say it backwards.
Upside down and backwards.
Thank you very much for joining us. Would you like to state your name and the capacity in which you're appearing today?
Sure, my name is Daniel Walton. I'm the National Secretary of the Australian Workers' Union.
Thank you. Can you just maybe step out for us what you think the risks are for your members in terms of proposals to end coal and gas or limit offsets?
Yeah, sure, Senator. I think there's a brief statement which is getting provided around to everyone now. I'm noting, I think the committee might be running a little bit on time, so I'm happy if it assists to bypass reading out that statement, but perhaps just to give a little bit of context in terms of who we are.
Well, the committee has already decided that those statements to be tabled for everybody.
Great.
By nature of the fact that, time is not our friend.
Okay, no troubles. So to put it into context, our union represents workers in the steel, aluminium, plastics, concrete, cement, food processing, chemicals, glass industry, fuel refineries, nickels. We also have heavy exposure in those workers in metalliferous mining and oil and gas extraction and processing right around the country. Of the 215 companies that are listed in the safeguard mechanism, we have members working around about 160 of them. So our union has an extremely high exposure to this proposed legislation. It's something which we've spent a lot of time engaging around, both with government but also with a lot of the industries that are outlined in our members to try and make sure that the settings are right when this legislation, or if this legislation goes through.
Okay. In terms of your perspective on this legislation, are you supportive?
Yes, we are supportive. We've given a submission jointly with the Mining and Energy Union, who represents the coal industry. So for coal mining and also for a lot of the generation. Between the two of us, we are the two unions that basically cover all 215 companies listed in the safeguard mechanism. We are certainly supportive of it because we think there is an opportunity here to finally give some clarity for business in terms of the trajectory around reducing their emissions and to play a role in, I guess, their social licence in reducing their carbon footprint in a responsible manner so that they can continue to operate in the country. We have flagged that there is no consistent approach that I think can be applied across every one of the 215 companies. I think there will be some unique arrangements that need to be worked through, but ultimately we want to try to assist as much as possible in the industries in which our members work, in having some confidence to know that those companies and the places they work are playing their role in reducing their carbon footprint into the future. But we also want to make sure that we don't lose our competitive advantage as a country in these key industries, and we want to make sure that they do have a significant opportunity to both reduce their carbon footprint but flourish and continue operating in the country. And I think this legislation provides that delicate balance. As I said, I don't think there is a one-size-all-fits approach for the 215 companies, but there is certainly, I would say, in the engagements that we've had, overwhelming support from the business community to support this legislation and to start putting in the necessary steps to reduce their baselines over the next number of years.
So you referenced the social licence and business competitiveness. We often hear a lot about businesses avoiding making change and the impact on their, the cost impact on their business.
Yep.
When we look at the social licence piece and the competitive piece, do you see the downside for business and then obviously the knock-on effect for workers if businesses do not make a transition?
I think there's a reality, which is there's a lot of nations, particularly developed nations around the world, are making meaningful efforts to reduce their carbon footprint in their products, and they're marketing their products as a consequence. We are a heavily trade-exposed union as well. I think there's a few things that the government should take into consideration as part of, and particularly the committee, as part of the proposals going forward. I think the $600 million that has been proposed to assist, I don't think is going to go anywhere near the amount of money that's required to assist a lot of the businesses covered in that 215 lot. I think we're sort of estimating somewhere 3 to 4 times that money is going to be required because the scale of change is significant. And I also think we need to have some greater acceptance that there are a lot of trade-exposed businesses that are covered in that 215 mix, and that those trade-exposed businesses are going to need probably some additional support, because we don't want to find ourselves in a situation where we do have some industries or some companies competing against nations who have got no attempts underway to reduce their carbon footprint and import their dirtier products into Australia at the consequence of Australian jobs. And so that's why we talk about a balance. We mean that balance in reducing our carbon footprint and also protecting our industries. And so we've also talked about a carbon border adjustment mechanism being extremely important, having a look at making sure that there is a level playing field for Australian businesses if and when this legislation goes through.
Okay. Thank you. Thank you very much. Senator Hanson-Young?
No, nothing from me.
Nothing from you. Senator Hughes?
Thank you, Chair. I was just wondering, Mr. Walton, has the union done any analysis of the businesses' capacity to deliver the required emissions reduction?
Yeah, so not so much analysis, Senator, but we do spend a lot of time working with the companies and by and large rely upon the data that they've done in analysing their operations. I think there are some businesses in the 215 mix who've probably done more already to reduce their carbon footprint, which should really be recognised going forward. And we've also got some industries that are really hard to abate. And so we work quite closely with our members in the cement industry and concrete industry at the moment, who are at the top of the tree in the hard to abate categories.
Yeah.
And so we're particularly mindful of what that means for them and what that means for our members working in those industries. But we don't have any hard specific data in terms of each industry's emissions profile. We've got a general view in terms of some industries which are harder to abate. So if we look in terms of concrete, cement, and then into the likes of aluminium and steel, is going to be tricky for a lot of those industries over the next couple of years. But if we get the settings right, at least the engagement we've had thus far, we think that there's a solution which means that everyone can find a place to operate in this country.
What we have heard from a number of people yesterday was the increase in costs, and those costs would then be passed on to consumers. Does it concern you as a union that with real wages falling at the moment and a cost of living crisis, that we're going to see increased costs being passed on to consumer across a huge range of goods and services?
I don't, to be honest, Senator, I don't think, I think the practical reality is that Australia's fallen a bit behind here. I think around the rest of the world, a lot of other nations have made some meaningful steps here to work with their industries in reducing their footprint. A lot of the companies who operate in Australia operate in different parts of the world, and there are other businesses in other parts of the world have already started to make steps to reduce their carbon footprint. I think we've got a risk in both sides here. We've got a risk here where consumers are going to be driven to find more environmentally friendly products, and we've got a risk here of dirtier imports coming in. And so we think that there has to be that sensible balance to make sure that one doesn't prevail above the others to the consequence of Australian jobs and Australian industries. In terms of, like as I said, there are going to be some areas that have to have a more sympathetic view in hard to abate areas. We've put that position very clearly across the government and will continue to do so.
And what sort of, I mean, you mentioned unique arrangements. The cement industry in particular has been very vocal, but obviously aluminium and steel as well. What sort of arrangements are you imagining would need to be put in place there?
Yeah, so the trade exposed industries, I think will have to have, trade exposed and baseline industries, I think obviously there's some discussion around what their baseline reduction targets are for the 4.9% and scaling down. I don't necessarily subscribe to the view that the right outcome here is to say that one industry should be entirely excluded. We have contemplated the view that maybe some industries have industry-specific packages as part of this response. If not, given it is only 215 companies listed, maybe there are some company-specific arrangements that are put in place. The timetables to work through that is essentially what brings us here now. I know that there is a sympathetic view from government, and I know that there is a lot of interest from business to make these steps forward. Out of the 215, if you look at what everyone does, be it from extracting gas or for digging up coal or for making steel or aluminium, the reason why we say sort of unique arrangements is there's just not one single brush that you can put across every company listed there to say that they all operate roughly the same, because that's just far from the case.
Yeah, all right. I'll leave it there, Chair.
Okay, Senator Pocock.
Thank you, Chair. Thank you for your time, Mr. Walton. You clearly represent genuinely hard to abate sectors, concrete, steel. I'm concerned that those sectors are going to have to compete with fossil fuel companies and potentially new fossil fuel entrants, and these companies are fairly cashed up with windfall profits. Yet I note in your submission that you support sort of open access to SMCs and ACCUs, and I'm just wondering how you weigh that up. Should there not be consideration for genuinely hard to abate sectors like your own and your members?
Yeah, possibly. I think Senator, there's probably a few things to work through. We've also said that as companies should most definitely have access to ACCUs going forward, including those that are in the resources sector. They most definitely should be able to. We don't think that we should be looking to support a scheme which gives a lot of access to international credits. I think the reality is if you're producing carbon in Australia, you should find your offsets in Australia. It's a sort of basic philosophy which we are pushing forward. In terms of some of our industries, as I said, consideration should be given to them, but I don't think it would be right to say that the gas industry or coal industry shouldn't get access to SMCs or to ACCUs at the consequence of concrete. I think they should all get access to it, and they should all be working to try and reduce their emissions. Consideration should be given to what work that they're doing before. I don't subscribe to a view that any of those industries in that 215 should close because we want to deny them access to the pool of funding available to transition, or we don't want to give them access to credits for their offsets. There is a reality for all industries where technology isn't at the point, and I think this is the bit, the previous panellists talked a lot about myths. There are a lot of myths, unfortunately, that float around this place around how quickly we can make that transition. It is not going to be overnight. For some industries, it will be the best part of a decade. And so having reasonable access to their to credits during that journey is going to be incredibly important.
So access to credits is important, but as it currently stands, the three big concrete companies are going to be competing with potentially a new entrant like Beetaloo, Browse or Scarborough. One is, I think you called it strategic industries that we actually need, can't do without. Another is something that's largely for export. I'm just wondering how you think through that distinction, given, Senator Hughes has talked a lot about just how much we do need concrete, steel, aluminium.
It's a difficult question, Senator, because I would say I love all of our members equally, and our members work in those industries as well as in concrete. Clearly, there is going to be, I know in part of various reviews, there's talk about the number of credits that are coming up over the journey to make sure that there is a reasonable amount available. A lot of businesses have priced in carbon for each and every tonne that they produce over this journey already, right, ahead of government. They've sort of priced this in. So, again, I know the cement industry has taken, I guess, a one view in this in the beginning. Like we do have to give recognition that they're competing with around about 40% of total supply is coming from overseas at this point in time. That is a big concern for us. It's increased dramatically over the years. If we end up in a situation which it's primarily China who's importing cement and clinker into this country, if the safeguard mechanism gives an advantage to China to continue to import at the consequence of our members' jobs in that industry, that is a bad outcome. I don't think I think there is a balance here where perhaps what their baseline reduction is for the cement industry, maybe there's a longer tail on that as part of that proposal, or maybe there is, some other capacity for the allocation of funds going heavier towards this industry to be able to support their transition. Whatever it might be, we still need cement and we still need concrete in this country. We will for decades to come. We don't want to lose those Australian jobs at the benefit of somewhere overseas. And so that's kind of the slight balance we've been trying to work through at the moment.
Okay, thank you. Just finally, to deal with that, one of the concerns I have with this is that we're discussing the safeguard mechanism.
Yep.
But the solution to that is the CBAM keeps getting thrown out, but we know that is many, many years away.
Shouldn't be.
I think we heard yesterday, to develop that, you're looking at years and years, and then to phase it in. So I'm just interested in wanting to protect your members.
Yep.
It seems wrong to have the safeguard as it stands and then hopefully down the track a CBAM to deal with issues.
I think those are reasonable points. So I'm not sure who said that yesterday, Senator, but from my perspective, I've at least made it clear to government on a number of occasions that an immediate priority should be looking into CBAM. I know a lot of people point to Europe and the fact that Europe has struggled to work this mechanism out for the last 5 or 6 years, but that doesn't mean Australians can't do it quicker. And so I'm a big believer in prioritising as soon as safeguards comes in. At least the industry knows the trajectory and the focus and where they need to get to. And then the next step would be to move quite quickly, both in terms of our trade agreements, but broader arrangements being put in place to make sure that Australian jobs and Australian manufacturing jobs in particular are not suffering as a consequence of dirtier imports being brought in from overseas. CBAM seems to be the most appropriate vehicle to do it, and I think that the government should do everything it can to prioritise that.
Great. Thank you very much. Thank you, Chair.
Thank you. I think you've answered. I was going to ask you what the impact on your members would be if this bill did pass, and what the impact would be if they didn't. But I think you've answered some of that already. But maybe just fill in the blanks for me there.
Yeah, I think, Senator, there's probably in some cases there's a little bit of some of the businesses is trying to work through the finer detail and picking up slight nuances of the drafting which could perhaps be enhanced. And so I think it's too early to tell, other than the fact I think most of them have given a general proposition, certainly to us, in that this is something that they can generally work within, that they need it to be able to give some certainty, some investment certainty on where they're going to go. The scary thing for us has been over the last 10 years or so that a lot of our industries that are listed in this 215 lot have not invested a great deal of money in their plant and facilities because they don't know or did not know under what sort of mechanism they'd be operating in the future. This, at the very least, gives some certainty, and I hope as off the back of that, we can start to see some additional investment going back in, because as much as the previous senator did talk about windfalls coming through in the oil and gas sector, of which they are, a lot of the industries in which our members work in have been going pretty well over the last couple of years. And so I think there is a capacity to be able to work under this mechanism and hopefully invest back in to rebuild new plant and equipment to build the longevity in these facilities.
Great, thank you very much. Any further questions? Nope. Thank you very much for your time and thank you for your patience, and sorry to have kept you so long.
Thanks, Senator.
I would now welcome representatives from the Business Council of Australia. Yep, we're just on the video conference. Lovely. I understand that information on parliamentary privilege and the protection of witnesses and evidence has been provided to you. Not that it would be a surprise to you as frequent flyers. Thank you very much for your time and your patience. I know we're running late and we do appreciate you making yourselves available. We have agreed to table opening statements rather than have introductory commentary, and we have your statement in front of us. I would now invite members to ask questions. Will we start with Senator Hanson-Young?
Thank you. You're supportive of the Safeguard Mechanism Bill, is my understanding. Thank you. Are you concerned that for those genuinely hard-to-abate sectors like steel, aluminium, cement, manufacturing, are going to struggle in being able to have access to the offsets needed while they transition if new entrants in coal and gas can just simply come in and hoover them up? And we know that we've got Woodside coming on later today, and we'll be asking questions to them, but they already make up the bulk of the sectors that are covered by the Safeguard Mechanism, and it seems as though there's no impediment to more expansion.
Well, thank you for the question, Senator, and let me start by just thanking all of you for the time and attention that you're putting into this matter, because we do think it's a very important one, both for the economic prosperity of our nation as well as the potential for us to decarbonise and become a modern frontier economy. Your question touched on a couple of things, which if I may, I'll just touch on separately. Firstly, you touched on the use of offsets. And we do believe that the Safeguard Mechanism credits and access to ACCUs are a very important component of the design of this market mechanism. And to your first point, we are strong supporters of the Safeguard Mechanism and the way in which the government is proposing that it be taken forward from here. In relation to your specific question about I think it was new entrants effectively crowding out the market for offsets, which would make them more expensive and more difficult to access for some of those harder to abate sectors. I thought the previous speaker, Mr. Walton, handled this question very well in talking about the need for certainty and the need for balance, but the principle that those mechanisms are available to all 215 facilities that are covered by the Safeguard Mechanism. So we would agree with his position. We do believe that the creation of Safeguard Mechanism credits for those that can abate more rapidly is very important. And we do believe that all participants should have equal access to those credits. The 4.9% has been set assuming that there will be new entrants into the market. So in many senses, all of the forecasts that the government have put in place have already taken into account that. Now, in theory, the government could have said no new entrants and let's reduce at a lower annual rate than the 4.9%. But in many senses, the mechanism that has been put forward and the forecasts that have been put forward have done so assuming that. So, we're comfortable with the proposition that the government has put forward. We do agree that we need sector by sector, and in some cases might need facility by facility arrangements, which again was, I think, one of Mr. Walton's sort of strong points. But to answer your question, we think that the design of the system has already taken into account new entrants.
Okay. So at this point, the way it's drafted, you don't see there's any impediment at all to the safeguard mechanism, including an expansion of fossil fuels?
So our understanding of the way it is drafted is that it has been drafted to allow for new facilities, including those in, for example, the gas industry. And we think that is important because we believe that gas is an important component of transitioning to a net zero economy over the decades ahead.
Do you have any concerns about the integrity of the different offsets that are currently available under the ACCUs?
So let me answer this broadly and then specifically, and by all means, Jennifer, jump in any time. We think that integrity and transparency are fundamental to markets operating effectively and efficiently and serving the community in the way in which they're designed. And so for us, in any new market that forms, there are always periods through which integrity gets lifted and transparency gets lifted. And we are strong supporters of high levels of integrity and transparency. I think that the Minister's work that he had Professor Chubb and his colleagues do was very important work. And, you know, having read the recommendations there, we are supportive of the recommendations being fully implemented because we do believe that integrity is a very important issue.
Do you think that facilities should be able to offset 100% of their emissions?
Sorry, Jennifer, did you want to say something?
I was just going to make the point, Senator, that we are very supportive of this scheme because we think it will create a more liquid and integrity-based market, which is obviously we called in our work for the safeguard mechanism to drive that. And what we, I think, feel fairly strongly is we've got to get this done, get this legislation done, and then obviously as part of Professor Chubb's review, work through constantly improving the integrity of that market.
And then just to your follow-on question, Senator, as to do we believe any facility should be allowed to use 100% credits to hit their reductions under the baseline 4.9%? The way in which many facilities will decarbonise is not going to be a straight line falling at 4.9% per annum, but will be a step function. And you know, I think, again, Mr. Walton sort of spoke to this, that in some cases the technology is not available today. In some cases the technology is available, but the time frame to which it can be implemented and deployed is years in the making. And that's just what it is when you're talking about, you know, hundreds of millions to multiple billions of dollars of investment that will be made across these 215 facilities. And so there might be time periods where, for example, for a period of years, high degrees of the target needs to be met by offsets. But we do not believe that any organisation will be able to sustain using offsets exclusively for their decarbonisation program, nor from our conversations with members have we met members that have any intention of doing that.
Because, of course, you know, the whole point of this is to actually reduce pollution, not just, you know, pay somebody else so that you don't have to do it yourself, right?
Absolutely. And that is the mindset that, again, the conversations we've had with the members, you know, and 44 of the 215 facilities under the safeguard mechanisms are run by / owned by BCA members. And the conversations we've had with them, that's absolutely the first priority.
The
I think
75.
the other point Senator, the other point we make in our opening statement is that, and we think it's a very important point, is that the offsets are not a free ride. So, we've given you a case study of a steel company, and that would be around $375 million leading to 2030. Now, that's the whole point of the safeguard mechanism, is to create that price incentive for people to to think through their capital allocation, to think through their long-term assets, to think through the carbon intensity of their traded goods and services. So we do not believe that the offsets are a free ride and that ACCUs are a free ride.
What do you think then, Ms Westacott, about claims within, from Woodside themselves, that they've already got enough offsets up their sleeve for future expansion? I mean, good for some if you're rolling in massive billions of dollars worth of profit, I guess.
I think Mr. Walton kind of answered this question very well. I think what we want to see is a very simple system, a system available to all participants, and a system that's not carved out in the way that you're proposing. And companies will make those investment decisions based on the relative cost of capital of emissions reduction versus the offsetting. And to your point, the whole point of this is to reduce emissions. So I think our view is that, the same as Mr. Walton's, that this needs to be available to all participants in the system. And to Mr. Reid's point, it has been calibrated, assuming new entrants into the market. Mr. Reid, did you want to add anything to that?
No, the only thing I would say, Senator, is I also think part of what we want to do is encourage businesses to plan and to act early. And I'm unaware of the exact place that Woodside's at, and it sounds like they're going to be in front of you this afternoon. So I'll leave it to them to comment on the specifics for their company. But surely part of what we want to do is to create a framework that creates certainty so that we can drive early action. And if Woodside had been ahead of others in preparing for the fact that there is building effectively a carbon cost into their planning, then I think that is something that we should be encouraging and encouraging more of.
But ultimately, it means their emissions go up. This is what's ridiculous about this situation, right? We've actually got to be decreasing, not just pretending on paper.
But from the proposition that you put to me is that they have actually been buying ACCUs and therefore supporting decarbonisation and carbon being extracted from the atmosphere in other places. And that's the entire concept of a net zero and a net zero economy.
Except that there's serious questions over the integrity of a lot of these ACCUs. That was the original, where we started in this conversation. What's BCA's position in relation to using international offsets?
Do you want to take that one, Jennifer, or should I just keep going?
No, you keep going.
So, Senator, we believe in free markets and we believe in international trade, and we therefore believe that the most efficient way for the global economy to decarbonise is to include trade, i.e. international carbon credits, to be available. However, we also believe that that should be done at a point in time when the integrity of those credits can be assured. So we think that integrity comes number one, but behind that, as soon as there's confidence in the integrity of credits, then we believe that international offsets should be available to Australian businesses.
Do you have any data or information about the number of your members who are investing in on-site abatement rather than just paying somebody else to make their books look better?
I don't have a specific number for you.
But we can take it on notice and
That would be helpful.
that.
That would be helpful because I think, at the end of the day, we have to see that facilities are genuinely making on-site abatement.
Yeah, and Senator, I assume you'd like that to the 44 facilities that are covered under the safeguard mechanism that are our members?
Yes, thank you. Thanks.
Yep. So
Thanks, Chair.
Thank you. We will now go to Senator Hughes.
Thank you, Chair. If I can just ask, how many of the 215 facilities does the BCA represent?
it's 44 of the facilities, which is made up of 17 different companies.
Mm-hmm. Okay.
And perhaps on that, Senator, I might take the moment just to note, one of the unique things about the BCA, although potentially not significantly different than the AWU, is those members cover all parts of the economy. So they will be in terms of energy extraction, energy production, energy retailing. They are manufacturers. They are in the minerals resources. So it really does cover all of the gamut from businesses that are both covered by the safeguard mechanism, but also ultimately some of the largest consumers downstream of the products that those companies create.
So we've heard concerns across mining, steel, cement and aluminium sectors concerned about the policy and potential business closures and job losses. Have you done any modelling with that, or any of those industries expressed concerns to you with regards to the policy?
Well, we put out a very major piece of work in 2021, Senator, and we had consulted extensively across that membership that Mr Reid has just gone through. We'd consulted on two things: one, the interim target, and secondly, the safeguard mechanism. And in preparing our submission to the government, we consulted extensively. We've not heard those concerns from our members. People believe that it's not going to be it's not like it's not a hard thing to do to meet the safeguard obligations, but they believe that the way it's been designed is realistic. It does give the flexibility that companies want, and obviously there's also $600 million transition fund for companies making those transitions. So we've not heard that. I mean, obviously these things all relate on how this rolls out, and the sooner that we can get on with this, which is why we're so supportive of the legislation, the better. And again, that policy certainty is what companies tell us mostly, that they want to see the certainty. They think that broadly the design is sensible. They want the flexibility that is embedded in it. But for them, the most important thing is that we get momentum, we take action, and they get some policy certainty.
I'm a little bit concerned that you said that you haven't heard any of their concerns, considering a number of them have been public. We heard concerns this morning from the MCA. BlueScope has also voiced significant concerns. You just mentioned the $600 million transition fund, whereas we just heard from the AWU that they think that needs to be 3 to 4 times that amount. These are significant issues, and I'm just concerned that you're saying that you haven't heard any of them.
No, it's not that people are claiming the sorts of things that you're claiming in terms of mass job losses. Everyone thinks this is a hard thing to do, but what people have said to us is that the way it's designed recognises the degree of difficulty, recognises the degree of change. We think the $600 million is a starting point, and the government needs to be open to increasing that amount over time, particularly when they do the review. So it's not that it's not without its challenges, it's just that people aren't talking to us about that they can't make the scheme work, is the point I was trying to make.
So do you
If I could, Senator, I might just add something to Ms Westcott's response there. Whenever a new policy is put in place, business will have concern, and it's the way in which it's rolled out, it's the time frame in which it's rolled out. It's, there are risk factors when any external policy changes the business environment. What we've heard on balance from our members is that by moving forward, there is a path to having certainty that they have not had over the past decade. And it is that certainty that will drive investment. So, of course, members want to be actively engaged in conversations with the government about the specific implementations. And, you know, there are scenarios there that would be more concerning versus some that would be less concerning. But on balance, we continue to hear from our members that the best path forward is to support the legislation that is in front of the Parliament, that they believe that it will lead to a better than the counterfactual, which is that we go back to having significant uncertainty as to how Australia will decarbonise, and not decarbonising is not an option in their worlds. They do not believe that they will be attractive in global financial markets. They believe there'll be more risk to their organisations if we as a nation and them as businesses don't decarbonise. So there are risks and concerns on both sides of that, but we continue to hear strong support for the passage of this bill in respect to the safeguard mechanism.
Has BCA undertaken any modelling with regards to the future demand for carbon credits, and in particular whether or not that supply can keep up with this?
Jennifer, you might know better than me, but I don't think we have a specific modelled forecast.
No, we don't, no.
So you're not sure whether or not demand will outstrip supply with regards to the carbon credits going forward?
Well, as Mr Walton said, as we've said, the government has factored in new entrants and the scheme is pretty carefully calibrated, but we haven't undertaken our own detailed modelling of demand.
Okay.
I would, however, Senator, highlight one of the things that Professor Chubb put in his report just in regard to the approval of new methods. And I do think that that is particularly important. You know, the Senator Hanson-Young questioned sort of the integrity of some of the existing methods. I think there are significant opportunities for new methods that will allow for genuine carbon reduction, particularly, as Professor Chubb said, through photosynthesis. And, you know, and his reports in his recommendations, he was very clear on where he thought the new opportunity was there. And we would encourage the government to absolutely prioritise that and prioritise those new methods, because ultimately supply of high quality, high integrity offsets is absolutely critical. And our members would speak with one voice in terms of the government prioritising work to ensure that supply remains plentiful.
It just seems a bit concerning that, and you acknowledged yourselves that these are really important parts of this scheme, making sure that they're available, and they're going to obviously have a very big impact on whether businesses are able to continue to operate in Australia, and business decisions are being made where they're going to invest in future. And I would have thought there might have been some more analysis done on that. I might leave it there, Chair.
Thank you, Senator Hughes. Senator Payman.
Thank you, Chair. I'd like to just ask, can you please step out to the committee what are the benefits of the market-based incentives to reduce emissions as opposed to other alternatives?
Certainly, Senator. Let me try and approach that at the highest possible level. In essence, what it assures is that we do decarbonise and we do it in the most economically efficient manner. What it means is that is the lowest cost to the economy, that it creates the most possible jobs through that process of decarbonisation. And particularly, you know, if you think about the downside risks in that, and again, Mr. Walton spent a good amount of time talking through these, a market mechanism that has flexibility for on-ramps for different industries and different businesses where the technology may not exist, and one that uses offsets to allow that optimisation between both the 215 facilities that are covered as well as other decarbonisation opportunities across the broader economy. So, you know, it gets the job done and it does it in the economically most efficient way that leaves Australia in a position where it's likely to be a more prosperous nation moving forward.
And so, among many functions, the primary purpose of the bill is to allow for crediting below a facility's baseline. Why would you say that's an important reform for the business?
Well, that goes back to my response to one of Senator Hanson-Young's questions about the fact that decarbonisation won't happen at any facility at 4.9% per annum compounding every year, year on year. It will actually happen through a step function, and crediting below the baseline encourages companies, therefore, to invest earlier and get below their baseline, because part of their business case for doing that will be the value of those credits that are created. And if to the Senator Hughes's questions, that's particularly important so that there is a stable and large supply of credits for those businesses where it's harder to abate. So crediting below the baseline is absolutely fundamental to this and fundamental to the support of businesses getting behind the safeguard mechanism.
And so then would you say that bipartisan support is important to have a reform like this?
Senator, that feels like a political question, and you're a politician and I am a simple business person. So I might leave that for you to answer. I would say from a business community's perspective, whenever we get bipartisan support, we are very happy. But yeah, that feels like it's more in your territory than mine.
Thank you. That's all from me, Chair.
Great. Thank you very much for joining us this morning, this afternoon. We do appreciate your patience and your time. That concludes our questions. And so we will now suspend for the lunch break and we will come back at 1:15. Thank you. Okay, I would now like to officially welcome the representatives from INPEX, and I understand that you have been provided with information on parliamentary privilege, protection of witnesses and evidence.
That's correct. That's correct,
Yes?
Senator.
Excellent. And for the Hansard record, can you please just state your name and the capacity in which you're appearing before us today?
Yes, thank you. My name is Cameron McPhee. I'm appearing on behalf of INPEX Australia and I'm the General Manager of Commercial.
Thank you.
Thank you, Senator. Yes, it's John Williams, INPEX's Government Affairs and Approvals Manager, also with, yes, INPEX Australia.
Excellent. Thank you. We will now just go straight to questions. We've received your opening statement and it's been tabled. We'll go straight to Senator Hughes.
Okay.
Or do you want me to come back to you?
Yes, please.
Senator Pocock, you ready to go?
Sure.
We'll go to Senator Pocock.
Thank you very much for your time this afternoon. I'm not sure if you saw any of yesterday, but one of the topics was around methane, fugitive methane emissions, and the Environmental Defenders Fund was talking about the fact that studies are showing that the reported versus actual fugitive methane emissions, that there is a gap. I'm interested if you would be happy to transition to greater monitoring, particularly at site monitoring, in accordance with the Oil and Gas Methane Partnership, or OGMP 2.0.
Thank you for that question, Senator. Yes, I did actually hear that yesterday. I note that it was referencing both coal and gas. Can't really speak for the coal side, but certainly in terms of gas, I'd be very surprised if there was a significant discrepancy there, given that the CSIRO did some studies a few years ago specifically on some of the onshore methane leakage rates from onshore. Our project is, of course, an offshore project and then the onshore LNG trains. We currently have quite low levels of methane. It is, I think the OG, the standard that was kind of set nationally is 0.2% methane. We're at currently about 0.05% methane. Now, that is based on emissions factors, but we are also commencing a leak detection and repair program to verify those. We've started that this year. We've completed that work on the two offshore facilities that are components of the ICFAS facility overall. And that has shown, that has given us quite a lot of confidence that the 0.05% that we're reporting so far is actually quite conservative. We're seeing lower leakage rates than would be consistent with those emissions factors. And we're aware of the the OMPG 2.0 standard, and it is something that we're looking at, and I think we would be considering, joining that formally in the not too distant future.
Okay, thank you. So, to clarify, you have started at-site monitoring of methane?
We have. Yeah, yeah. So we've completed the FPSO and CPF central processing facility offshore, and we're doing the LNG trains onshore later this year.
Mm-hmm. Great. Okay. Thank you. Thank you, Mr. McPhee. One of the other things that I guess this hearing has been grappling with is the role of offsets and the debate around offsets. And I'd like to talk about a shipment from ICFAS to China in 2020. It was hailed as a carbon neutral LNG shipment by Total Energies, but concerns have been raised that at the same time as the shipment, large quantities of natural gas were being flared, and these concerns have been backed from NOPSEMA and analysis from British firm Capterio. And to quote the CEO of Capterio, "I was certainly amazed to see carbon neutral LNG being shipped from a facility that flared so much natural gas." I've just got a couple of questions about this. Did the claim that the shipment was carbon neutral include the significant flaring?
So I'm aware of that cargo, but it's not sold as it wasn't sold as a carbon neutral cargo from ICFAS LNG. It was sold as a cargo to Total Energies, and it was then a matter for them how how they accounted for. They would have been aware of all of the ICFAS GHG emissions, but it was a matter for them how they accounted for that in their carbon neutral calculation. Since that time, there are a couple of points I'd make. We did have some issues with offshore equipment in the early startup phases of the ICFAS project, so those have been rectified now. We do have stable operations of both flash gas recovery and off-gas recovery on the two facilities offshore. So we're in a very different situation in terms of flaring performance today and the past period since 2020. Mm-hmm. Also, we have since developed a methodology, if you like, a detailed methodology aligned with the ENGA reporting to break down and allocate our emissions by product for ICFAS, which we provide that information to our customers. Mm-hmm. So if our customers in turn on-sell, at least for the ICFAS portion of emissions, mm-hmm. They get we can provide certification of what those emissions would be based on our over the previous relevant 12 months. Mm-hmm. So actually the way we're doing that is once we have a finalised ENGA report in October, mm-hmm. We can then use that for the following 12 months from November to November. So that's the way we're doing that in future. So there'll always be alignment between our reported emissions and how those emissions are allocated to specific cargoes.
Okay. And so in terms of being able to, Total being able to claim carbon neutral, did they contact you to get some data on the flaring so that could inform their claim? Or how did that sort of handover process work?
I think we'd have to take on notice the details of that, but Total are a joint venture participant. They are privy to all of our emissions data, so they would have had that even without necessarily making a special request for additional data.
Okay. So you would stand by the claim that it was carbon neutral?
Well, I can't stand by the claim of another company, but you know, we certainly report all our emissions fully and fairly in accordance with the ENGA measurement determination and the ENGA Act. And yeah, it's really a question for Total.
Okay. And thank you, Mr. McPhee. Just to finish up on my first question, you said that OGMP 2.0 was something that was being considered. I understand Shell and a few other majors have already implemented it. Like, how far down that path are you if you're already claiming that you're sort of doing it already or beating the standard?
Indeed. So we are, ICFIS is a large portion of the INPEX Corporation's operations, but it's a corporate decision to be made by INPEX Corporation. From an ICFIS point of view, we're very supportive of it, and I know it's under active consideration in Tokyo as to moving the company and signing up the company to that standard. But I can't give a definite time frame. I could get some more information and provide that on notice, if you like.
Okay. Thank you. Thank you, Jeff.
Good. Thank you. Senator Hughes.
Thank you, Chair. If you could outline for us, please, any plans that are currently underway to reduce emissions at the ICFIS LNG facility and whether or not those plans are running on time?
Thank you, Senator. Yes, we have a pretty comprehensive plan now mapped out to 20. Sorry, the lights just gone out. Again. So it's really starting with an operational excellence program, which is really a focus for this year. And we've recently established a steering committee, and we're progressing a number of initiatives there. The biggest thing that we can do, though, between now and 2030 is the implementation of CCS. So that is something we've been working on for a number of years now, but most recently, last year, in fact, we received an award of a GHG acreage permit in the Patrol Sub-Basin, part of the Bonaparte Basin, and we're actively looking to progress that CCS project as soon as possible. We were planning to conduct 3D seismic and appraisal drilling of 2 appraisal wells in support of that project this year. And there have been some delays recently as a result of environmental approvals, which you may be aware of. The Tipper case has led to some delays in environmental approvals. So that has unfortunately impacted the timing of activity this year. We're still hopeful to move that forward as soon as and as expeditiously as possible. But that does risk at the back end pushing back the date that we could implement CCS.
So
that's probably the most material. Then there's also plans to progress.
Mr. McPhee, pushing back how many years?
Sorry, I didn't say a number of years. I said at the back end of this decade, there's a potential that CCS could be pushed back by, say, 1 year as a result of environmental delays indicatively. Environmental delays.
that's right. Were you continuing, Mr. McPhee, or?
In terms of other decarbonisation plans, I would highlight that we do plan to implement and connect to renewable energies to the greatest extent possible. So we've got a plan to execute a solar farm inside the Ichthys facility boundaries in Darwin and a battery storage system by around the end of next year. And then in the medium term, we're looking at a stepwise introduction of renewable power into the Ichthys facility, which requires a grid connection. Today, we're essentially 100% self-generated electricity, and we're bigger than the Darwin Katherine integrated system, which is the local grid. So there's quite a bit of study and planning work to be done to look at integrating to the grid and then enabling that greater use of renewable power in the Darwin facility. So that's also on the cards.
So will that mean that that Ichthys will be required to purchase carbon credits to meet its annual emissions reduction targets, or will
Yes,
without the CCS, or will the renewables help?
The renewables will help, but I would say it's highly likely that we will need access to credits in this decade to 2030. SMCs and or ACCUs, with moving as fast as we possibly can with actual decarbonisation. That is our plan. We're not planning on just relying on offsets, but we will certainly need offsets to cover the timing. So we just can't implement it quick enough.
Have you had a look at what the cost to the business is going to be per year?
We have. Look, it really depends on what sort of carbon price assumptions you assume. But if you take the $75 a tonne cap and multiply that by, say, 2.5 million tonnes in 2029 or something, there's it's quite significant potential costs. Approaching 200 million in a year. For carbon credit costs. Now, of course, the implementation of CCS is not a small investment either. A project that in Australian dollar terms is of the order of about $2 billion, give or take. So these are very large investments, but of course they also can achieve very significant emissions reductions.
And I just add to Mr. McPhee's comments that carbon capture and storage is, the most effective way for us as LNG operators to reduce our greenhouse gas emissions, and that will make a significant difference and a significant contribution to the Australian government meeting its commitment of 43% reductions by 2030. So we believe that carbon capture and storage has got that significant role to play as part of Australia meeting its climate change targets.
So that $200 million per year cost, roundabout, has this had any impact on your business plans and particularly looking at future investments within Australia?
Well, it would be just one of many considerations for future investments. Certainly, there is an advantage in having, policy stability, regulatory stability, is one of the things that we do value. We are supportive generally of a safeguard mechanism that has declining baselines and provides a degree of certainty. Of course, we prefer that the decline rate to 2030 was not as steep as it is. But certainly it also says to us that we do need to implement, greenhouse gas emissions reductions as soon as we possibly can.
That's all from me, Chair. Thank you.
Thank you. Senator Hanson-Young.
Thank you. What future plans does INPEX have for new projects over the next decade?
So INPEX does have an aspiration to add a third train at Darwin by around 2030, maybe it's into the early 2030s. That's on the record as an aspiration by INPEX Corporation to do that. Of course, it depends on many factors, and we're a long way from an investment decision on that. But I would say, I understand where that question is coming from in a sense. The concern around potential increases in greenhouse gas emissions from such expansion. If we were implementing a new project for a new train around that time frame, we would be designing it in a way that was ready for zero, absolute zero emissions to the maximum extent possible from the outset. So it would be fully utilising CCS for any native CO2, and it would be a different design of LNG train that incorporates electrification within the train itself, so that that does provide the opportunity for firmed renewables to the maximum extent possible to eliminate those kind of emissions from gas turbines.
Yeah, and in addition, I guess we have an investment roadmap, Senator, with a commitment to spend at least $12 billion Australian in the next 10 years on five net zero businesses, which include hydrogen, ammonia, carbon capture and storage, as Mr. McPhee's outlined, renewable energy and carbon recycling, as well as forest conservation projects, which we currently are embarking on here in Australia right now. So we have got firm commitments as well to meet net zero by 2050, as well as interim targets.
I mean, just to build on that.
Hang on a sec. Carbon recycling? What do you mean by carbon recycling?
Carbon recycling is probably less relevant to us in Australia. It's certainly something that Inpex Corporation are looking at, which is basically taking CO2, reconstituting it to methane. I think it's more relevant in the Japanese context than it is within Australia, I think.
Sounds like a bit of greenwashing to me. Could I ask, so this $12 billion investment over the next decade that Mr. Williams has just nominated, is any of that impacted by the safeguard mechanism?
CCS will make a difference.
Yeah. So, I mean, the safeguard mechanism will be one of a number of policies that will be taken into account as we look at investments. But CCS is probably, just to build on what CCS provides as a foundation for future growth and investment opportunities in Australia. We do see a role for further decarbonised gas, such as hydrogen made from natural gas using CCS. So before we can pursue that type of project, we need to have CCS firmly established.
How about just making green hydrogen? Why do you need to be spending all this money on dirty hydrogen?
Thank you, Senator. I understand the appeal of that, and
well, the appeal is less pollution, right? And that's what we're all here to discuss.
So with blue hydrogen can also be similarly low carbon intensity. The advantage of blue hydrogen is that it can be produced at scale at a quarter or a fifth of the cost of green hydrogen today. So the costs of green hydrogen, whilst they will come down over time, we see the potential for blue hydrogen to really help build out the supply chain for hydrogen between producing countries like Australia and consuming countries in the Asian region. Doing that with blue hydrogen first to build the scale. And if you're using natural gas combined with CCS and renewable power to the maximum extent to do the compression for CCS, for example, the carbon intensity of that is very, very low. So if we're talking about maximising the ability to lower emissions globally, which is really the goal, by using whatever technology is most effective at the time, and most efficient to reduce those, we will get a better result. So we're not against green hydrogen at all. We're actually technology neutral when it comes to that, but we would see blue hydrogen having a significant role to play.
All right. What new gas fields are going to backfill your LNG terminal in the Darwin Harbour?
That's unknown at this point. There are a number of options being examined in terms of exploring additional acreage, or there are a number of gas discoveries generally in the region, but we don't necessarily
What's you must be preparing for some type of backfill, whether this is from the Beetaloo Basin, elsewhere. What time frame are you looking at?
We're looking at probably the early to mid 2030s before that's required. So we have existing capacity from our current reservoirs out until at least 2032, possibly longer. So it's really what comes behind that. So I don't think any of those decisions will be taken before probably at least 2025.
2025. Okay.
Yeah.
And is Empire Energy, for example, their exploration in the Beetaloo Basin, is that something that's on your list as options?
I think those options are quite a way down the list at the moment. We wouldn't see onshore gas. It's in there as potential, but it's not something that's actively really being pursued as an option for backfill.
Okay.
I think it's quite unlikely to be relevant in the time frame that we're.
What about Santos? What about Santos's operations?
I'm sorry, I wouldn't be able to comment on Santos's operations.
No, in terms of you're saying that you've got a number of options in terms of capacity to put gas through your terminal over the next decade. I'm trying to work out where you're getting it from.
So we are looking at additional exploration in the offshore regions, north and west of Darwin, and out into the Browse Basin. So there are various gas discoveries that have already been made that potentially could tie into existing ICFIS facilities offshore, and some of those we have an interest in today, and others we will require some sort of transactions to occur to open up those opportunities. So those are things that are that will play out over the next couple of years.
Okay. Is your terminal under capacity at the moment?
So what do you mean by under capacity? No.
Well, have you got? So it's operating at full capacity?
Correct. Yes, it is operating at full capacity.
So it's as efficient as it can be right now, is it?
Broadly speaking, yes. There is always the ability to. We're a relatively young project, so there is always the opportunity to improve, reliability and efficiency here and there. There are a number of minor projects which will be pursued to improve energy efficiency, particularly. We have an operational excellence program being kicked off this year. And stable operations really provide the best performance in terms of emissions and energy efficiency anyhow. If there are operational upsets, trips, etc., that does tend to result in some additional flaring whilst recovery occurs. So, operating stably is the best actually for not just production, but is the best for mission.
Are you intending to set up new facilities in the new Middle Arm hub?
We don't currently have any plans for additional facilities in the Middle Arm hub, but the Middle Arm hub may may well use the CCS facilities that are being forwarded by a successful Bonaparte CCS program, which we're pursuing. That there may be a linkage there. I think if indeed Middle Arm brings large-scale firmed renewables into place, we are potentially a customer of that. And I think longer term, there may be a linkage with blue hydrogen, for example. There's no immediate projects there that we're involved in.
Okay. You did mention the $12 billion worth of investment over the next decade. If you could, on notice, give us a breakdown of what those elements were. Mr. Williams, you went through, you rattled off a few of them already. I'd like a bit of a sense of what type of quantum to each category would be helpful. Thank you.
Certainly can do, Senator.
Thank you. Thanks, Chair.
Thank you. Can I just ask, you provided a list of the kind of projects that you've been working on. Do you have a sense of what percentage emissions reduction you're looking at from the totality of what you're doing?
So, firstly, I would say CCS for us is of the order of 40% reduction, so very, very significant. You know, the use of renewable electricity is probably in total around about another 10% or so across the facility as a whole, maybe a little more. And then probably 15% or so once we are able to utilise hydrogen for our major gas turbines. So that's probably in the 2030s, but there's another significant step down that we could achieve 2030. So the technology is not quite there yet for the use of 100% use of hydrogen in our major gas turbines that are in the onshore LNG trains. But that is actively being worked on by the major turbo machinery providers like GE.
Okay, so that's 55%, and you're saying that's in the 2030s?
So we would have CCS in place by 2030 and renewable power similar sort of time frame. So, and then in the 2030s, I would say for the hydrogen, additional 15%, sometime in the 2030s.
Okay.
So overall, you know, we'd be getting up to, and then there's energy efficiency activities, the operational excellence work, which is probably another few percent as well. So that will be ongoing. So in total, we'd be looking at something like 75% potential by the 2030s.
So 75, I'm just trying to be clear, 75% for just the CCS and the renewables, or for all the other things that you listed as well?
All the things we listed, yes.
So the totality would be 75?
Yes. Yeah, we can see a pathway to around that level today. In terms of a net zero trajectory, we still have a gap at the end where we don't have technologies for that. For example, the offshore facilities are very, very remote. They represent approximately 20% of our emissions today. We don't have a clear pathway other than the energy efficiency work. We really don't have a clear pathway to a technology today that works for the offshore emissions.
Thank you. And do you have any plans for electrification?
Yes, so we already have...
or an expansion of your electrification?
Yes, so as I mentioned before, we do have a power plant inside the Ichthys facility, which is kind of quite a bit bigger than the Darwin grid at the moment. So that power plant, we would look to transition that to renewable power over time, starting with a more modest investment in solar and battery inside the fence, then pursuing grid connection and progressively building out, firm renewables to power that. What we can't do, unfortunately, because of the ICTIS LNG trains design, we can't replace the existing what we call frame 7 gas turbines, very, very large pieces of equipment. We can't, they are direct gas-fired turbines. There are no electric motors in the world anywhere near big enough to replace those. We can't electrify those within, realistically within the existing trains. They're a very inherent feature of the design of our trains. Of course, if we're building a new train, we can electrify those trains. We can't get to a fully electrified train for our existing trains. So that's why the use of hydrogen to fire those gas turbines in the future is an opportunity for that final big step down that we're looking at, where the technology is getting closer. It's not quite there yet, and clearly we need a source of hydrogen in Darwin at scale to enable that. But that bit can't really be electrified, but it can be converted to hydrogen.
So the third train that you were talking about, that one could be, because it's not there yet? Or would it need to fit in with the other two?
No, correct. It would be a different design. It would certainly be a different design. So it would be electrified. It would be what's called an electrified train. It would be electrified from the outset. That would be the design.
Thank you very much. Any more questions, anyone? No?
A couple.
Sure, go.
Happy to go. So I just had a few more questions around the price of ACCUs and whether you have done any modelling around what you, as the safeguards currently propose, what you expect the price of ACCUs to do over the next period till 2030.
Well, it's not really our core area of expertise to sort of model that. We run scenarios with different pricing, but we're not really equipped to model the ACCU market as a whole and supply and demand into that. We rely on other external. There are a number of companies out there that are modelling that kind of thing with different outcomes. We are of course wanting to make sure we can handle the high price scenarios. We certainly wouldn't expect a low price scenario. I think $17 was quoted yesterday. I couldn't believe that someone thinks that we have $17 a tonne.
Okay, so in that sort of scenario planning, are you expecting it to hit $75?
We think that's quite possible.
Yeah. Okay.
It's quite possible.
And do you have a timeline in mind in your scenarios that you've looked at?
Well, it's kind of later in the decade. We would expect, or mid-decade to late decade would probably be the crunch point. Probably wouldn't expect it to happen at the very start of the reformed safeguard mechanism operation, but it's not really, it's a supply and demand question, and there's a lot of variables, and we speculate on that.
Thank you. And just following up on Senator Grogan's question, where you said that you had plans for some solar and batteries inside the fence. I'm just wondering what percentage of electricity that will provide to your facility of your use.
It is, yes, it is quite modest. So the solar, it's limited by the space we have available, 15 megawatts of solar. Typically, we're running about 220 megawatts of power through our power plant, so that's a relatively small amount. The battery itself is 12 megawatt hours power, but what that enables is for one of our gas turbines to be not on spinning reserve. So it enables the existing power plant to run in a more efficient way, and thereby reduce emissions. So it's sort of the bigger part of it is actually the battery, probably, than the additional power generated, and being able to ensure that those gas turbines that we have are operating in a more efficient manner.
Okay, so 15 out of 220. Given solar and batteries are technology we have right now to displace fossil fuel use, how many megawatts of solar could you be using at your plant to offset the use of gas to generate electricity?
Well, if the, I mean, the challenge is really the having firmed renewables. But if we had firmed renewables and we had a grid connection, potentially all of it, but it's not, there's a huge cost in doing that, and it's not necessarily economic to go there straight away. There's sort of some natural break points in terms of the size of the initial connection and so forth. But if some of the proposed mega solar projects actually proceed and go forward, then we would be, an economic value. We would be certainly a very.
So as it stands, you're thinking it would be economic to have a sort of offtake agreement, but not necessarily to be a project proponent yourself and go and invest in the renewables that you'd need.
There's still a possibility of that occurring as well. So all scenarios are possible. But from the perspective that sits probably outside the ICFAS project as it stands. We do have a new energy business established within Australia that team are looking at opportunities across the renewables space, not just associated with ICFAS, but right across Australia. So if that team decides to invest in such a project, then we would be a customer of that in a sense.
The new energy business, is that renewables, or do you expect that there's potential that it could be captured under Safeguard at some point in the future?
So that new energy business is outside of it should be outside of the Safeguard mechanism. That won't be resulting in any net emissions that would trigger the thresholds for Safeguard. So it is renewables based. It's also our first significant project is called Wheatbelt Connect. Is a project partnering with farmers in the wheatbelt of Western Australia to plant a portion of marginal farmland, maybe up to 10%, in mallee trees and generate carbon credits from that. That's phase one, and the partnership, this is all public information, partnership is with ANZ and with Qantas, and that project intends to look at a phase two, potentially for generating sustainable aviation fuel as a downstream operation from those stations. So that's the sort of thing they're looking at the moment. They're also looking at opportunities for traditional renewables and hydrogen and so forth in the future as well.
Okay. Thank you very much. Thank you, Chair.
Thank you. Thank you very much for your time today. We do appreciate it. And we will now move on to our next session, for which our table is not big enough. So we'll be playing a little bit of estimates.
Senator, could we make one final statement?
Yes, if you make it quick.
Yes, just quickly, just to say that the importance of gas in the energy mix, we still believe it's a critical part of the energy mix. And just last week, the Australian Energy Market Operator stated that there's going to be concerns about reliability and the electricity reliability in the grid in the next 10 years.
Thank you, Mr. Williams. If you would like to put in a further submission or an additional submission, then please feel free.
Quick follow-up on that point, Mr. Williams. What percentage of your gas is for domestic consumption versus export?
Essentially, we are an export project today. The ICFAS project is pretty much.
Okay.
Probably should have kept your comment to yourself there, mate.
Yeah.
Okay. Thank you very much.
Okay, I'd now like to welcome representatives from the Department of Climate Change, Energy, the Environment and Water, the Department of Industry, Science and Resources, the Clean Energy Regulator, and the Department of Infrastructure, Transport, Regional Development, Communication and the Arts. I remind senators and the Senate that the Senate has resolved an officer of a department of the Commonwealth or of a state shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions and not matters of policy, and does not preclude questions asking for explanations or factual questions about when and how policies were adopted. Officers of the department are also reminded that any claim that it would be contrary to the public interest to answer a question must be made by a minister and should be accompanied by a statement setting out the basis for the claim. Now, I was going to say for the Hansard record, can you please state your name and your appearance, but I'm not going to do that. I'm just going to ask that as you speak for the first time that you provide your name and the capacity in which you're here. I think that's probably a little tidier. Okay. Senator Hanson-Young, would you like to go first?
Thank you. Your emissions projections report lists 7 new gas projects that are going to start before 2030, including Beetaloo, Narrabri, Scarborough, Pluto, Browse, Crux, and a range of other SCG fields in Queensland. I'm interested to know what actual pollution from coal and gas will go up over this period. Anyone?
So, Mel Ford. I'm the Acting Head of Emissions Division at the Department of Climate Change, Energy, the Environment and Water. So, as you said, in our emissions projections, we project forward we project forward the emissions associated with fossil fuel projects to meet demand for those goods. And the emissions are provided in the projections report by sector. I think it's important to understand that there's 2 scenarios in the emissions projections. The first is the baseline scenario, which was based on existing policies that were in place at the time. And then there was a second scenario called with additional measures, which incorporated the impacts of the safeguard mechanism and the 82% renewable electricity target.
So let's go scenario 1, the baseline scenario. How much does that suggest pollution is going to grow? Actual pollution, not offset pollution, actual pollution.
So would you like that by sector? Or
yes, thank you.
Okay, I'm sorry, I'm just trying to find the numbers. Okay. So in our emissions projections report, we have total emissions in Australia in 2020 being at 498 million tonnes of CO2 equivalent, and they are projected to decline under the baseline emissions projection to 422 million tonnes of CO2 equivalent. That's at the economy-wide level.
And how much pollution from coal and gas?
So that's allocated to different sectors, IPCC sectors. In Table 5, for example, we have that split into fugitive emissions, which might be an area of interest. So that's projected to increase by 50. That's projected to increase, from 53 million tonnes in 2020 to 55 million tonnes in 2030 under the baseline scenario.
So can you just repeat that again, please?
So for fugitive emissions, the emissions are projected to increase from 53 million tonnes of CO2 equivalent in 2020 to 55 million tonnes of CO2 equivalent in 2030.
And that's because there's new projects coming on board?
So that's driven by a range of factors, including emissions from existing projects and new projects.
Is there any other sectors where pollution is going up?
Let me just... okay, so in the transport sector, emissions are projected to increase from 93 million tonnes in 2020 to 103 million tonnes in 2030. Again, this is in the baseline scenario. And the other sectors are projected to decline.
Yeah. So fugitive emissions are going up. And will the safeguard mechanism stop any of these new projects or the expansion that is going to push these emissions higher?
Thanks, Senator. Edwina Johnson, Assistant Secretary, Safeguard Mechanism Task Force. The Safeguard Mechanism does look at net emissions, and so I can give you the figures of the change in terms of the baseline change compared to without reforms, if you'd like. But the purpose of the Safeguard Mechanism is not to prevent new projects. I can talk you through the proposed arrangements for new entrants and also the associated emissions and then net emissions in terms of baselines, if you'd like.
Okay.
So in terms of emissions from existing and new coal, oil and gas safeguard covered facilities are projected to increase from 73 million tonnes in 2021 to 83 million tonnes in 29-30. And as you're aware, the difference between what Ms Ford just talked you through and what those figures are is the different way that the inventory is put together and the coverage. So that's a projection of 83 million tonnes in 29-30 without reforms from both existing and new coal, oil and gas. With reforms, what's then proposed is that aggregate baselines would reduce from that 83 million tonnes to 53 million tonnes in 29-30. And overall, the cumulative abatement task would be the difference between 562 million tonnes without the reforms to 444 million tonnes aggregate baselines across that period, 23-24 to 29-30. And that's assuming, as proposed in the consultation paper in January, that the Safeguard Mechanism delivers that 28% share of the Australia's emissions reduction task.
And how many of those projects are projected to have to offset, use 100% for offsets?
So, as you're aware, Senator, and as was covered in the previous Senate hearings, the government did undertake analysis of the likely suite of on-site abatement vis-a-vis the domestic offset market. As the Minister representing the Minister for Climate Change and Energy confirmed at that Senate estimates hearing, that analysis is covered by Cabinet in confidence, and that full analysis fed into Cabinet deliberations. There are other public pieces of analysis about the likely use of on-site abatement vis-a-vis offsets. For example, Reputex a couple of weeks ago published a summary of their analysis that indicates up to, I think it was 74% of the emissions task could be delivered through on-site abatement. So there are a range of different analysis on that potential use of on-site abatement versus the use of ACCUs.
Right. So, but our job is to assess whether the plans being put forward by the government are going to do what is needed, whether they're legitimate, whether they're effective, whether they're efficient. And you can't tell me how much this is actually going to drive genuine abatement versus just paying somebody else so that on paper it looks like you're net.
So, Senator, I can talk you through the incentives that are built into the
No, I don't want
reforms.
the incentives. I want the proof.
Well, Senator, as I said, and as was canvassed in that Senate hearing and by the Minister, repping the Minister for Climate Change, that analysis fed into Cabinet deliberations.
Well,
Senator,
with all due respect, I mean, so if the government cannot give us that information, how on earth are we meant to be expected to vote in support of this?
Senator, it's Jo Evans, Deputy Secretary of the Climate Change, Energy, the Environment and Water Department. So we wouldn't agree with the premise of your question, which is that some abatement is better than other abatement. What we are looking for is a policy instrument, and the safeguard has been designed to do it, is to deliver an overall reduction in emissions, and to do that, as you have indicated, in the most efficient and effective way possible. And all of the advice that we have had and all of the analysis that we have done suggests that providing a mechanism for using flexibility, including tradability of credits, is a part of making the instrument efficient and effective. And so we have taken those things into account. And in terms of the specifics, the consultation paper did talk about the proportion in 2030. The projections talks about the proportion in 2030. And if you could just tell me the number again, Edwina.
Yeah, that's right. So it's 9 megatons of what was then 46. So approximately 20% is included in the projections to avoid double counting in that instance.
Yeah, so that was sort of that estimate. And as Ms Johnson has reflected, there are other analyses now available in the public domain that have looked at similar questions to us. And as you're aware, this is a future exercise, so no one knows for sure what the answers are, but you can look at scenarios about what might occur. And the RepuTex modelling is certainly a useful set of scenarios that looks at the potential for on-site abatement versus other sources, and they have quite a range there. And in some cases, they say it could be as much as 75% on-site. In other scenarios, it's somewhat less than that, but it'll be somewhere in that range.
So I just want to be clear, though, Ms Evans, I'm a bit concerned with a statement you've just made, and I'd like to know if this is the official government position, that on-site abatement is considered in this government's view equal or just as good as paying someone to plant some trees so that you can keep burning coal and gas. And isn't the whole point of this whole program designed to incentivise and drive down actual pollution? Not just find a way to offset it on another piece of paper, on this ledger it looks okay, even though we're continuing to pollute.
Senator,
Surely on-site abatement is actually the objective here.
Chair, I didn't hear a question in that last statement.
Surely on-site abatement is the objective here.
The objective of the measure is to deliver a reduction in Australia's greenhouse gas emissions and to have the sectors that are covered by the safeguard mechanism contribute their proportional share to that. It is not a requirement that all of that abatement come directly from the facilities that are covered, because some of these facilities have the most difficult abatement tasks.
Some of them do, and some of them have it a bit easier, and yet they can just pay it away.
Senator Hanson-Young, I would remind you that...
Take our gas and we'll plant a tree for you.
Senator Hanson-Young, I would remind you to pay some respect to the people at the table.
Well,
they are just here to answer questions.
Fair enough, Chair. But I am frustrated.
If we had a minister here, you could knock yourself out.
I am frustrated that we're being asked to inquire into legislation and to look at the accompanying regulations, and yet the government won't give us all of the information and continue to run a line that trust us effectively.
I will pass the call because we're going to go in 10-minute blocks around and around till everyone has got all their questions
just
answered.
on this final line of questioning, Ms Evans, you've said that the objective is to reduce greenhouse gases.
That's right.
So why have we got a safeguard mechanism that will allow actual pollution to go up?
Senator,
because of allowing new and expanding projects.
Senator, as I've explained, and I think Ms Johnson explained before me, the safeguard mechanism, we've certainly, our estimates suggest it will significantly reduce emissions overall, and that will be through a combination of incentivising on-site abatement and through incentivising investment in off-site projects that will genuinely reduce emissions.
But actual pollution from coal and gas is going to increase, isn't it? Putting offsets aside, actual pollution from coal and gas is going to increase. That's the evidence I've just had from Ms Ford.
Yeah, for the 2 million tonnes relative to a 53 million tonne base. That's the current projection in the baseline scenario. I don't know if we have that breakdown for the with additional measures.
Yeah, so in the with additional measures scenario, which was the scenario that included the impact of the safeguard reforms and the 82% renewable electricity target, Australia is projected to be on track to reduce its emissions by 40% on 2005 levels by 2030. So that means that the projected emissions at the economy-wide level are projected to decline from 498 million tonnes in 2020 to 368 million tonnes of carbon dioxide equivalent in 2030.
And what about from the coal and gas sector?
So in the emissions projections, I can provide you with our projections for the electricity sector and for other sectors, but because of the way it was modelled, we do not have the split beyond that.
So coal and gas currently make up half of the existing facilities, or coal makes up half, 93%, 93 of the facilities, don't they?
Sorry.
Senator, so I've got it at coal, oil and gas, and so there were 84 existing fossil fuel
84.
facilities, which you're quite right is around 53%.
So it's about 53%.
Of total emissions.
And you can't tell me how much that pollution's going to be?
So I can tell you that in the electricity sector, under the with additional measures scenario, emissions declined from 172 million tonnes in 2020 to 62 million tonnes in 2030, and in all other sectors, it declines from 326 million tonnes to 307 million tonnes in 2030 under the with additional measures scenario.
And how much pollution will these new 7 projects that you've listed bring in? How much more pollution will they add to the current scenario?
In the baseline scenario, sorry, or the with additional measures scenario?
Well, both.
Okay. So under the with additional measures scenario, I don't have that information here. And when you were talking about the 7...
Can you get that? Can you get that before the day's out?
I can give you the baseline declines with new entrants, if that helps.
I'd like to know how much pollution the government's own documentation shows that there's going to be 7 new gas projects. I'd like to know how many more coal projects there might be too, an expansion of coal projects or expansion of gas projects, and how much more pollution will be put into the atmosphere. I don't understand how you can't tell me these figures.
So, Senator, if I give you the reforms projection, so emissions from new entrants, which includes coal, oil and gas, but excludes backfills and expansions for the reasons we talked about at the other estimates, are projected to cumulatively total 38 megatonnes between 23-24 and 29-30 in the absence of reforms. And the safeguard reforms will reduce aggregate baselines for those same class of facilities to 12 megatonnes over that same period. So that represents that 26 megatonne abatement task that we spoke about at the last estimates period.
I think we're talking in circles now, Chair, so I'm happy to move on and you can come back to me.
Thank you. We'll go to Senator Hughes.
Thank you, Chair. Ms Evans, at Senate estimates on the 13th of February, the department was asked if it had undertaken analysis of the impacts of the reforms around the safeguard mechanism, and we were told that Treasury was undertaking this body of work. So later in the week, we asked Treasury, the Economics Committee, about the modelling, and Mr Luke Yeaman from Treasury said, "We didn't go to broader issues around macroeconomic impacts, jobs, inflationary impacts and so on." So the modelling wasn't undertaken by Treasury. Does this mean that there has been no impact assessment done by the government on these reforms?
Senator, no, and I would need to check exactly what I said, but certainly we did do modelling with Treasury, and the modelling is the same modelling that Ms Johnson has referred to, that was looking at the impact of the safeguard mechanism on the specific facilities and whether, and how that would play out. So my statement then was accurate, but similarly, Mr Yeaman's response is accurate as well in terms of that macroeconomic perspective.
Jobs,
the safeguard is
inflationary
only one,
impacts.
Yeah, so the safeguard is only one of a range of different measures that are playing into the government's Powering Australia plan. And jointly with the Treasury over time, we will be looking at the overall impacts of that and rebuilding the capacity within Treasury to do the kind of modelling that will take into account all of the policies that will serve to reduce Australia's emissions to meet the 43% target and then on to the net zero target by 2050. And that will give consideration to all of those kinds of broader things, which you can't do for one policy in isolation.
So just to be clear, the government hasn't got any clarity or oversight from this mechanism of potential job losses or inflationary pressure from passed on cost increases?
Well, there's all of the flexibility mechanisms that are built into the safeguard are there to prevent there being those kinds of impacts, and Ms Johnson can speak to those in some more detail. So the policy design is to avoid those kinds of negative impacts that you're referring to.
Yeah, that's right, Ms Evans and Senator. The safeguard reforms do back in businesses' existing commitments, so most are already planning for or pricing in transition to net zero. So around 170 of the facilities, so 80% of the facilities are already covered by corporate net zero commitments. A third of publicly listed companies that own safeguard facilities already use an internal carbon price for investment decisions, with over half of these using prices of more than $100 a tonne. As Ms Evans said, the proposed reforms, which, as you know, the consultation, they have been out for consultation for about 7 weeks. That closed on Friday, so the government's carefully considering the feedback. They include things like the proposed hybrid to moderate initial scheme costs, flexible compliance options, including borrowing, multi-year monitoring and the use of domestic offsets. Assistance will also be proposed to be available through Powering the Regions Fund. And as you're aware, Senator, there are also costs from inaction, and so without a credible domestic policy to reduce industrial emissions, Australia's exports may increasingly be subject to import tariffs or carbon border adjustments, and Australian businesses may face increased capital costs if there wasn't such a if there wasn't credible domestic policy.
Mm-hmm. So, I mean, we've had mining this morning flag concerns about the future of their industry. We've had the cement industry very concerned, aluminium and steel, but there's no, you haven't studied what the impact's going to be on those industries or working with them, because they are very concerned. And then we've had the Australian Workers Union as well as the Business Council both say that the $600 million transition fund needs to be 3 or 4 times that amount.
So, Senator, a couple of aspects on that. So one thing we have been consulting very carefully on with the sort of sectors you've just listed is the proposed approach for trade-exposed baseline adjusted facilities. And so throughout the course of the sort of last 7 weeks, we've been talking both to peak bodies and firms covered. We have heard feedback about the metric that allows facilities to access that differential decline, so a lower decline rate. And so that's one of the elements that government has heard and will carefully consider in terms of, as public servants, our advice to government as the reforms are progressed. And certainly in terms of the Powering the Regions Fund, the $600 million allocation is part of the $1.9 billion allocation. As you'll be aware, Senator, the government is also proposing that all safeguard facilities have preferential access to all relevant streams of that $1.9 billion. So that includes things like the industrial decarbonisation stream, as well as the safeguard transformation stream, the funding available under that $1.9 billion for the development of new industries, as well as other key financing programs such as the National Reconstruction Fund. So the $600 million is by no means the only financial assistance that would be available for safeguard facilities. It's just one that's been proposed to be specially allocated to trade-exposed facilities.
Mm-hmm. I just wanted to refer to the front page of the Australian today, outlining fiscal risks associated with the $75 cap per tonne. Are you aware of that report?
I saw the clip from the Australian this morning, yeah, and I saw Mr Wood's evidence at this committee yesterday, if that's what that was based on.
So do you think that's an accurate reflection of any fiscal risks associated with this policy?
So our sense is that there is perhaps a bit of a misunderstanding there in terms of the way in which that cost containment measure will operate. And so what's proposed there is that government, only for safeguard facilities and only if they need them for the purposes of compliance, would provide ACCUs at a price of $75 in 23-24, increasing at CPI plus 2% a year. And so that the 75 will increase over that period to 29-30. And what is proposed is that from the on the 11th of January, an amendment to the Carbon Farming Initiative rule was lodged on the Federal Register of Legislation, and from that point, the Commonwealth is able to accumulate the ACCUs that are delivered under carbon abatement contracts. So what we're looking at there is carbon abatement contracts that have already been entered into by the Commonwealth. So over the period to 2930, 119.6 million ACCUs are due to be delivered to government under those existing contracts.
Sorry, how many?
119.6 million. So given that, from the 12th of January, the Commonwealth's holdings of ACCUs will accumulate, and it's those ACCUs that the Commonwealth is proposing could be then sold to safeguard facilities at that price starting at 75, increasing over the decade.
So hang on, let me jump in there. So if the government has already got ACCUs and then is selling them on for $75 or the CPI plus 2% going forward, is the government set to profit from the hard to abate sectors?
No,
Senator. Those
so
that are trying to reduce their emissions and purchasing these ACCUs at $75, or
No.
if the government's purchased them now, how are they not profiting from these sectors?
So two aspects to that. One is the proposed cost containment measure is intended and was in response to feedback from businesses seeking more certainty about the potential costs. So what's proposed is to give business that certainty. ACCUs will be available at that cost. And then the funding received from any sale, which, as I say, is only if needed, and then our analysis suggested there will likely be other ACCUs available at lower costs than that 75 that increased. If the government does need to sell those ACCUs, then those funds will be directed to source additional abatement to ensure Australia's targets are met.
So the government's buying ACCUs at a low price because it's locking in a contract now, and then sells it to facilities at a higher price. That's a profit.
So, Senator, it's not, what I'm talking about is contracts that have been entered into in the past. It's about, I guess, stimulating. So
they're not going to sell them for the market price. They're going to sell them for the $75. Possibly making a profit.
It's proposed to sell them from the $75 increasing, and that is to drive the incentive for on-site abatement where possible, but to provide that assurance that businesses are looking for in terms of sort of providing a price ceiling effectively.
Making a profit. So, Minister Bowen is saying that the price won't rise above $75 before 2030. Is this a reflection of what your official forecasts are?
So, Senator, it's true to say that our analysis shows that the costs of ACCUs and SMCs will be below that $75 rate that, as we've discussed, rises by CPI plus 2%.
So it will be 75 this year?
23-24 next
23-24, and then what are we whacking on all those 2% plus CPIs going through to 2030?
That's right.
Okay, so not 75.
So we'll rotate, if that's all right with you, Senator Hughes?
Yeah, okay.
Okay. Yep. Senator Payman.
Thank you, Chair. Just wondering if the department could let us know how will the annual climate change statement to Parliament hold the government to account for the ongoing effectiveness of policies like the safeguard mechanism?
Thanks, Senator. The annual statement to Parliament requires the government to explain what its policies are, and then it will go through a process of then transparently reporting on what has been achieved in terms of emissions reductions and so on by sector, including the projections, and also informed by an independent report by the Climate Change Authority, who will be providing advice on whether or not they think that the policies have delivered on the objectives that the government has set out. So all of that will be in the public domain, the independent report from the Climate Change Authority, and then the government's response to that through the annual statement. So it's providing a high degree of transparency about the progress towards the targets and whether or not the policies have been what has been driving that, or whether there are other drivers in the economy that are resulting in those outcomes.
Thank you. And could you please outline in terms of the methane measurement and accounting requirements, what has the impact been of more detailed measurement requirements to date, and what further work is planned to improve those measurements?
Thank you, Senator. So there's a variety of inputs that go into compiling Australia's estimates of emissions. One of the key data sources is the National Greenhouse and Energy Reporting Scheme Act, which requires very robust and detailed facility level emissions estimates to be undertaken by those reporters that meet the threshold. We have an obligation under our international climate change treaties, including the Paris Agreement, to continually improve and enhance our reporting. So the ANGA measurement determination and Australia's inventory is subject to that ongoing review. And over time, we have improved the reporting requirements and the methods that are used by facilities to report their emissions.
Thank you. Chair, I've got a question for the Department of Industry, Science and Resources. I guess I'll have to wait.
No, I believe they're at the table at the moment. Senator Payman, please go ahead.
Great. My question is, what are the opportunities for critical minerals in Australia, and are critical minerals processors interested in low emissions processing options and electrification in particular?
Hello, Senator. It's Chris Golding, the Acting General Manager of the Resources Strategy Branch in the Department of Industry, Science and Resources. Your question is the opportunity for Australia in critical minerals. Australia has some of the strongest resources regarding critical minerals globally, both in terms of both the diversity and the scale. We have some of the biggest reserves of a range of minerals that go into low emissions technologies like lithium, cobalt, manganese and so on. There are a range of other minerals that are not considered critical minerals but would also go into many low emissions technologies like nickel and copper and so on. So Australia has incredible resources of those, and the Australian government's currently updating our critical minerals strategy to outline how Australia will be looking to unlock the full resource endowment that we have in this area. In terms of the opportunities for those sectors to use renewable energy and clean energy, that will obviously depend on so each company will approach it in a different way. I wouldn't try to speak on behalf of all companies, but what we do see is that many companies are looking to integrate renewable energy, batteries, hydrogen and so on into their operations. Many of those are doing that because they're seeking to reduce their own emissions, but they're also doing it because they are responding to international market signals. Many of our key export markets, the European Union, United States and elsewhere, are increasingly indicating that they will seek low emissions or critical minerals produced with a low emissions footprint.
Great, thank you. My next question or line of question is to the Clean Energy Regulator. So shall I wait, Chair?
No, go right ahead. Mr. Parker's at the table.
Okay. My day, lovely. So the National Greenhouse and Energy Reporting Measurement Determination includes a range of higher order methods for estimating methane emissions from gas and coal. So how have these been used and improved over time? Can you please step us through that?
Yes, thank you, Senator. So David Parker, the Chair and CEO of the regulator. You've asked a question which goes to some very detailed material, so I'm going to pass to Shailene or to. I think Ms. Wardlaw. We'll get Jane Wardlaw to come talk to you. But yes, it does include higher order arrangements consistent with the determination which is tied into international settings set by the IPCC. So I'll pass to Jane Wardlaw.
Thank you, Senator. Jane Wardlaw from the Clean Energy Regulator. Look, under the ENGA legislation, we definitely collect data which is measured using different types of methods, sort of starting with a lower order method, method 1, which allows for the use of sort of default figures in the calculations, and then getting up to your more direct measurement methods. I think in terms of your questions, it's possibly more for the department to talk about how they're actually calculated and arrived at.
Thank you. So it's for the department to take it on.
Sure. So it's Melanie Ford here from the department. So as I said before, as part of our obligations under the international climate treaties, we keep the measurement determination under review because the ENGA data is a key input into our inventory. Each year we have an annual process whereby we review the methods that are used under the measurement determination and update it, and that's an annual process. Are there any specific areas that you'd like me to comment on?
No, I think that's about it. Back to back to Clean Energy Regulator. Just one more question before I let you go. Do you have data on the amount of methane each facility emits? And could that be published if the requirements in the Act or rules were changed?
Yes, I'll ask Ms Wardlaw to answer the question.
Thank you. Yes, look, that's absolutely data that we collect at a facility level, so it is certainly something we would be able to publish if the legislation allowed for it.
Great. Nice and easy. Thank you.
Can I just follow up there and ask you why you don't currently publish it?
It's due to the provisions that we operate under, so there are secrecy provisions that we're covered by for the data that's collected, which then allow in specific circumstances for us to disclose information, which is what we publish annually, but beyond that we're not able to without breaching our own data secrecy provisions.
Great, thank you. I will now go to Senator Pocock.
Thank you, Chair. Thank you for your time this afternoon. I'm keen just to jump in to price caps and follow up on some of the questions that Senator Hughes was asking. You talked about the Commonwealth being able to accumulate ACCUs and then them being able to step in at $75 and sell back to the market. But we've heard from aggregators and others that at about $45 an ACCU, likely all contracts will be broken and the Commonwealth will stop accumulating those ACCUs. So I'm just wondering what modelling you've done looking at as the price goes to $45. Firstly, how quickly it'll get to $45 and how many ACCUs the Commonwealth will be left holding to be able to step in at $75.
Yeah, thank you, Senator. So I suppose in terms of the time and the price, that is captured by the discussion we had earlier in terms of that, the detail of that analysis being covered by Cabinet.
All of your modelling is covered by Cabinet
in terms of, for example, what year a particular price would be hit. But what I can say is, as you're aware, in the last, in the last month or so, ACCUs were at $38 a tonne, and so so the figure I quoted before in terms of the 119.6 million is both fixed and optional contracts, and so I suppose on that. Maybe colleagues from the regulator could talk about the likelihood of people leaving fixed contracts, but certainly where, as I said, that price point of $75 increasing has been intentionally set above where we're anticipating the price of both ACCUs and SMCs to be every year, and so in that light, we're not anticipating that. That there'll be that number one, that there'll be a need to access that cost containment measure, very frequently, if at all, in those early years, and the way that, for example, the proposed baseline setting for hybrids has been set to minimise that cost and minimise the need for any offsets in those early years. This is part of the consideration there. But we're conscious that for particularly those fixed contracts, they are, obligations with government, and there's particular arrangements around those in terms of delivery. And so where our assurance of that sort of accumulation is based on those various aspects.
A couple of follow-ups, but is it your, do you believe that at 75, by the time it gets $75, it makes economic sense for all of those projects to have broken and pay a penalty fee?
So I think there's two aspects there, Senator. One is so number one, we do assume that in general contracts with government will be delivered. If there was a breaking of contracts, then presumably that would be to sell to people like Safeguard Facilities. So then that makes it less likely that those facilities will need to access the cost containment measure. And so I suppose the availability of both on-site and ACCUs and SMCs that under that cost containment measure gives us assurance that across the system, sufficient either on-site abatement or ACCUs in the form of sort of formal offsets will be available for facilities.
Sorry, I'm not following. You're saying that if a contract's broken, there's still an ACCU there, which I accept.
That's right.
But you're saying that it won't get to, you don't expect it to get to $75?
So we're not anticipating that there'll be a need to access the cost containment measure.
So why is it there?
To provide that assurance to business in terms of that price ceiling that we spoke about earlier.
Okay, but if you're not expecting it to get $75, then why have a?
Well, I think it is about going to some of the points of interest to others in the committee in terms of looking to incentivise that on-site abatement, but to provide the assurance and to provide the ability for a particular firm in a particular year to access it if it needs to, rather than to be in a non-compliant situation. And so it really is about providing that assurance to the scheme rather than an expectation it will be regularly accessed.
Okay, and how did the department come up with $75?
So that was set about, as I say, as you'd be aware, the spot price in recent weeks has been about 38, and so we undertook the analysis that was spoken about before and looked to set that cost containment measure above that in every year, so that there would be the incentive for on-site abatement, but that it did look to balance those considerations of providing that assurance.
Okay, and so just looking at the cost containment mechanism, if it gets to, say, $100 an ACCU and the government runs out of ACCUs that they hold, who pays the $25 gap?
Yeah, thank you, Senator. So that does come down to where we've really carefully thought about when or if the cost containment measure would need to be accessed. And as I say, our expectation is it wouldn't be needed in those early years. You're quite right that $75 a tonne does sort of index up to something like $100 in 2030. And so that's where we look at having analysed the potential for on-site abatement below that cost in those years to give us assurance that it would be, we're not anticipating great needs to use the cost containment measure, and then also looking at that 119.6 million tonnes of, million ACCUs that are due to be delivered to government in that period. But it's certainly an element of the design that I think will be very carefully monitored and reviewed, and you'll be aware that we are proposing a review of the scheme settings in 26-27, and I think that's a really neat time that after 2 full years of operation we'll be able to see how it is playing out in practice and really look carefully at these kind of things to monitor the practical delivery.
Thank you. It's comforting to know that you don't think it'll get there, but my question really is, as the safeguard stands, open access to ACCUs and no vintaging. If I'm a company that's internally pricing carbon at $96, I'm going to buy as much as I can. So if it gets to $100 an ACCU and the Commonwealth doesn't have ACCUs left, who pays the $25? That's
Yeah, Senator, I think
who pays the difference?
Yeah, that is a hypothetical situation that we're not anticipating will arise. As I say, there's
But
almost...
if it does the Commonwealth pay $25 to supply that ACCU?
So I think, Senator, the reality is, as Ms Johnson is saying, is we are genuinely not anticipating getting into that situation, and so we don't have an answer for that at this point. We would need to think it through. And it's at least 10 years away, we think, before we'd be even close to getting to there.
We have a safeguard mechanism that the government wants on 1 July, and we have to think through the implications of the cost containment mechanism, which is, as we've heard over the last 2 days, is like this live issue.
If I could just intervene here for a moment. I would imagine, Senator Pocock, that in doing the modelling, the idea of setting it at 75, which a lot of people have said over the last day and a half is far too high, is about setting at a price where it actually minimises the risk but does provide certainty to the industry of what it could get to at the very peak end.
Okay. Thank you, Senator Gregory. I appreciate that. Ms Johnson, what is the current carbon price in the European market?
I know it's over 100, I believe, but I'm not, there might be others at the table who have that off the top of your head. We can certainly get it. It's a figure that I see occasionally, but I'm sorry, I don't personally have it right off the top of my head. But I think over 100. But let's see if we can get back to you during these hearings on that.
Okay, so just to clarify, the EU's over 100, but the Australian one for the safeguard is unlikely to hit 75 based on all of your modelling. I just really want to get
the price. That's right, and I guess in the sense, Senator, that they're different sort of price mechanisms. So as you know, the EU ETS is quite a different sort of setup, and so they do set a price. Whereas what we're saying is provide a price ceiling assurance as part of a market-based system that has that sort of regulatory area. So I think they are two different schemes.
Okay.
Is there any chance we can get this modelling? Because I think, Senator Pocock's point, it would be kind of important for us before anyone votes on it to actually understand
Senator, I think we've responded.
some pretty key information here.
So the Minister responded in Senate estimates about this specific modelling, and we've responded in writing to Senator Hanson-Young asking the same question, and the Minister indicated that it was subject to Cabinet in confidence. You're about done, but we'll go around again.
I was making earlier.
So, yeah, I guess this is a real concern. What I'm trying to understand, having to vote on this piece of legislation, and you may say it's hypothetical, but you can't give me a good answer of if people are willing to pay $100 for an ACCU, and the Commonwealth doesn't have ACCUs.
So I think, Senator, there are a couple of aspects to that. One is there will be a private market. We do expect the safeguard mechanism to generate further ACCU supply, so that there'd be others for whom they could, if a company is willing to purchase an ACCU at $100 a tonne, then that there is sort of the private market as well as the cost containment measure.
What's your modelling show? How much is private and how much is going to be facilitated through the Commonwealth? This is exactly why we need the modelling.
So if people are offsetting on the private market, the cost containment mechanism doesn't apply.
So the cost containment measure only applies where a facility needs ACCUs and cannot source them elsewhere.
This is what I mean. So if you're a facility captured under the safeguard, you can't access the private market and claim that as a...
You can.
You can?
They can buy ACCUs from anybody. It's just that we're saying as a backstop measure, the Commonwealth, and our assessment is that we have the capacity as the Commonwealth, because of the number of ACCUs we will have accumulated by then, separate to whatever else might be available on the private market, which is absolutely expanding, that we will be able to step in and offer that price containment mechanism. Now, we are talking about a measure that hasn't started. We will learn a lot in the first couple of years. We've said we will review the mechanisms at the end of the first 2 years if we're seeing any concerns emerging that the way we currently envisage the cost containment mechanism to work if we're seeing any signs that it's not going to work the way we anticipate it. And again, we are anticipating that we will have enough ACCUs to satisfy any demand for that mechanism. But if there are any signs along the way that that is not likely to be the case, we would do the work that's required at that point to do any adjustments that's required to have that cost containment mechanism still function as the cost containment mechanism that we are putting in place. So we're confident in the design that we have, but we're also not, we can't see into the future either. And so we will, of course, adjust if the way we think it is going to work doesn't turn out to be reality. But everything we have suggests that we will have, as the government, excuse my use of the term we, the government will have purchased enough ACCUs through the contracts that are already in place, essentially, notwithstanding that some of them could release their ACCUs through the flexibility, the optional contract option. So notwithstanding all of those things, we're still currently confident that there will be enough to be able to deal with the cost containment mechanism. And as I said, there's a review point in 2 years' time into the operation of the mechanism where we will actually have data and evidence about exactly how people are behaving and how things are working out. And if it's necessary at that time, you'd reconsider the design of the cost containment mechanism to ensure it still does what it's intended to do.
Thank you. And not on modelling, but would it be...
clarify here.
Can he just, let him just finish and then we'll come to you to clarify.
What sort of it follows on?
Would it be possible to table the expected accumulation of ACCUs under your current contracts?
Yeah, I think so.
That'd be really helpful.
We'll just check with the regulator. There's no reason why we should be able to do that.
Thank you.
And Senator, can I quickly give you, so at the moment the EU price is 100.23 euros, so that equates to about 156 Australian dollars.
Thank you.
Senator Hughes, you had a follow-up.
Sorry, I'm just trying to understand.
Double the $75.
With the ACCUs, if they're not going to be, the government's not intending to really use them for cost containment because there'll be enough on the open market, and yet the government's acquired around almost 120 million. What are they going to do with them if they're not going to be selling them on the market? Are they just sitting there? And by acquiring them now, isn't the government artificially pushing up the price?
Senator, no. I mean, the 119 million that Ms Johnson's referring to...
119.6. We are closer to 120, but yeah.
So that's the amount that's currently contracted that have been there as a result of auctions conducted over the last nearly a decade, since 2015. So there are contracts in place to have that abatement delivered over time, and so that's the amount we're talking about. But the market in Australian carbon credit units is much broader than just the purchase, or can be much broader than the purchase by the government. And so you do see some projects that are starting to come online where they're not necessarily subject to a government contract, and we would expect that the onset of the safeguard, among other policies, will actually stimulate interest in projects coming online that are not reliant on the government as
That'll
the sole
generate their own
purchaser.
ACCUs.
So they'll be generating ACCUs which will be available for sale to, among other people, the safeguard facilities. But we're also seeing some demand from entities in the economy that aren't safeguard facilities as well. So there's quite a healthy market in Australian carbon credit units.
No, I understand that.
Yeah.
But so the government's acquiring and continuing to acquire more.
That's right.
And so holding their, almost 120 million of ACCUs. Yet what you're saying is that there will be a healthy market by non-safeguard facilities as well as safeguard facilities that will generate these ACCUs.
That's right.
So the government could potentially be sitting on 120 million of these doing nothing.
Well, they've contributed to our emissions
and
reduction
whilst
target.
pushing the price up, participating in the market. I mean, that's just how markets work. If you're buying stuff, you're pushing the price up. That's supply and demand.
Yeah, so the contracts that we're talking about are already in place at agreed prices, and I think.
But you're not
perhaps the
entering
regulator
into
can
new
advise.
contracts, or you are entering into new contracts.
Well,
the
there's
government.
another auction scheduled in March.
So you're acquiring more. So you continue
Yes.
to participate in pushing the market price up.
Well, the prices so far have been relatively modest under
but
the auctions. So
It's not a matter of whether the price is modest or not. It's you're participating in a market, and that moves prices.
And how long have you been participating in this market?
Since 2015.
Well, it's actually irrelevant how long they've been doing it. It's that they're going to continue to do it. I think is actually.
Well,
the
I don't know
point.
that it's irrelevant.
Well, no, but it is. That's
Purely
the
another
point.
question.
120 million.
Now, Senator
So you'll
Hughes,
make a
you were
profit
providing
from
a
the modest
follow-up
price.
to Senator Pocock's question. Are you done so we can, or do you have more on that issue?
On the 119 million,
119.6.
0.6 million, how many are optional and how many are fixed?
So I think 24.2 million are optional, and the remainder, so just under 100, so it's about 95 million, are fixed.
And so the fixed, if you want to get out of it, you pay the equivalent of the
So my regulated
supply.
colleagues might be best placed to.
So if you contract carbon at $22 a tonne, you pay a $22 penalty, is that?
So-
That's correct.
Okay, so you're at 17 minutes for your 10-minute cycle, and Senator Duniam hasn't even asked a question yet. So I'm going to move on. You can hold your questions, you can ask as many as you
I
like,
will
but we're just trying to be...
Admire Senator Duniam's office and
It's
his
not even
leather-bound books.
Indeed, but he's after me. I'd like to talk about the Chubb review. Yep. Can you just give us an update? There's been some confusion over the last day and a half about the recommendations, what's been achieved, what has been committed to, and what the kind of time span is on the other things. Are you able to walk us through the recommendations, not in lengthy detail, but in terms of just some pithy, what was committed to, what was committed to by the government, and what progress has been made? Because there's been some concern about that progress.
Sure, thanks. So it's Alana Pentany. I'm the Assistant Secretary of the Land and Climate Active Branch in the Department of Climate Change, Energy, the Environment and Water. So the independent review of the Australian carbon credit units was provided to government just before Christmas and released just after Christmas. The review found that the scheme is essentially sound and made a series of recommendations in the spirit of continuous improvement. The government, when releasing the review, committed in principle to implementing those recommendations.
All of the recommendations?
All of the recommendations of the review. There are 16, and broadly speaking, they sort of fall into three categories, I would say. There are a series of recommendations that go to the governance arrangements for the scheme, and so that includes things like establishing a new carbon abatement integrity committee with some further clarity about the requirements for members of that committee and the process for their appointment, recommendations around other functions in the scheme, so moving the purchase of Australian carbon credit units from the Clean Energy Regulator to another entity, as well as establishing a proponent-led method development process to be supported with the Carbon Abatement Integrity Committee providing assurance around those methods and sort of the functioning of that being supported by the department. There were some specific recommendations about some methods, the three methods that the review looked at in some detail, and then there were
So
also,
on those three, because those three methods have been brought up a number of times in this hearing, and can you just tell us what was recommended and where we're up to and what the intention is next?
Sure.
For those three.
So the first method is the avoided deforestation method, and the review recommended that no new projects should be registered under that method, and to achieve that, the Minister revoked the method on the 14th of February.
So that's been revoked?
That has been revoked, so no new projects can register under that method.
Thank you.
The review also made some specific recommendations around the implementation of the human-induced regeneration method. So it found that the method met the offset's integrity standards and was based on robust science, and made some specific recommendations about how it should be interpreted. And the Clean Energy Regulator has been doing some work to look at how they will implement that recommendation.
So just to be clear, that they said that that method was all right, but it needed some different interpretation. So I think
sorry,
it's
no,
important
they
we
didn't.
unpack it because there was a lot of quite robust debate about that yesterday.
To be very clear, they didn't make recommendations that it had been incorrectly interpreted. It just made it very clear what they thought the correct interpretation should be. And the Clean Energy Regulator is looking at how they can go through a process to ensure that it is being implemented in that way, and I'm sure happy to talk about that. And then...
Why would you have to clarify it if you didn't think it had been misinterpreted?
The committee made some very just clear explanations about what they thought should be confirmed, and the Clean Energy Regulator is going through a process of working out how to do that. But it might be helpful.
I wonder, no, that's fine. I think it's important that we kind of unpack where it's at. So it's, and no offence, but it just sounds a little woolly.
Sure.
You know, well, we thought maybe, and so not having any sort of direction towards you, but if we could just be a little bit specific on this one, because it has caused quite a bit of confusion.
Sure. So specifically for human-induced regeneration, the recommendations go to ensuring that the key suppressor that has caused the vegetation to not grow to forest cover, there's a clear link between that and the project activity, and that is checked by the Clean Energy Regulator. Yes, perhaps it would be helpful.
So Shailene Thompson, Executive General Manager, Clean Energy Regulator. So just to recap on the points Ms Pintony was making, the Chubb review did find that the HR method is sound, it meets the offset's integrity standards, and importantly is administered by a robust regulatory framework. And it did recommend some improvements, and I think it's fair to say they are mainly focused on looking at the evidence for implementing the method to make sure that the abatement is robust. So Ms Pintony is quite correct. We have started the administrative work to implement that Chubb recommendation, and we're developing an approach that will build on our very careful assessment of project registration and the issuance of ACCUs under the method. So what we will do is we will revisit the very extensive record keeping and evidence provided to the Clean Energy Regulator by people that are running these projects. And as Ms Pintony says, this evidence details what's known as the suppressors that are preventing the vegetation from regrowing during the baseline period before the project actually starts. So what the method says is that 10 years before the project starts, you need to have evidence of these suppressors, which are often grazing animals, stock and so forth, but can also be things like mechanical land clearing. So we'll look at that evidence provided at the point that the project's registered, and also importantly for the first offsets report. And then we will look at the evidence that's provided during the crediting period. And what we're aiming to do is to find or look for a direct line of sight between what was going on with the suppressors, the grazing animals, before the project started, and then what happens in the crediting period. So we'll be looking very carefully at the evidence that people provide to us, and the evidence is quite extensive. So these days people provide us with GIS images, they provide us with drone footage, they provide us with farm records and so forth. And we check those ourselves very carefully each time we register a project, and also before we issue ACCUs. And we have our own very sophisticated GIS tools that we use to do so. So that's the key element that we're planning to do to implement that recommendation. The Chubb review recommendation did go on to talk about being more transparent about the sort of information that would associate with that process, but that is protected information under the Act at the moment, so would need legislative change. Also, I should mention the Chubb review talked about needing to make sure that the ACCU issuance aligns with the FullCAM guidance, which is the tool, the model tool for that method. So we'll be looking carefully at that as well.
Thank you. Much appreciated.
And then finally, the review made recommendations around the landfill gas method, and it recommended that the baselines for that method be reviewed, and the department's working through a process to do the technical work to look at what those baselines should be and how you would review them in a way that sort of slopes upwards over time, which is the recommendation from Chubb. So those are the method recommendations. There were also a range of recommendations around transparency, and probably most pertinently the publication of carbon estimation areas, which I think was the subject of some discussion. So currently legislation prevents those carbon estimation areas from being published, and so we have looked at the amendments that are necessary to the legislation that would enable those or require those to be published, and we're well progressed with those amendments.
So you've already worked on the amendments to the legislation to enable those carbon estimation areas to be published?
That's correct, Senator. So, sorry, I just lost my train of thought.
No, that's right. So we already know exactly how that amendment would need to be made, and so now it's really a matter for the government to decide when to ask for that amendment to be done. Either, yep.
Great, thank you.
Excuse me, Chair. Can I just add something to that answer? So just to be very clear, at the moment the Clean Energy Regulator is unable to put the carbon estimation areas into the public domain because it's protected information under our Act. And if we were to do so, there would be very serious criminal penalties that apply. So it's not a matter at the moment under which we have discretion. It's something that absolutely does need the legislative change that Ms Evans is talking about.
Thank you for that point of clarification. It's very helpful.
So in terms of the things that we've done in the short term, the other thing that we have done immediately is to move the method development functions from the Clean Energy Regulator into the department as an administrative step, and that's to provide that separation of functions that the review recommended. So while we've been working to implement some things immediately, there are other requirements. So, for example, the establishment of the new committee and the new method development process that are much more complicated and require quite extensive consultation with stakeholders. So we are developing an implementation plan that will set out when we expect to consult on those other recommendations, and some of them will require legislation, which we would anticipate being introduced later this year.
So how extensive are those consultations?
So a number of the recommendations will have very significant impacts for a range of stakeholders. So that includes people who are currently participating in the market and people who might want to participate in the future. And so we will need to do quite detailed consultations with quite a broad range of stakeholders. So, for example, there are also recommendations around consent requirements from native title holders, and that requires consultation with people who are Indigenous people in a culturally appropriate way, and we'll need to work through that carefully. Obviously, regional communities have a strong interest in the operation of the scheme, and we'll need to make sure that we include regional communities in those consultation processes as well. So they'll be quite extensive, but we're looking to implement them as quickly as we can while going through a robust process of design.
Thank you, Ms Pentony, really appreciate it. I've gone over time, whoops. Senator Duniam.
Well, thanks, Chair. I've only got a few questions. I think we had Orica before us yesterday. And to the department, is it the case that Orica is the only company in Australia with ACCU contracts for the Commonwealth extending beyond the 30th of June 2025?
Yes, Senator, that is correct. So there's currently 6 projects that continue into the 23-24 and 24-25 financial years, but it's true to say that the 2 held by Orica are the only ones who go past that.
Okay, all right. Well, that is helpful to know. So there's a couple of other questions I might put on notice relating to that. I then wanted to ask if I could, as I jump around here a bit, of the Clean Energy Regulator, if there's been any modelling undertaken of their own around the ACCU market, and we've heard what we have from the department. I'm just wondering if there's anything further you might be able to add from your own perspective based on any modelling you might have done yourselves.
Yeah, so it's a simple and straightforward answer. No, Senator, we haven't done modelling. That's not the kind of work we do.
Okay, so we're with the modelling that's been undertaken, as I think I understood before, between DQ and the Treasury, is that right?
That's correct, Senator.
Okay, and that's the modelling that my colleagues have been asking to see, but has been clothed in that process of Cabinet response the Minister at the table gave. Is that correct?
It's correct that that's the same modelling that was covered by that response, yes.
Okay, well, Chair, I just want to, because all three of my colleagues in the room there have asked the same question, and so I might just, through you, see if when we go to the next senator who has questions, get some advice via the Secretary around what powers this committee has to deal with this issue. I'm not sure if the response Senator Hanson-Young got, and she might be able to clarify here, was a claim of public interest immunity from the Minister in response to her question or not. I'm not sure, but I'd be very keen to explore this a bit further, given it appears the majority of senators on this committee are seeking this information.
Certainly, Senator Duniam, we will consider that and give us
just
a few minutes.
Just to be clear, Senator Duniam, the department hasn't made an official claim, so if they're going to do that, they need to get on with it.
Well, perhaps, and again, with the advice of the Secretary, and I don't want to hold things up dwelling on this, but I would like to sort of bring it to some level of resolution before the end of the hearing today.
Certainly, Senator Duniam, but we won't hold proceedings up and do it now. We will continue with your questioning and we will turn our minds to it right now and come back.
Yeah, that'd be good, and including, just for the benefit of the department, to if they are going to make a public interest immunity claim, then through whatever processes they need to, I think they ought.
Absolutely. Do you have further questions?
No, thanks, Chair.
Nope. Okay. Senator Hanson-Young.
Thank you. I'd like to continue on with some questions, more questions about the offset program. I know you've answered some questions on notice today that was put to you in Senate estimates. I'm interested to know, out of these answers you've given around how many ACCUs have been contracted for delivery, both to the government, but then also those held in private ACCU holdings. We heard yesterday the Carbon Markets Institute estimated that 70% of ACCUs contracted by the government under the Emissions Reduction Fund would be freed up and made available to entities under the Safeguard Mechanism. I firstly want to know whether you broadly agree with that.
Sorry, Senator, was that 70% of the ones already contracted to government?
Yes.
No, we don't.
So what percentage do you are you proposing?
Well, so as I said, Senator, we're relying on, we note that the 119.6, as in the Senate question, are contracted. The bulk of those are within fixed contracts, and 24.2 are scheduled for under optional contracts. So we're not there's no particular figure that we're forecasting in terms of breaking those contracts, which is obviously a matter for project proponents.
So you're saying the total of 119.6 million ACCUs currently contracted will be used and made available to the entities under the Safeguard Mechanism.
This goes to the line of discussion from earlier in terms of that we do anticipate that they will feed into the cost containment measure. It is an aspect of the policy that we'll look very closely at. We do have the 26-27 review. And it's something that we will monitor very closely, and as Ms Evans said, particularly focus on in terms of that review as following sort of 2 years of operation and the accumulation from the 12th of January.
Sorry, Senator, I just want to make sure we are making one point clear, is that we would only use these ACCUs if needed. So they won't be sold to the safeguard facilities unless we get to the point where the cost containment mechanism is actually needed. And at this stage, we're not really anticipating that it will in fact be needed. So the government has always had these contracts, has had these contracts in place, in a growing way since 2015. And in the past, all of those ACCUs would simply have been held by the government and then retired as a contribution towards our emissions reduction goals overall. And so that's the amount that we're saying as a part of the design of the safeguard. There's a new ability to use those as a cost containment mechanism. But there's still other opportunities for, there are a lot of other abatement opportunities that are able to be generated through the methods that can create additional ACCUs that can also be used by safeguard facilities.
So can I get a straight and really clear answer then? On your projections, under the safeguard mechanism, including expanded projects and new entrants, how much of the abatement task will be made up through these credits?
Well, Senator, that goes right to the heart of the analysis that we've discussed in terms of what's covered by the Cabinet in confidence.
But, and again, I would point to the other material that is available, and it is in the public domain, is analysis by other people looking at exactly the same question.
Well, I've put one piece of analysis to you and you're telling me it's wrong. So this is this is precisely the point.
Well, if I just finish what I was saying, is there is other analysis out there. It is based on scenarios. Everybody, there isn't a way of knowing for sure what the answers will be here. You can only do it based on scenarios.
Okay.
There are some good scenarios out there. In some cases, they predict as much as 75% of the abatement will be done on site. And I think some of the other scenarios that are out there go to the other end of the spectrum at perhaps 25%. So it'll be somewhere in that range. None of us actually know the future.
Zero analysis.
Well, okay. So what do you expect then, or what can you, what does the government, what is the government's advice to the community, to industry, to investors, as to how much new investment or action will be taken to reduce pollution then?
So, Senator, we do think that the design of the safeguard mechanism has strong incentives for on-site abatement, and so that is, there's a price signal and a certainty for firms undertaking that on-site investment. There's the creation, as this bill proposes, of safeguard mechanism credits, which look to incentivise further abatement from within the sector that can then be traded. There's the funding from the Powering the Regions Fund will support on-site abatement. There is transparency around the use of offsets for surrender, and all of that is in the context of corporate commitments, whereby 80% of facilities are already covered by corporate net zero commitments. So we think in that package that the reforms do provide an incentive for on-site abatement within the sector.
But you can't tell me how much abatement, new abatement, will be delivered between now and 2030.
So I can give you the overall proposed abatement task is 205 megatonnes during that period.
some of the analysis that's been given to us as a committee, and you're refusing to give us the government's official modelling. So what has been presented to us in evidence is that 70% of that task of 205 is from nothing new.
I'm not sure what that means. Sorry, Senator.
Well,
It's from nothing.
no additional investment, no additional action reduced to actually cut pollution.
I'm not sure that
No.
we understand.
Well, maybe you could tell your minister that if he wants his legislation and his regulations to pass the Senate, he's going to have to cough up some more information. Because all I can see right now is that you are doing the bidding of the big coal and gas industry and not much more. Over 50% of the facilities in the safeguard mechanism are fossil fuel facilities. And I can't see any evidence that you're giving us that they're going to reduce their pollution over the next decade.
Well, will have a baseline that is reducing over time, and as we've explained, the abatement will come either from on-site emissions reductions, which I think is what you are implying where it should all come from, but the emissions reductions will either come from that on-site emissions reduction or from genuine emission reductions that are validated through the comprehensive processes that we have to look at the integrity of those offsets.
Could I ask Ms Johnson, in relation to the deemed surrender provisions, is the government going to be able to sell the ACCUs that it's acquired under these provisions for $75?
So, Senator, that is a piece of detail that's yet to be determined. As we heard before, there's currently 6 projects that continue into the next 2 financial years, of which they're generally in the range of approximately, 4 of them total about just less than 400,000, and then the 2 we spoke about earlier are in the order of 4 million tonnes. And so that's why the government is proposing only 2 more years of grandfathering deemed surrender arrangements to ensure that those ACCUs are not used twice beyond that 2-year period. And so that is an important part of our design. We have heard feedback from different stakeholders about the benefits and costs of full grandfathering and not, but really that's been part of that consideration of providing firms sufficient time to re-establish their arrangements, but to ensure that we're not looking to use those ACCUs twice.
And is 2 years from June 30, 2023?
Yeah, 2 years from, yeah, exactly. Yep, 2 years from 1 July. Yeah, effectively, June 30. Yep.
And how many of those, how many contracts then how many contracts, if you have the 2-year time frame, how many contracts does that breach or does that break?
There's no contracts broken, so 4 of them can complete their contracts with government within that period, and then so they would be able to both use those ACCUs to sell to government and use them to surrender under the safeguard mechanism. And then there are 2 projects for whom the government contracts go beyond that 2-year period, and so they're optional contracts, so there's no question of sort of a forced breakage.
Okay. Can I go to the issues in relation to the effective...
Sarah, that you're up to your 10, so if you've got another line, we might do a rotation.
Okay, sure.
Let's
do that. Yes.
Okay. Senator Hughes.
No, I'm all good.
You're all good. Senator Pocock.
Thank you, Chair. Thanks for bearing with us. Just interested to get your thoughts on the safeguard mechanism. And would you agree that the integrity of the safeguard mechanism and the decline rates and sort of real abatement really relies on the integrity of the carbon market?
Thank you, Senator. We do, as Ms Evans mentioned, the use of ACCUs we do think is an important element of the safeguard mechanism in terms of providing those options for facilities for whom on-site technology may not be available at a particular time. And as we've heard from Ms Pentony, the government has accepted the recommendations of the Chubb Review in principle and is working to implement those. So in that light, we're comfortable that a tonne of emissions sequestered or avoided in form of vacuum is the same as of a tonne of on-site abatement in a safeguard facility. So in that sense, we're comfortable that the entire system has integrity.
Great. Thank you. And so if Professor Chubb's report is saying that with these changes, we believe that the carbon market will have integrity in Australia, should we not wait until those are implemented before we proceed with the safeguard mechanism?
So, Senator, I think it's a great question, but I think we've considered that very carefully. But as we know, it is a decade in which emissions do need to reduce, and I think there would be a much steeper decline rate if there was any delay in implementing, either the 205 megatonnes could not be achieved in the period, or it would be a much steeper decline rate if there was any delay in implementation. And so for that reason, we think it's very important to proceed from 1 July.
Okay, I accept that, but I guess the question though is that we've got this model as proposed has open access to ACCUs. In putting this together, which other countries allow unlimited access to offsets?
Yeah, thank you, Senator. So from memory, Canada and also within Canada, British Columbia have no limit. And we're really conscious that when we think about the differentiation between international schemes, it really is important to think through the coverage of any particular emissions trading scheme. So, for example, they cover electricity sector, then that sort of on-site abatement within the sector, analogous to the safeguard mechanism credits in our scheme, are much easier to achieve because the coverage is broader.
That's not our scheme though. That's right.
Sorry?
It is relevant.
Yeah.
I think it is, Senator, because effectively the scheme coverage depends on whether or not, within scheme credits can be created. And so if electricity is covered, then there's lower cost abatement. Similarly, if a country doesn't have a domestic offset scheme, then effectively a restriction on the use of offsets is thinking about a restriction on the use of international offsets. And as you're aware, under Safeguard, we're not proposing to allow the use of international offsets in the initial reform. So we do think it's important to think about those different sort of contexts.
Thank you. Ms Pentony, you talked about drafting amendments to allow the release of carbon estimation areas. Is that drafting complete?
We have draft amendments, yes.
Those amendments are ready to go?
Yep.
Okay. Great, thank you. I was just, I asked a witness yesterday about this and there was, they weren't sure, so I was just keen to get your thoughts on it. In paragraph 70 of the EM, the Minister sets out the following in relation to SMCs. These amendments could also specify that if the number of these units that are surrendered exceeds 50% of the facility's baseline, each additional unit surrendered would only reduce the facility's baseline by 4/5 of a tonne. So as I understand it, the Minister can choose to discount SMCs over a certain threshold. Is there a similar power available to him to do that for ACCUs?
Yes, I'll just confirm with my colleague, Dr. Wood, but my recollection of this paragraph is it applies to all prescribed units under the mechanism, so it would apply to ACCUs or any other unit.
And that's just by a disallowable instrument?
Yes, so I'm Dr. Peter Wood, the Safeguard Mechanism Task Force. So I guess this paragraph describes, the amendments that can essentially discount a type of what's a prescribed carbon unit. And a prescribed carbon unit can basically be a safeguard mechanism credit or an ACCU. And so basically it's saying that the safeguard rules or delegated legislation can specify discounts on, and it could be whether on a whole class of units or it could be particular types of units. And what this particular paragraph's going to is that you could do things like have a discount that doesn't kick in straight away. You could specify that if a facility surrenders more than a certain amount of a certain type of unit, then a discount could then kick in for further units surrendered. So I think this goes to that the bill, I guess, is quite flexible regarding things like limits and discounts. Well, I guess the approach we're consulting on in the sort of consultation paper and the delegated legislation we've released a exposure draft of doesn't have discounts of ACCUs or SMCs for that matter.
Okay, thank you, Mr. Wood. Just to get your, I've heard a lot about the cap, $75 cap, being there to provide certainty. Does the minister being able to discount ACCUs and SMCs by regulation not provide uncertainty? I'm wondering how you think through that.
I guess this is one of the things where having things in delegated legislation provides more flexibility, especially whilst it's not as, I guess, locked in as a bill passed by Parliament, but is disallowable by Parliament. I guess part of what we're trying to do with this bill is create a sort of long-lasting framework that would work in a variety of different circumstances. And so one of the considerations with these provisions is that if down the track we wanted to let in a new type of unit, such as a type of international unit, then their powers would be there for potentially for limits or discounts to apply.
And I think, Senator, if I can add to Dr. Wood's remarks, certainly we would anticipate that any such rules would be consulted on, and so and that's where we've really looked in terms of the policy framing to set that 26-27 review as a midpoint. So we have been looking in terms of the overall design to allow for that sort of longevity, as Dr. Wood explains, but also to sort of put markers down as to when businesses might anticipate policy reviews, so that it sort of looks to balance that sense of certainty and sort of updating for any circumstances down the track.
Thank you. Mr. Wood, has the department done any modelling of potential discounting of SMCs or ACCUs?
No, Senator. So. So we've certainly heard in terms of feedback about, there has been stakeholder feedback about the use of ACCUs in particular, and so as public servants we've considered options there, but we haven't done any modelling.
But they've been considered?
I mean, we've considered feedback received and will continue to do so in terms of feedback on the use of ACCUs, for example.
Okay.
Okay, at this point, Ms Evans, I'm going to ask you to provide us in writing a public immunity claim. In our previous deliberations, both estimates and other points, the issue of Cabinet deliberative documents has been raised. This has been disputed by my colleagues. So if you could please provide that claim in writing to us, just outlining both the grounds and the harm.
Senator, thanks. I, of course, will take that away, but the claim will need to be made by the Minister, so I'll refer to them.
And just to be clear, the Minister hasn't made that claim as yet?
That's
No.
correct.
We just checked. That's why we took a bit of time. That claim has not been done.
Is the Minister intending to make that claim?
No one has spoken to the
I'd
Minister.
have to check.
I've got one quick follow-up, if we can, before we go on.
Well, the problem we face is we have a hard kind of 3:40 window with another witness, and what I'm wanting to do is suspend for a couple of minutes so people can get themselves together, ask the department to
It should be a very fast, quick question.
Sure.
Under the safeguard mechanism, are international credits going to be accepted
Not in the position paper that we've put out, there's no contemplation of international units, but certainly some of the feedback has said that that should be considered in the future, but the proposal is not to include them.
At this point.
Thank you. And at that point, we will just suspend until 3:40. The department, if you could rejoin us at 4:10, that would be excellent. It is my anticipation that we would hopefully be wrapping up at 5:10 if we were sticking to the schedule we had ordinarily. I will consult with my colleagues about how many questions and what the timeframe they believe they require to fulfil their obligations, and give you an update at 4:10. But it is my anticipation that 5:10 should be our wrap-up time. So we'll suspend until 3:40 and we'll have the department back at 4:10. Thank you. We will resume. So I'd like to welcome representatives from Woodside. If you would like to state your name and the capacity you're appearing in front of us today.
Thanks, Senator. I'm Tony Cudmer. I'm the Executive Vice President of Strategy and Climate for Woodside.
And thank you, Senator. My name is Peter Metcalfe. I'm the Vice President of Climate and Sustainability for Woodside.
Thank you very much. Look, I'll just start with a generic question and then my colleagues can each have 5 minutes each, and we'll just share the call around with a couple of key questions. It looks like you've had a very successful week, gentlemen. I wonder if you'd give us a quick update on where you're at.
Thanks, Senator. Well, first of all, we very much appreciate the committee's willingness to allow us to appear via video conference today. So we have had a big week. Yesterday was the release of our 2022 full year results. And so as part of that too, we released a number of documents, one of those which may be germane to the discussion today, which is our 2022 climate report. So we did announce a significant financial result that is the product of market conditions, the hard work of our colleagues at Woodside, and partly reflects the merger with BHP Petroleum that occurred commencing on the 1st of June last year, but also reflected too a significant tax contribution in Australia, so $2.7 billion paid in tax in 2022. I might say too, Senator, if I could, and it's remiss of me not to open with just acknowledging that we are speaking to you today from Perth on Whadjuk Noongar land. We extend our respects to elders past, present and emerging. Perhaps just the last thing I'd say, Senator, realising we don't have a lot of time, is that we do appreciate the opportunity to engage with the committee and with other stakeholders and with government on the safeguard mechanism. So we put 2 submissions in, one to the earlier consultation process in September 2022, and then one more recently as we've been working to better understand the perspective of the government through the consultation paper. Those submissions are also with the committee, as I understand it. Perhaps just to summarise, we do believe the safeguard mechanism package, as proposed by government, is ambitious, but we do believe it's achievable, and we think it's overall consistent with the delivery across the safeguard, the 215 or so facilities that fall within the safeguard mechanism, of which oil and gas are part, and there are many others, consistent with meeting the ambitions for the 43% reduction in greenhouse gas emissions by 2030 over 2005, which is the new NDC as announced by government last year. So I might leave it at that, Senator, and appreciate the time.
Thank you. I'll go to Senator Hughes.
Thank you, Chair. If I can just qualify a couple of points. Is Woodside committed to net zero by 2050?
Senator, we have an aspiration of net zero in our scope 1 and 2 net equity emissions by 2050.
Okay.
So
and you've got a 2030 target?
We have a target of 15% reduction in our net equity scope 1 and 2 emissions by 2025 and 30% by 2030.
Okay, so Woodside was able to set those targets all by itself, even if it was in consultation with customers and stakeholders.
Yeah, those targets were set. So this is the second year, effectively, Peter, of the existence of those targets. So they predate the changes to the safeguard mechanism.
So what steps has Woodside already taken to reduce carbon emissions? And does this include emissions from planned projects such as the Scarborough project?
Senator, I might perhaps ask Pigga to speak to that. So we have quite a bit of content in our new climate report on that very subject. So Peter, perhaps be worth perhaps talking through that.
Certainly, yes. And thank you, Senator, for the question. Yes. We really have 3 different ways that we can reduce our what we call our net equity scope 1 and 2 greenhouse gas emissions, those arising from our facilities. Firstly, we can, as you foreshadow, we can avoid them in design of our future facilities or facilities before they come into construction. We can also reduce them in the way we operate our facilities, and then we also have the opportunity to retire carbon credits as offsets for the residual. So those are really the 3 main levers we have at our disposal. We've spent a lot of time last year working on what we call asset decarbonisation plans, which have been facility by facility plans, which look at the opportunities we have to reduce emissions at our facility, so we can then bring those together on a portfolio level and identify the best opportunities to be pursued. And then we can prioritise those for engineering and further maturation in the business.
And so was Woodside sort of one of the first in contracting ACCUs through the forestry projects?
So I couldn't actually speak to whether we were the first, Senator. We've been working for some time, initially in response to a project we have called Pluto, which has been had a tree planting program for some time, which has been generating ACCUs. And then more recently, I think it was in 2019 or 2020, we established a carbon business, which is focused on both acquiring but also originating carbon credits of our own.
So over the past day and a half, there have been a number of witnesses to this inquiry suggesting that Woodside shouldn't be allowed to follow this as an investment strategy. If you're not able to use ACCUs to reduce emissions targets, would you still support reforms to the safeguard mechanism?
Well, look, I think, Senator, we would see offsets, certainly ACCUs, obviously, which is the specific subject of the safeguard mechanism, but offsets more generally as a legitimate part of the overall, if you like, equation as the world really grapples with reducing emissions. And in a sense, ultimately, that is at least in my view, the point of the concept of net zero. So we do see, and perhaps it is worth noting that the safeguard mechanism package as a whole, so the access to ACCUs, the various design elements, we think is sound. But we would see, I think, ACCUs as quite intrinsic to the overall efficacy of the safeguard mechanism across the 215 or so facilities. Not all of them may need them, but it seems fairly intrinsic to the overall design that they are available.
I mean, what would be your position if they weren't available to you, if ACCUs were removed as part of your contribution to this scheme?
We really haven't contemplated that scenario, Senator. We've looked at the package really as a whole. We've looked at obviously the prior existence of ACCUs and, a relatively mature concept globally in terms of offsets. And there are questions, some of them I think are examined a little bit in the government's consultation paper around the question of international offsets and the question of integrity of offsets, and that is a wider debate. But we would see ACCUs as pretty intrinsic, very intrinsic to the safeguard mechanism package. I think that would be right. That would be correct, yes.
So, I mean, ultimately, if ACCUs were not part of this, weren't available to you, you really couldn't continue to support the safeguard mechanism. You couldn't participate in it because that's become part of your planning process.
Well, we contemplate the safeguard mechanism really as it's been put forward, and that's the basis on which we've approached our submissions and how we're thinking about it. We haven't really contemplated other such scenarios. We're really looking at what's been put before us and before all stakeholders by government, and that's the basis on which we've considered our thinking and the basis on which we put our submissions in.
Yeah, so because, I mean, obviously the government has to negotiate the passage of this bill if they're able to, and depending on what they negotiate with other senators or parties, Woodside hasn't put together a plan B if there was to be changes to the way it was framed.
Well, we're working on the basis that the package as proposed is the package that's really before certainly obviously the Parliament at the moment and industry and other stakeholders. But we wouldn't be I think seeking to speculate on any considerations in the Parliament. That would be a bit outside scope for us, it seems. But certainly our overarching perspective on the safeguard mechanism package really is that we're looking at it in its totality.
Mm-hmm. All right, I'll leave it there at the moment. Thank you.
Senator Hanson-Young.
Thank you, gentlemen, for appearing today. Understand you had a pretty good day yesterday, didn't you?
Well, it was a significant day, Senator, in terms of our results, and it's a reflection of, as I mentioned before, the market and I think the good work of the people of Woodside. But it was a significant day, and so again, we appreciate the committee's willingness to speak with us today over VC as we're continuing to work through the release of all of those documents and the results, and as we do every year.
Well, I understand it must have been hard to put aside time for us when you're so busy counting your money. $9.7 billion in super profits is extraordinary. How much of that will be invested into cutting the pollution that you create?
Senator, the 9.7, I'm not clear where that comes from.
That's the US, that's the Australian figure?
Oh, okay. Through the report in US
Yes,
dollars.
I can understand,
Yeah.
6.5 billion US probably sounds a little under the 9.7 billion Australian, almost $10 billion worth of profit.
Yeah, thanks, Senator. Thanks for clarifying that. So we have a commitment, which we spoke further to in this year's climate report, around investing $5 billion in our new energy business by 2030. That's subject to the rates of return that we've also published in our capital allocation framework. There's a number of other capital projects underway, I'm sure, as you're aware, as we look at the portfolio in its totality, and underpinned by our intent to be part of and supportive of the energy transition. So, and of course, there is also the significant dividend that comes from our earnings that goes to our investors, including no doubt many Australians who might hold our shares directly or in superannuation funds, and the broader support we provide community. And then I mentioned the significant tax contribution, the 2.7 billion Australian, just to clarify too, that I mentioned previously as well.
How much will the cash injection that you've just banked assist your expansion for new developments such as Scarborough, Browse and Pluto and the Pluto LNG terminal?
So Scarborough and Pluto Train 2 are effectively part of the same package. That's been through final investment decision, and so I can get you the exact number, but I think that's a capital investment of around about $12 billion over coming years. So it is a substantial investment. It's an investment in a project that, in our view, is stands to make a meaningful contribution to energy security in Asia, and also to support decarbonisation with the role of gas, particularly as a firming fuel in our key customer countries.
Just to be clear, of course, that the International Energy Agency and even the United Nations suggests that if we're actually going to decarbonise the economy, we've got to stop expanding fossil fuels. So globally, you don't actually have policy support for an expansion. I mean, that's just basic greenwashing, isn't it?
So we have, in this, I mentioned our this year's climate report, we have a quite a detailed discussion on, I think you might be referring, certainly correct me if I'm wrong, to the International Energy Agency's net zero emissions scenario. So we talk quite a bit about that scenario in our report, as we do other International Energy Agency scenarios. I think true to say that that even under that net zero emissions scenario, the International Energy Agency does contemplate ongoing investment in oil and gas for a period of time. They also make the point under that scenario that they talk about no new oil and gas developments. That is one scenario. We're not seeking to contest it, other than to note that there are other scenarios. In fact, the IPCC has a range of scenarios. We talk in quite some depth in this year's report about how the world might evolve, recognising that I suspect sitting here today, none of us can really know exactly what the world will do. We do continue to believe, if I could say, that natural gas can play an important role in that decarbonisation.
I think the first place to start would be listening to the science, wouldn't it?
And we certainly are very clear, and again in our report we talk to the science and the very clear as to the conclusions of the IPCC in that regard. We certainly don't contest that.
So out of these expansions that you are planning, will any of them be stopped or impeded if the safeguard mechanism goes ahead?
So we have a number of projects obviously already underway that are subject to the safeguard mechanism. The Scarborough project, Pluto Train 2, we would expect would be within the scope of the safeguard mechanism. That's contemplated in all of our strategic planning.
So if this legislation passes and if the regulations are put in place, this doesn't stop business as usual at your end?
Well, I think what it does, it sends an important, I think, institutional signal on the part of the government and the nation as to the achievement of that 43% NDC that the government announced last year. So we would see, and one of the points we make in our submission is that we think that that decline curve that is contemplated in the government's modelling for the safeguard mechanism is, as I say, is significant but achievable. But also we make the point on proportionality. So we're not seeking, we don't think, certainly for us, that we're looking for we think the kind of decline curve across those facilities by and large is the right approach.
Your annual report yesterday states that you are, and I'll quote, executing a plan to secure offsets to meet Woodside's 2030 net emissions reduction targets. So how much worth of offsets are you having to secure?
Peter, perhaps you might talk to the role of offsets and
certainly
origination.
Yeah, thank you, Senator, for that question. And we have got some additional information as Mr. Cudmore has mentioned in our climate report published yesterday. And we do have three different ways of achieving emissions reductions on a net equity scope 1 and 2 emissions. Firstly, that's avoiding them in design and reducing them in the way we operate our facilities. And then where we have a residual, we can use carbon credits to offset the remainder. That information is set out in our climate report. Well, I did mention earlier, but we conducted asset decarbonisation plans this year. And so, for example, they identified opportunities at our facilities, which if implemented in full, and of course they're all subject to engineering still, but they could reduce our emissions by around 300,000 tonnes in 2030 relative to how we thought we would be going at this time last year before we'd done those asset decarbonisation plans. So that's an indication really of the ongoing study and work that we do on our facilities to make sure we're prioritising the avoidance and reduction of emissions, noting that offsets for the remainder remain a valid part of our decarbonisation strategy.
So how much of your emission reduction are you banking against offsets?
We actually don't set a formal number on it, because what we do is every year we come back and we re-establish these asset decarbonisation plans, and I say we do prioritise out designing out and operating out over offsets, with offsets being the remainder, to make sure that we can achieve the emissions reduction trajectory that we've set ourselves.
Can you
So we
tell
haven't
us?
set a fixed number.
Can you tell us how much you are going to reduce your emissions by?
We've set net equity Scope 1 and 2 greenhouse gas emissions reduction targets of 15% by 2025 and 30% by 2030, and that's below a starting base which is representative of our gross annual average over the 2016 to 20 period.
And you can't tell us how much of either the 15 or the 30% is made up of offsets?
It'll be made up of a variety of...
Is the majority offsets?
I don't think it would be. We might be slightly in the majority at the moment. It really depends on a number of variables, Senator, including what happens to our underlying production over those periods, and which further asset decarbonisation opportunities we're able to identify.
I know I'm going to have to move on. I just want to know, of these, do they include ACCUs, or are they made up of voluntary units?
Thank you, Senator. That's a very pertinent question. Again, we do have information in the climate report about that. We have Carbon Business, so I'm actually correct myself, we established it in 2018, and that has been both originating carbon offsets, carbon credits, and that's primarily ACCUs from nature in Australia, but also we do acquire credits on voluntary international markets, and so we use both of those and retire both of those in order to meet our both our regulatory commitments as required and corporate targets.
Could I ask you to give us on notice the list of where you secure offsets on the international market and who from?
Yes, and I can tell you that we have actually published in the climate report the carbon credits that were retired in respect of both last year's climate report and this year's credits, and they are all from the Verra and Gold Standard organisations.
We could certainly provide that, Senator.
Thank you, Chair.
Senator Pocock.
Thank you, Chair. Afternoon. Thank you for your time. I understand in 2021 that you priced carbon internally at US $80 per tonne. I was interested what you currently price it at.
$80 a tonne, Senator, is still the number. Yeah.
Great. Thank you. So that 80 US, okay, 100. I'm interested in how you estimate your methane intensity, gas loss to venting, leaks, flaring, as compared to your gas produced, and what that percentage is.
So, Peter, yes, I can. You go ahead. Yeah. Thank you, Senator. And again, a very pertinent question, because, of course, methane is second only to carbon dioxide as a contributor to global warming to date, and because of its near-term potential, does offer one of the best opportunities to limit global warming. In terms of what we do, if I can take the question in a couple of sections, we estimate in accordance and report in accordance with the regulatory standards in the jurisdiction which we're operating in, which for most of our emissions is Australia's national greenhouse and energy reporting system, but also we have assets in the United States, for example, and they have a greenhouse gas reporting program as well. But we are increasingly supplementing our calculation of methane emissions through those reporting standards with measurements and studies on our facilities. So, for example, this year, again, we've put some case studies into our climate report that we published yesterday. We've undertaken a number of measurement studies at our facilities, including, for example, using drone-based technologies and flare monitoring. And that gives us the opportunity to build a more comprehensive inventory of our methane emissions, which both verifies the calculation, but also helps us to identify and prioritise opportunities to reduce any emissions that we do identify.
Thank you. I was after the percentage.
We estimated around about 0.1% of production.
Sorry, that it just broke up a little bit. 1%.
0.1%.
0.1%.
Around 0.1%.
Great. So sort of world leading in terms of fugitive emissions. That's right up there.
comparative purposes, there's an organisation called the Oil and Gas Climate Initiative, which is, has a target of well below 0.2 by 2025, and so we're currently around about 1 mark. That's not to say we don't think there's room for further activity, and we've actually signed up this year to the OGCI's aiming for zero emissions, methane emissions initiative.
So would you have a problem if 0.2% was incorporated into the safeguard mechanism, and then potentially having a penalty payment like we've seen in the US for anything over that? It wouldn't affect you.
It's not a particular measure that we've contemplated, Senator, so we might take the specific detail on notice, other than to say that methane emissions do factor in our decarbonisation plan. So we convert methane into carbon dioxide equivalent for the purposes of our dispense safeguard mechanism, as well as our corporate targets.
Okay, it's double what you're reporting, but I'm happy for you to take it on notice. Just interested, looking at Scope 1 emissions, how many of your facilities have on-site measurements currently?
Of methane, Senator, or of carbon dioxide emissions?
Both, if you want to. I guess, yeah.
We report our emissions in accordance with the regulatory standards of the National Greenhouse and Energy Reporting System. So if perhaps we could take the question on notice, and we could provide a short briefing note on exactly how that is calculated.
Okay, thank you. And do you have plans to go towards a sort of bottom-up and top-down approach to get a much more complete picture? And if so, do you have a timeline for when all of your sites will have that in place?
Yes, we are working on bottom-up and top-down inventory management. This is for methane, just to be clear there. And we are aiming to have a comprehensive data set in place along with the plan to reduce methane emissions this year. But we are also, as you will have seen, we've merged during the course of last year with BHP as petroleum business. And so we're also in the business at the moment of extending our asset decarbonisation across those assets. And that's an ongoing work that we're progressing at the moment.
And do you agree under the safeguard mechanism, excuse me, the need for transparency around this, for people to be able to see facility by facility what the fugitive emissions are, what ACCUs are being used, what SMCs are being used, just having a level of transparency that allows people to be confident?
I'm not entirely sure I understand the question by distinction to the way we currently do national greenhouse gas energy reporting, which is on a facility basis. And we also, as Woodside, have participated in the Woodside's CERT, which is the Corporate Emissions Reduction Reporting Tool. So we have availed ourselves of the transparency mechanisms that are available in this area. If there's specific other proposals, I think, again, we would need to take those on notice for consideration.
Would you be happy with annual disclosures of how many SMCs and ACCUs you hold and the source of those ACCUs?
Again, I probably would have to take.
Yeah, I mean, it's an interesting question, Senator. I would be more than happy to look at that and come back with some thinking on that. I think, as Peter said, we currently report under NGES. We have our data in our climate report externally assured. As to the question of SMCs and ACCUs and how they could be further disclosed on an annual basis, we'd be very happy to have a look at it.
Okay, thank you. And just finally, I'm interested in how Woodside is preparing for the fact that methane performance will increasingly be a factor in the global gas trade.
Well, perhaps I can, just to summarise some of the information that's in our plan report, but we absolutely see the importance of methane. Perhaps to give an example of that, we use the 20-year warming potential for methane emissions, which applies a multiple of 84 to the long-term cost of carbon that we talked about earlier, the $80. And that's to make sure we're giving appropriate priority and focus to methane in the near term. We have also, as I mentioned, signed up to the Oil and Gas Climate Initiative's Striving for Zero Methane Emissions Initiative, and we're working on these measurement studies, some of which really are pioneering and we believe Australian first technologies. So absolutely have identified and would support the prioritisation being given to methane emissions reduction.
Thank you. Thank you, Chair.
Great. Thank you very much. Thank you, gentlemen, for joining us. We'll let you go. And I'll call the department back to the table. Welcome back to the Department of Climate Change, Energy, the Environment and Water, and the Department of Industry, Science and Resources, and the Clean Energy Regulator, and the Department of Infrastructure, Transport, Regional Development, Communication and the Arts. Excellent. Thanks very much, everyone. And we will go straight to questions from Senator Hanson-Young.
Thank you. On the topic of offsets, I'm interested in relation to the Chubb review that it was proposed, and I'll quote, a scheme level buffer could be implemented, and this is in relation to the conversations about the HIR method, mandatory cancellation of a percentage of ACCUs generated under the scheme. This would ensure that abatement credited was appropriately conservative across the scheme portfolio. I'm just wondering where the department is up to with that recommendation.
Thanks. So that was a recommendation that a review be done by the Climate Change Authority about about the scheme level buffer. And there are already buffers for sequestration projects under the scheme, and we're just working through how we would do that. Obviously, the options, the Climate Change Authority does regular reviews of the ACCU scheme, and so it's potentially could be incorporated into one of those, or alternatively the Minister could seek a specific review.
Okay. How many of the ACCUs, I mean, I've got the answer that you've given us on notice around the different methodologies and the ACCUs that the government currently holds. And out of all of the different methods, the one that has the highest amount is the human-induced regeneration methodology. It's out of them all, that's the highest. What happens if indeed their value is cut?
Sorry, Senator, as in if the Climate Change Authority recommends a scheme-wide buffer, well, I imagine that recommendation would include some considerations about how you'd implement it. So it's sort of.
But have you factored that in to, we're told that the Commonwealth holds 109.6 million ACCUs, yes?
119.
119, sorry, yes.
And those are under contract, so we don't actually hold that volume at the moment. They are being delivered under those contracts over the period of time up till 2030.
So on this question on notice that you've given us, number 1365, so maybe we can just all look at the same page and then we'll be clear.
Yep, that's.
On the second page, the table 1, ACCU holdings by method, and you can see under vegetation that the human-induced regeneration is the highest, yes?
Yes, so just to clarify, Senator, those are the holdings that are in ANRU accounts at the moment. Those aren't related to the contracts that are managed by the Commonwealth.
Okay, so tell me how much does the Commonwealth hold?
So it's not possible to predict what the ACCUs that will be delivered to government under forward contracts, what methods they'll come from. They're not tied to a particular method.
And has the government not got a view on whether human-induced regeneration is a method that you'll accept going forward?
Yes. Sorry, so the findings of the CHUB review were that that method meets the offset's integrity standards and is being administered through a robust scheme, so we would expect to continue to accept those
For how long?
credits. Well,
Indefinitely,
yeah.
Senator. There's been no question raised by the independent review about those.
But you
actions.
have scrapped the other method, haven't you?
We've revoked the avoided deforestation method based on the recommendation from the CHUB review, but that's a recommendation that was made about new projects registering under that method. It did not make findings about the projects that are already registered under the method.
So how many that are registered under the method does the Australian government have contracts for?
I might refer to the Clean Energy Regulator because they manage the contracts, but as I said, the contracts aren't tied to particular methods.
Yes, but you must know.
So Senator, the point that Ms. Pettigny made is correct. So the fixed delivery contracts, they have a provision whereby people providing the ACCUs to the regulator under contract are able to source those ACCUs from their own holdings, which can be from a range of methods. They can source them from the private market. So there's no requirement under the fixed delivery contracts for them to come from any particular method, which is why we're unable to tell you what our expectation is as to what ACCUs from which method would be delivered under the fixed delivery contracts.
Don't you think you need to do something about ensuring that you've got a better sense of the integrity of these credits, if indeed you want people to believe that they're real, given all of the questions? Even just for the sake of, trust in government.
So, Senator, we have, in addition to all of the sort of detailed compliance and other activities that the CER conducts, the CHUB review has really done a comprehensive look at the integrity of the abatement units and the offset units that are being used, and we accept that on the basis of the recommendations that there isn't any issue about the ACCUs that are already in circulation out of that method or any of the other methods for that matter, and that going forward, so the issue with this particular method that you're talking about, I think, so I'm just going to get the name of it correct.
The avoided deforestation method.
Thank you. Avoided deforestation method is that it was anchored to a particular point in time, and the view is that from now on it's no longer appropriate for those type of projects to start, but there's no question, there was no integrity question raised over the issuance of those ACCUs to the projects that occurred over the last however long they've been happening since that method was first established. So the majority of those projects were established within a couple of years.
That's right, within 2
methods.
years.
And so they're not in question because at that time, the reason for the revocation of the method is because so much time has passed since the land clearing permits were issued. And at the time that those original projects were granted the status of being able to generate ACCUs, it was very contemporary with when they had land clearing permits, so it was quite a valid way of proving that you were not going to go ahead with that land clearing, and so the integrity is fine. Yeah.
Just to add to that point, the Chubb review recommended a new avoided deforestation method, which is broader than the one which has been revoked because it was particularly tied to a range of old clearing permits and only in New South Wales.
Mm-hmm.
So they have not raised broader concerns about avoided deforestation as a method.
Are you confident enough that the human-induced regeneration method's integrity, are you confident enough in their integrity that you would share the carbon estimation areas of the projects that you oversee?
So, Senator, if I can, on behalf of the Clean Energy Regulator, this is the information that you've heard previously. They are not allowed
Is that
to
because
do that.
it's purely because of the identifying elements? Is there any way you can share it with the committee without the identifying elements?
So there is a broad prohibition in the legislation which prevents us disclosing so-called protected information, and that is effectively information provided by project proponents and other participants in schemes.
So
and there are criminal sanctions.
Mr. Parker, can I ask, do you think that those provisions should be amended so that we can have a more transparent
that was a
understanding?
recommendation of the Chubb review, and I have said so publicly previously that I think it would be desirable to change that law to allow that information to be put into the public domain. The reason for that is that that law is a significant constraint on transparency. And if you have a look at the Chubb review, you will see that one element in that, where it goes to the issue about the disagreement that's been in place about the integrity of ACCUs, has been the lack of transparency and the difficulty that analysts outside of the CER have had in actually looking at the detailed project activities which take place on the carbon estimation areas, not the broader so-called project areas. And so those who have been looking at this from the outside have effectively had to work to sort of create analogues, if you like, without access to that information. And so I would be delighted when the legislation is passed to release the information.
I understand that legislation itself doesn't actually override parliamentary privilege unless it's explicit. It's not explicit, is it?
So are you asking, Senator, whether, I'm sorry, this is of several layers, are you asking whether if the committee were to ask us to provide the carbon estimation areas to you, that we would be able to do so?
Yes.
Is that what you're asking?
That's what I'm asking.
Yeah. So I would have absolutely no substantive difficulties with that. I'm in favour of the release of this information. I'm happy to take the question on notice because I would like to tie off the legalities of the issue. I'm not a legal expert in all of these matters. Obviously, I don't have the information in front of me now, so we'd have to take that question
I
on
would like
notice.
to ask on notice that those documents and that information is given to this committee, as I understand that as parliamentary privilege that oversees, that overrides the constraints in the legislation. So I don't see why you shouldn't be able to hand it over.
Well, I'll take that on notice. We have been already doing some work on the release of this information. It is a very large data set, Senator, and it's a data set that changes from time to time when projects first report. I hesitate to say that we could provide you with documents, but to the extent
Yep.
we're able to, we can provide you with data files and so forth.
Yes, okay, thank you. I would appreciate that. I think the whole committee would. Ms Evans, is the government planning on an amendment to the Act to overcome this issue going forward?
Yes, Senator, they are. That was one of the Chubb recommendations, which has been accepted by the government, and we've already said earlier that we already have it drafted.
You're drafting
ready
it,
to
right?
go.
Sorry, okay, I missed that. That was in response to Senator Pocock. Could I ask what the timeline is for the update of the landfill method?
Senator, we don't have a specific time at the moment. We need to work through what that process is, and I suppose it also has an interaction with the establishment of a new carbon abatement integrity committee that we'll need to consult with stakeholders on and legislate. So we're working through what that process would look like, including how we'd consult with stakeholders on it, but we don't have a specific time frame at the moment.
Mm-hmm.
Again, if I could just add a clarification point there. So the Chubb review did not say that it thought that the landfill gas method, as it is, had substantial problems with it. The transparency issues apply in the same way. As I understand it, what they said is that going forward, it would be reasonable for crediting extensions to have increasing baselines in them, in consequence to the likelihood of state governments tightening the regulation on permissible emissions from landfill arrangements. So this is, of course, is not a matter for us anymore. It's a matter for the department. But I thought that context is sort of quite useful in terms of it's a going forward point.
Yes, I understand. Thank you. I just want to ask, this is the last kind of section, if that's okay, Chair. I want to ask about the implementation of the PEPA review in fracking in the Northern Territory, in the Beetaloo Basin. Mr Ritchie, his update from May last year said for recommendation 9.8, and that is no increase in life cycle emissions from fracking to be implemented, the Territory must have the support of the Commonwealth Government to make necessary legislative policy changes. Then in November last year, he said the Commonwealth have agreed to, quote, work with the Territory to support its implementation of recommendation 9.8 using available technologies and policies. These details of how this will be done are still being worked out. I'm wondering if I can have an update, what's happening on that front.
Senator, so that commitment was made as part of the former government's state deal with the Northern Territory on emissions reduction and energy, and in that there was a commitment to work with the Northern Territory government to make sure that the policies and frameworks that are in place support their objectives on Beetaloo. So we'll continue to do that, and some of the things that have happened since then include, the Chubb review of ACCUs to make sure that the offsets that they might use in that context have integrity. Introduction of the safeguard mechanism is another policy lever that has happened since that time, and the broader range of Powering Australia commitments, including 82% renewables. So all of that framework, and including the net zero by 2050 commitment, support the Northern Territory in their endeavours to make sure that there's no net increase in emissions as a result of Beetaloo. So we'll continue to work with them to make sure that all of the policies are working together to make sure that overall there's no net increase in emissions.
And what is the expectation of how many ACCUs would be needed to ensure that happens?
That's really a matter for the Northern Territory government.
But you must have factored this in, because the Beetaloo is one of the expanded projects that would have to be captured by the safeguard mechanism, surely.
Do you have anything specific?
I don't have anything specific, Senator, other than to say that's right. Beetaloo would be a new entrant and therefore would be subject to both the best practice benchmarks as well as the 4.9% decline rate.
In relation to Woodside, who we've just had with us briefly, what is the Commonwealth's expectation of the increase in gross emissions that Woodside's expanded projects would have?
So, Senator, I can't give you project level specifics today. I'm happy to take on notice and see what I can provide you. And as I said previously, I'm happy to provide you the aggregate, both projected emissions without reforms and projected baselines with reforms from new entrants. So, yeah, apologies, I don't have Woodside specific data with me.
Mm-hmm.
Senator Duniam, do you have any further questions?
No, I don't, Chair.
Lovely. Senator Pocock?
Thank you, Chair. Ms Johnson, earlier you said that Canada was the other country with open access to ACCUs, but in one of the submissions to this hearing, it showed that Canada caps offset use at 75%, and then I just had a quick look in the break, and they do cap at 75%.
Right, apologies, Senator. That was the information that we as a department had looked into and found that Canada has no limit on the use of ACCUs, so apologies, I'll take that away and have a look at those sources.
Canada and Kazakhstan.
Are there any other countries other than Canada that have open access to offsets?
So it is obviously a jurisdiction within Canada, but my information was British Columbia also has no limit.
So countries.
Understand. So that was where we do think it's important to think about the scope of the coverage of a system and also the whether or not a country has a domestic offset system are important elements.
So as you understand it, there is no other country in the world that has open access to
Senator,
carbon offsets.
As I said earlier, our understanding was Canada did have no limit.
They don't.
It sounds like that's you've done. So I'd have to look at your source of information, but we have no other examples of countries.
Okay.
Senator, just regarding Canada, my understanding is I guess Canada has a number of emissions trading type schemes in its provinces, and one of those is, I think, British Columbia, and my understanding is British Columbia doesn't have a limit, and Alberta also has a scheme where it has a limit of 60% that it is increasing to 90%. I also understand that Canada sort of has a sort of like backstop carbon price that only applies in states that that don't have an equivalent scheme, like presumably British Columbia or Alberta, so what I'll have to take on notice whether that has any limits.
Thank you. To something that was discussed earlier was on-site abatement, and that clearly not all abatement needs to come at the site level with the safeguard mechanism. But I'm interested in your position on a mitigation hierarchy. This has been raised by many experts and is well captured in the Oxford offsetting principles established by the Oxford University. Do you accept the benefit of a mitigation hierarchy?
Yeah, I think, Senator, you're getting at the question, and which is we've heard it too in the consultations around, should you first look at reducing your own emissions directly and then look at offsetting? And so we would be expecting every effort to be being made on reducing emissions directly before going to offsetting. But at the point where there is a cost trade-off, then it's a legitimate choice to look for alternatives to continuing to reduce on site. So I think we do effectively engage with that hierarchy and also encourage people to make those direct emissions reductions as a first order of business,
So
and
at-
then after that look at alternatives.
Okay. So as it stands in the safeguard mechanism, you would like companies to, but there's no, they don't have to do that. It's
That's right. There's nothing in the way we have designed the scheme at the moment that would force them to do that. But everything that we have been hearing through the consultations and from the work that we have done suggests that they will look to reduce on-site emissions reductions as much as they can. So they will look to reduce their emissions as much as they can before they turn to offsetting.
Okay. So your expectation is that for-profit companies will not just take the least cost option, that they will actually look to mitigate on-site if it's more expensive?
Well,
Or
these
just
are
in the
going
case
to
where
be
it's cheaper
decisions for
than
themselves, but, and Ms Johnson might be able to talk more about what she's been hearing through the consultations, but certainly it's not as simple as just the dollar price. It's about long-term transition plans. It's about their existing commitments to stakeholders, to their shareholders, to get to their net zero commitments in many cases, and so on. So there's more to this for each of these companies than just a straight dollar comparison.
Okay.
And including the certainty provided from doing projects on site, because they're then able to, manage those abatement themselves rather than, as we were discussing before, having to source offsets through the market.
Except they have that $75 cap certainty.
Well, that's intended to provide, as I said, price certainty above, and every year it's intended to be set above the cost of either on-site abatement. So that's right. So it's a backstop, but we do think that on-site abatement projects provide the best certainty for facilities over the long term.
Okay, thank you. I've got some questions about the Powering the Regions Fund and the Emissions Reduction Fund. Are these two funds completely separate?
I think the answer to that is yes. So the Emissions Reduction Fund was from the previous government, and it was the original allocation of $2 billion thereabouts for the purposes of purchasing abatement under contracts. And it's still used, that terminology is still in the enabling legislation and so on, but actually the funding for that has essentially been allocated already. And Powering the Regions has taken the funding that was there from too many fund names, but the Climate Solutions Fund, which was also an allocation of additional funding by the previous government, and Powering the Regions has taken all of that remaining uncontracted funding and redirected it into Powering the Regions.
Okay.
So it is quite separate.
Okay. Is there any proposal to move money from the ERF into the Powering the Regions Fund?
Perhaps the regulator can clarify for me whether there is anything left in Emissions Reduction Fund per se.
So thank you. So the original allocation, I believe, was 1.45 billion, and that funding has been committed or expensed. We did start to move towards committing funds that were under what was then called the Carbon Solutions Fund, which was another 2 billion. So I think we expensed about 60 million of that in the last auction. So the two together, and my colleagues helping me, the two together combined to 2.45 billion. It should be noted, though, that the Carbon Solutions Fund actually had a number of calls on it, not just funding for the ERF auctions, which is the way we do the purchasing.
Okay. Thank you.
If I can Senator, just to clarify, the original allocation was 2.45 billion.
Oh, was it? Sorry, my
Yeah,
apologies.
not 1.45, and
Thank
then
you.
the Climate Solutions Fund was an additional 2, but it had some other claims put on it as well.
Thank you very much. Sorry, there's a lot of funds.
of
Just one more.
Sorry, Senator Pocock, if I can just add one other clarification, because I think it might be useful, is that to the extent that, so the reason that money is already allocated is because it's already attached to the contracts, so which are still being managed. To the extent that any of that money is freed up because for some reason or another the project no longer goes on, then that funding would become part of Powering the Regions.
Okay, so then it would actually go to Powering the Regions.
It would.
And if contracts are broken, where does that penalty price go? Where does that money go? Is that general revenue, or does it go into?
It goes back. Sorry, it goes back to consolidated revenue.
Okay. Has there been a proposal to put that into one of these other funds rather than into consolidated revenue?
Look, that would be an option for the government to consider.
Is it something that the Minister has requested that you look at?
We've looked at that.
You have? Oh, is it a recommendation you've made to the Minister?
Senator, you're going to asking me for what my policy advice is to the Minister, which I think Chair is...
Is that not allowed? You can't ask if they've recommended something to a Minister. My apologies.
You can ask them facts. You can ask...
Could the $600 million Safeguard transformation stream of the Powering the Regions Fund be used to purchase ACCUs?
That's not the proposed use. No, it's proposed for projects to reduce on-site abatement, that particular element of the 1.9 billion.
Is that would ACCUs fall outside the scope of what it
They would fall
could,
outside the
so it
scope
can't.
of that $600 million
It
allocation.
cannot be used for that?
No.
Okay, thank you. In the International Energy Agency's report released last week, titled Driving Down Coal Mine Methane Emissions, it notes that under the Safeguard mechanism, detailed reports are published for individual facilities that annually emit more than 100,000 tonnes of CO2 equivalent of Scope 1 emissions. Would you agree with that claim?
In the sense that Safeguard facilities as part of NGAs do have reporting arrangements, yes, I agree. Yep.
Thank you. And what would you say detailed reports being published would entail?
So Ms Wardle or others in the regulator might be best placed to talk to the sort of current NGA reporting arrangements.
So Ms Wardle can help us with that.
Thank you. Yes, I'm trying to understand, is detailed reports being published publicly, or do we get to see those reports?
So at the moment, we're collecting data under the NGA legislation, which tells us the total amount of emissions per Safeguard facility. And into the future, we'll include the production, which is how we calculate the production-adjusted baselines. I guess, Edwina, under some of the proposals, there's additional information in applications that we'll receive that, again, so we can publish it, provided that the legislation is written in a way to allow us to.
So are those reports published publicly?
So there's a range of public data.
Yeah, so the data that we receive at the moment, we publish facility totals annually, and that information is publicly available.
Okay. Do those public reports include any breakdown of emissions by greenhouse gas type?
No, so currently they don't. We
not.
just do total covered emissions per Safeguard facility. And I think it went to a question earlier. We have the information available at a more granular level. We don't publish it currently, but we could if the legislation is extended to allow us to go to that level of data disclosure.
Would you consider that detailed?
Well, it certainly would be publishing additional detail.
Would you consider what you currently publish, given that you aggregate greenhouse gas types? Would you say that's detailed, or?
I guess, look, at the moment, it's the detail that is required of us, and it's also the detail that gives some transparency about the facilities that are covered by the Safeguard emission and what their position is relative to their baseline.
Thank you. I'm interested what the nature of your involvement in preparing that report was. You know, did the International Energy Agency request copies of legislation, or did they ask for what is included in these reports? Was there any involvement there?
I think this is probably going more to the preparation of
Sure.
the inventory, so the ENGA data, which the safeguard data is a part of, feeds into that.
Thank you, Senator. So I'd have to check the detail, but we have provided feedback to the IEA on a number of reports on occasion, so it is possible that we did provide input or a review of that report.
Okay. Do you know if you said to them that you published detailed data?
I'd have to take that on notice.
Okay.
Yeah.
Thank you.
Yeah.
Thank you. That would be helpful. How many of time, Chair?
It's just you.
Okay, great.
However,
can I just finish on? Can we just finish on this price cap, cost containment mechanism? Because you know, as a senator who needs to vote on this legislation, I really want to understand the implications of this. And I understand you're saying that it's modelling. Well, I guess I'm assuming that the modelling that you've provided to the minister, which you can't.
Senator Pocock, I'm going to pull you up there because we've already dealt with this matter and the department is taking it away to consider and maybe bring us back a PII claim. So we are in their hands on that one.
Okay. I'm just, my question is related, but not to do with that exact thing. So I understand that you haven't thought through what happens because you don't believe that it'll happen. I guess listening over the last 2 days, the Minerals Council said that they expect significant supply pressure. Green Collar said that they didn't think that there potentially wouldn't be enough supply. INPEX said that they thought that ACCUs could quite possibly get to $75 and beyond. So I'm wondering, in consultation, did people make that known, that they thought that it could go beyond that, and so it needed a price to keep it below?
I'm sorry, Senator, I'm just not sure that final part of exactly what the question. So you're asking, have we heard in consultation the importance of a cost-contained measure?
I'm interested. You've talked a lot about the safeguard mechanism reforms being based on consultation and the need for certainty and a cost containment mechanism. So I'm interested in that consultation. If, given we've heard over the last 2 days that there are a number of groups that think it'll get to or beyond $75, whether that did come up in consultation where people were throwing numbers around and saying, oh, we think it could potentially get to $100.
Yeah, that's right, Senator. So I guess I would just confirm that in the original policy options scoped by the government in August and September, it wasn't proposed to include a cost containment measure, but that was feedback we received from businesses and corporate entities such as the MCA that it was important to include such a thing in the design. So I think it's very much the case that the proposed inclusion of a cost containment measure is directly in response to the feedback we received through those consultations. And then in terms of the settings, I mean, it does go, we do hear various feedback from different entities about where to set that. And I think, as you've summarised, different parties in the overall ACCU and safeguard framework will have different views on that in terms of the likely driving of additional new ACCU projects, where firms are calculating the price to be. But and without wishing, so as you know, consultation formally closed on Friday, and so we are still working through the written feedback. So I guess my comments are just about the verbal conversations I've had for the last 7 weeks. There have been some questions, but I wouldn't say there was sort of in any way sort of significant, certainly there hasn't been evidence presented that that's not the right point at which to set it.
So no stakeholders put a price to you that was above $75?
Senator, if I can clarify, I think what Ms Johnson is explaining is it's almost because there was feedback earlier on that there was the potential for the price to go higher, that you needed the cost containment mechanism.
I understand that. I guess the thing I'm asking is that in these consultations that you've based the design off, were there stakeholders who gave you a price that they thought it could get to or would get to?
The cost containment mechanism?
No, the ACCU price. That was above $75.
I mean, it's hard to say, Senator, in terms of all the conversations I'd had over, many months now. I would say there certainly hasn't been sort of any. I couldn't say comprehensively. Nobody has said to me it would be higher, but I wouldn't say there was any sort of. As I say, if I can go back to the evidence provided through consultations, we've received nothing that makes us question the setting of that. Setting at $75 increasing.
Okay, thank you. So you can't recall any conversations where a stakeholder thought the ACCU price would be above $75?
I'm not saying specifically none have happened. I guess I'm just saying
so
on
some
balance.
have happened, or I'm really interested. I'm not trying to.
So I think it's fair to say I can't recall a specific conversation where someone said to me it will definitely exceed the cost containment measure. But that's to say, I speak to multiple stakeholders.
I understand that. I understand that.
And as we said, we're still going through the written consultations, which have only just sort of closed on Friday. So we'll certainly be looking in there if there is anything along the lines of what you're asking about.
Has the department drafted any amendments to the current proposed legislation based on feedback?
So in terms of Safeguard, it's a little early, Senator, so as Ms Evans said, we are just working through the written feedback and will then provide advice to government and then sort of consider what legislative or rule amendments would be required based on government decision.
And I think in terms of the specific bill that's before the Parliament, these are design issues that are more going to be reflected in the rule. Like the bill, as Dr Wood was explaining earlier, is actually intended to be the framework, and then the rule itself is where the scheme, all those details will be.
And just a point of clarity as well. This inquiry is just about the bill, but we've allowed it to be much broader and to capture these other elements because of the level of concern expressed. But this is technically, the inquiry is technically about the bill. So we're going way beyond that. And I think once we start falling off the edge of that, we get to a point where there's not a lot we can do about it.
Thank you. I guess as a new parliamentarian, it's frankly shocking how much stuff is delegated ledge. So I'm keen to.
You should get yourself on the scrutiny of delegated. You are.
On there
it's a lot of fun. I've been there before.
Yes, with Senator Scarr and others, and we have a good time. Thank you so much. I really appreciate your time. Thank you, Chair.
Thank you. Thank you very much, everybody. Do appreciate your time and your patience. As noted earlier, the committee is due to report to the Senate.
If I can just interrupt, just to one clarification in case it was misunderstood.
Sure.
We did talk earlier about some amendments that we've been drafting in response to the Chubb review. And it would be up to the government if they wanted to put those in as amendments as part of the consequential effects of this bill. That would be possible. I just wanted to make sure that was clear.
Thank you.
The committee is due to report to the Senate on the 6th of March. So we've set midday the 2nd of March as the deadline for answers to any questions on notice arising from today's hearings. The Secretariat will endeavour to send you an early transcript of your evidence, but hopefully you have noted down any questions that you've taken given the short turnaround time. I would like to thank all the witnesses who've given evidence to the committee, and thanks to Hansard and Broadcasting. We will hear back from the department regarding any PII claim tomorrow. Fantastic. Thank you so much.